ho, it's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Hola, Vanetta. Hola, Tom.
Hola.
How are you? How is Mom? How's New York? Let's hear it.
Well, first I went to New York on Friday for this event, and it was very nice. They did a good job.
Don't worry. Nick and I did a wonderful job. We got great feedback. Actually, a lot of people were hoping that you'd still be in New York on Monday, but I will save that for after you're done with your Monday story.
Well, I'll be on the road Thursday and Friday, so you'll have the opportunity to do it all over again. We're going to be back in New York this week. I'll be there Thursday for a bunch of shows, and then Friday for a big show.
But New York was header you're doing.
New York was fine. I didn't know any other speakers except for Dr. J was there. And
wait, Dr. Julius Irving, the basketball player?
No.
Oh.
Dr. J the trader. Different Dr. J.
I got his jersey hung up over here, Dr. J.
It's like that seems like that's trademark infringement.
Yeah, well, what are you gonna do?
You sue him?
He spells it D-R-J-A-Y.
So anyway, we but there were a bunch of interesting speakers, and it was a nice event. There was a lot of people, so it was good. And then
where was it?
It was in New York on the west side, 42nd Street, west side 42nd Street, down by the West Side Drive, at an event center. It was nice, good spot.
Okay.
A place I'd never heard of before, but something we could definitely use in the future.
Sweet.
Easy to get to, and then I caught a flight, went up to Maine for the weekend. It was nice. Had some fried clams by the ocean in Cape Elizabeth. Delicious.
Wait, what is the name of your favorite place? Ray's or what's the place called? Ken's. Sorry, my bad.
I didn't make it to Ken's this time because we went to a different place on the ocean, on the ocean, and it was nice too. It was good, not as good as Ken's, but really good. And had the old fried clam plate, and then a great dinner in Portland.
Are the leaves starting to change yet in Maine, or is it too early? No, not yet.
Too early.
Okay.
New England's probably like another maybe 3-4 weeks away.
Okay, well, you got your foliage update right here from Tom.
Yet you're going for foliage weekend soon, right? With under 3 weeks.
2 weeks. Yes.
So you like to go before the leaves change, avoid the crowd?
Yes, Tony, avoid the crowd.
So now you owe me a black and white cookie and a whoopie pie.
Okay, so let me tell you.
Desk when I get in tomorrow.
I didn't have a chance. I didn't have a chance to get any black and white cookies, but I did. Okay, this is a true story, but you're not going to believe me. You can ask my mom for confirmation. So there was a place I went to that had unbelievable whoopie pies, but the line, because they also sold, food, the line was like way too long. So I couldn't, I missed my opportunity. So then I went to another place and they had homemade whoopie pies. So I bought one, but they didn't have a box to put it in. So I had them wrap it up, and I figured, okay, I'm going to freeze it. And then because then I'll put it in my bag, my backpack coming home, and I'll give it to you. Okay. So I froze it. And somehow I slammed the freezer door on the whoopie pie, smashed it, and it was ruined.
And then you had to eat them.
And then it flew up into the air, and then it landed in your mouth, and then you had to eat it.
Otherwise, it would have been dirty if it hit the floor. I had to make a split-second decision, so I chewed it. Is that what happened? Is that what you're saying happened, Tom?
That's the most cockamamie whoopie pie story I've ever heard.
It is a little cockamamie, so I threw it out because I didn't want it getting all over my backpack.
Well, it's the thought that counts. I I guess. I don't
Yeah.
know.
The thought to the story he made, you mean?
It was a true story. I just I did my best. That's the best I could do.
I don't know.
They didn't sell any.
Something
They didn't sell
sus.
any in the airport. They didn't have any.
That's okay.
I could have brought you a lobster. That's the best I could have bought in the airport.
Ooh, I wouldn't be mad at a lobster.
I mean, a live lobster.
Oh no, not live.
Okay.
Well, then I would keep it as a pet.
No, you got to hear him sizzle when you cook them.
Oh no.
Yeah. So that's it. And then last night we were back, did the first call with the boys, and that's it. Thank God I missed the Bears game.
Oh my God, Sosnoff.
I was flying home during the Bears game. Very happy that I missed it.
I want to be a gentleman here on our football bet for the season in the Bears here. Give me a number you're comfortable with. I'll accept it.
Oh, you'll let him out? That's very kind of you.
I don't want to ruin a 40-year relationship on this stupid Bears bet. Go ahead, Sosnoff. I'll entertain anything.
I'm so confident. I'll probably double it.
Okay.
I said probably. That's the key word.
Well, I know trader, ex-floor trader, man of your word. So we doubled it. All right.
I said I'll probably double it. I just want to see what happens.
Got it.
Look, if someone had told me at this point in the season the Bears and the Chiefs would have the same record, I would have thought it would be going a different way.
All I can tell you is the Chiefs are a way better team than the Bears. Way better.
Are they? It's hard to watch them both.
No, they should have won that game yesterday. They just one error.
Well, they need to make their kicks for one, but
one error. But it was a good game. That was a good game.
So Bears are last in their division.
And Minnesota absolutely stinks. But the only saving grace was that I did the show with Vecchio last night. He's a Jet fan, and they're 0-2 too.
Yeah, isn't Justin Fields like he's in concussion protocol now or something?
Yeah, he threw for like 5 yards yesterday.
Yeah. He came out brilliantly last week, and now it's done. It's a flash in the pan.
Yeah.
Well, the door's wide open, so we'll see what happens. I guess it's just it's sad.
It's a race to the bottom for Arch Manning for the rest of the league.
Yeah.
And I don't even know if he's that good.
Oh, I didn't watch him. He didn't do well.
No, he did okay this weekend. He played against a crappy team, but he did good.
Oh, okay.
But Notre Dame lost in what was a great game on Saturday.
Yeah, but they're still ranked in the AP. So how does that work?
Because they've lost 2 games to really good teams. That kid on Texas A&M, that quarterback, that kid's a stud.
Didn't watch that game.
You didn't watch the Notre Dame game? It was great.
No. I was had a hockey weekend. Didn't watch too much football.
It was
on
like
Saturday.
40. It was like 41-40, and
Notre Dame lost, didn't they? I think
they lost.
They did. They are also 0-2.
Right,
but it was a great game.
Not if you're a Notre Dame fan.
No. No.
Well, Matt, how was your weekend? How was the sauna? How many sauna trips do you have?
About 4. Sauna's
Wow.
as they say in another country. Yes, sauna's doing good. About 150 to 180 degrees. Sosnoff, come on in there with me. It's beautiful.
Are you drinking enough water though? Do you feel the health bit? Like you got to make sure you're hydrated.
Yes. Well, one day I was hungover, so that helped. Hockey season's here, so it's.
I don't want to see the mad dash. I don't want to see the naked dash from the sauna to the house. Like
I'll show you the ring camera.
Outside.
I'll show you the ring camera with the dongle. I'll show it to you.
I mean, I don't know how this is going to work, but the neighbors are going to be grossed out. Everybody.
It's not the neighbors. I face a park. It's the kids in the park that are going to be grossed out. That's going to be the problem.
Oh, the kids in the park. Okay.
Yeah.
No, we're going to need to shut that down.
1-2-1 to start the season with the first tournament. Sosnoff. The kids played good. They only lost by 1 goal every game.
Wait, did you say 1-2-1?
Yeah.
Oh.
Yeah. We weren't in the running for anything, but they played nice.
Is he playing? Is he playing?
Yeah. 3rd, 4th line. He's playing. But they,
Good.
you got some juniors and seniors on the team. He's only a freshman. Sorry. Yeah, freshman, sophomore freshman. I always get it wrong. Second season. That's all I got.
Oh, hockey. Okay, well that's it. You guys don't care what I did, so
What'd you do?
you don't care.
I care. You were out on your bike this weekend. If you weren't, you missed a nice weekend.
No, it was nice. I did get to ride yesterday, so that was very nice.
I knew it.
It would be nice if I could go somewhere, but no, I'm here all the time.
Hey, side note, my peeps want to know, who do you think the Bears will draft with the #1 pick next year?
Your peeps are idiots. We're probably
People are so mad at Ryan Poles online.
we're probably going to be 15-2.
Wow, that's optimistic.
A little optimistic, but I'm looking at 15-2.
I admire your delusional abilities. It's nice. I think that's.
I'm thinking 15 and maybe 14-3. I don't know.
So wait, did you get to eat anything in New York?
No, unfortunately, no.
You didn't have any food in New York City.
No. I wasn't near any restaurants. This place was kind of like, no.
It was in the middle of nowhere?
Yeah, no.
But it's in New York City. Okay.
Yeah, there's 25,000 restaurants in New York, and I read somewhere there's 25,000 restaurants, which is insane, in all the boroughs. And no, there was nothing near.
Oh, wait. New York is now counting the boroughs as part of the city?
No, as part of the 25,000 restaurants.
Ah, gotcha.
So if you want to count all the restaurants, 25,000. I think in Manhattan it's 7,000.
Wow.
Not near this place. So no, did not get a chance to stop.
Did you see? I don't have it for news because I forgot to put it in, but that's fine. But they opened a Van Leeuwen ice cream parlor in Wicker Park on Friday, and a Chicago specialty. They have Malort ice cream.
That sounds disgusting.
That can't be good.
That sounds truly disgusting.
They have other flavors, but if you're from Chicago, if you know, you know. Every Chicagoan's had Malort at least once, and then once is enough.
Yeah, Malort's disgusting.
Tastes like
it's got like a bourbon raisin nut, kind of ice cream. Malort is.
I've only tried it once.
Yeah, that's enough. Again, as I said, it's enough. Once is enough for most people.
Yeah.
Some people genuinely like it.
No.
We worry about those people, but
I loved the Anthony Rizzo highlights, by the way. Those were amazing.
Yeah, that's true. This last game, he retired as a Cub, so he was just hanging out in the bleachers. He almost caught a ball.
Yeah, he almost did. Yeah.
It was amazing that he missed it. And I thought his comment was, well, that's why I retired. I can't catch the ball anymore.
Yeah.
But I also liked those guys singing the 7th inning stretch from the bleachers. I've never seen that before.
Yeah, with our girl out there too, and Eddie Vedder.
Wasn't it from the Wiener Circle?
No. It was Eddie Vedder and.
It was Eddie Vedder and what's the Super?
I thought Poochie was out there.
No, it was Cindy Crawford.
Yeah, there you go.
Oh.
I remember that from a.
It was Cindy Crawford along with Eddie Vedder and Rizzo singing 7th inning stretch from the bleachers. It was great.
That's pretty iconic.
It was great.
And the Cubs are still in it. They can win a wild card spot, so it's not over.
They're not. There's nobody even close to them. They're a lock almost.
Okay. Well, I didn't want to. They
have like the 3rd best record in baseball.
Okay. Well, then if that were true, then they would have clinched and not needed a wild card spot, but pop off.
Right.
No, the problem is Milwaukee has the best record.
Sure.
But the Cubs have, I think, the third best record in baseball. So no.
Did you see? I guess Bob Uecker had written a letter to the Brewers that was only to be read if they had made it to the playoffs, and then they read it, and then everyone cried.
I did not see that.
Oh, you would cry. It was nice.
And
I'm
I missed
sure
it.
it was.
I also
It was.
missed the Terry Crawford fight with
Canelo.
Canelo.
Camilo Alvarez. Yeah, that looked like
It went the distance, but it was Crawford won easily.
Did you watch it, Pat?
I didn't watch it. I heard it was great.
Yeah, I caught like the last 5 or 7 rounds.
Did you see Angel Reese showed up and she just like towers over Crawford?
She's like 2 feet taller than him.
And I was like, I wonder if he wants uppies.
She's absolutely huge compared to him. Unbelievable.
Yeah, she's a stunningly tall woman.
She really is. He's small. He's short.
Yeah, he's a short king.
Yeah.
It was just funny.
Even Canelo, by the way, even Canelo said, if you watch any of the interviews, he's like, I didn't have the answers.
Yeah.
They asked him, like, what did Crawford do that, was it his power? Was it his speed? Was it his movement? He goes, it was all of it. He goes, I didn't, some days your body just doesn't have it. He goes, I didn't have the answer. I mean, he was a true champion in his loss.
Yeah, Terry Crawford, he's been around for a while. He's an Omaha kid. Grew up with playing basketball with Victor. He's got a great story that one time, Victor was going to the hoop and he fouled him really hard. And
Victor got a little mouthy.
Victor got a little mouthy, got in his face, and he goes, I wouldn't do that. He goes, you better watch yourself. And then one of his friends pulled him aside and said, don't go there. Yeah.
That's funny.
Yeah.
Yeah.
Yeah,
that never happened in your J League.
No, usually Jews don't do a lot of boxing.
Not anymore.
Yeah.
Not since you were the press group.
That's funny.
Jewish boxing used to be all the rage back in the day. Did you know that?
No.
Yeah. Oh, yeah. Many from the 20s and 30s were all Jewish boxers.
Okay, well, thank you for that. But I don't know how to segue out of it. We got a good show for you today. It's a magnificent Monday here. Tasty Live, whether you've won the Golden Gloves or not. At the top of the 8 o'clock hour, we got an options jive for you. Kai, the general, coming in with his research corner. He provides a weekly outlook for how he anticipates things are going to move this week. Then at 8:40, we have the Skinny on Options abstract application. Dr. Jim in the house. Hilbert's Hotel, the Infinity Paradox. I don't think there's a paradox that Dr. Jim has ever met that he doesn't like. But have you heard of Hilbert's Hotel?
No.
Okay, I didn't. Is that like the Hotel California? I don't know what's happening.
I don't know.
Once you check in, you can never leave.
Dr.
Is that the
Dr. Jim has some very interesting paradoxes, that's for sure.
Okay. Is it paradoxes? Is that the plural of paradox? Okay.
I don't know.
Okay. Then 9 o'clock, we have a market measures. What to do when a strike is breached? Close all watertight doors. What happens if your strike is breached? We're going to break it down at 9 o'clock. And then at around 9:20, talking with Tom and Tony. Tom and Bat are taking your calls. So if you have questions, we maybe have answers, but we'd love to hear from you. That's going to be at around 9:20 or so. Give the boys a call. That's going to be great.
Love to hear from you. Love to hear from you.
And in between time, Liz and Jenny are in Germany, so that's very exciting.
They are. They're going to broadcast from Germany tomorrow.
Yeah, I was really trying to get the nod to go on that trip, but it did not work out for me. I could be their translator. But anyway, I hope they're having the best time. They were wearing festive outfits last week, but like Bat said, they'd be broadcasting there. But because they are traveling and doing stuff today, we have Rising Stars headed your way at 10 a.m. So if you missed our last couple of Rising Stars, including a 16-year-old who used his pizza money to invest in the stock market, then you don't want to miss that. But hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story.
today's
Breaking
headlines.
news.
Breaking
Coming
news.
across the wire. Our leading story. Top story. Just in.
In today's headlines,
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It's September the 15th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
There's not earnings, are there, Mr. Bat?
There are no earnings. IWM has a dividend. That could be the only thing that people would want to look at.
Oh, okay. Look out for that.
Yep.
Hey, the Fed's first rate cut in 9 months could happen this week, but it could also derail the stock market rally. U.S. stocks typically post strong gains after the Fed resumes interest rate cuts. But what do you think is going to happen this time?
That's a $64,000 question that nobody knows. It's not going to matter, in my opinion.
So S&P's delivered positive returns in the last 12 months following such rate cuts for 8 of the last 10 cycles, with an average gain of nearly 11%.
I mean, if you just took a random period over the same number of years, you probably have the exact same results.
But you don't know for sure.
I'm just saying, if you just did the same study and just did without the rate cuts and just picked a random 10 years, you'd probably have the exact same results.
Well, what are you anticipating happens this week? Nostradamus.
I think
Nostradamus.
I think there's a chance they do the 50 basis point cut just to get out of the way, pull the Band-Aid off type thing. I think the market will react negatively if they do 50 and positively if they do 25. But I also think the market, this is going to be a very, the expected move for this week is virtually like nothing. I think it's like 55 or 60 points.
Okay.
It's the smallest like triple witching expected move. Vecchio was talking about it last night. I think that this stuff will start to heat up after Friday morning's opening. That's when it starts to get, I mean, Tony and I will be doing a show in New York on Friday morning, so it should be fun, but that's the triple witching opening. Let's see what happens after that.
Yeah, to the 19th, you got about a $65 expected move,
which is pretty minuscule.
Mm-hmm.
Well, the big banks like Morgan Stanley and Deutsche Bank expect 3 U.S. interest rate cuts this year. You think we're going to get that many? Like, it's already the middle of September.
Well, I said I think they're going to do 50. I think there's 50 to 75 basis points this year in the rate cut. I mean, that's already priced in the market, though.
Yeah, that's what the market's expecting.
That's already priced into the short-term paper. Like, it's not going to move the bonds.
Sure. All right.
It's not going to move. It's not going to move any of the notes.
Well, my other headline says stock market's relentless rally threatens to turn into a melt up. The S&P 500 is trading around 10% above its 200-day moving average. I know you love moving averages, but are the overall conditions suggesting that we may be moving towards melt up mode?
First of all, whatever idiot wrote this, it's just so dumb. Like, you couldn't predict a crash and you can't predict a melt up, so it doesn't matter.
Okay. Well, what would you like to see for the rest of September if you could draw it up?
Well, what would you want?
I'd like to see a little more action, a little more two-sided action. I'd like to see actually a pullback of about 5% that would make things more interesting for the rest of the year.
Okay. How about for you, Bat?
You know what? More of the same. Why do we have to upset this apple cart? Just keep it the way it is. Everything seems to be just fine. Let's just keep it going. Everybody seems to be happy.
What are you guys doing in your index position? So I know IWM has dividends today, but what are you doing in the SPY, the NASDAQ, whatever?
Directional delta in either one of those. IWM has a 13 Ivy rank.
Ugh, gross.
Yeah.
Hey, gold keeps hitting record after record. Is it time to think about selling? I just wanted to talk about gold, so just deal with the headline. But let's talk about metals.
Gold is down about $8 and change, small right now.
Gotta buy those dips. Tom?
I don't have a gold position on right now, to be fair. So I'm not I'm just not thinking about it I would rather be short it than long it here. That's for sure.
Okay.
But I don't have a position on right now.
What about silver?
I don't have a position on there either. Again, I'd rather be short silver than long it here, but I don't have a position.
Okay. Do with that as you will.
I'm
Hey,
a little bit short GDX, and it hurts.
the U.S. Department of Agriculture projects a record U.S. corn crop. That's right, the most harvested acres since 1933. Is that your senior year, Tom? U.S. farmers are going to reap a record corn crop this autumn, eclipsing the previous record set 2 years ago by nearly 1.5 billion bushels. That's a bunch of bushels. That's the largest acreage in 92 years, the USDA said Friday. That's crazy.
Yeah.
Talk about the softs.
Corn is, honestly, it's just gone sideways for so long.
Corn's gone sideways for a time, although it has caught a bid last couple of days. It is down 4 cents this morning. Wheat is on its butt, and soybeans, on the other hand, are closer to its highs, but still relatively low.
I've been trading corn, wheat, and soybeans delta neutral for the longest period of time. And all I can tell you is, man, if you make money in there, you're a good trader.
You are a commodity god.
If you can make, let me just take a look real quick. I'm just trying to see corn because I have
Corn, wheat, and soybean have actually have decent IVR relative to the rest of the market, but you're right, they are low monthly implied volatility.
So I've been trading corn the entire year, every cycle, and I am literally unchanged. And all I've been short is premium, no direction. And then if you go over to soybeans, let's see these soybeans unchanged, and wheat up small. So the only one that we've made money in this year is wheat.
What?
Corn, wheat, and soybeans. I've traded all three of them delta neutral the entire year. And corn and soybeans, I'm even in. Wheat, we're up money.
Good job, Butchie.
Hey, I'm just saying, I mean, the Ivy rank's been high. It's just been hard to make money in corn.
No, I get it. I feel that. That's
and
very
I'm not
frustrating.
even
Just
taking
burning.
any directional. I'm trying to stay slightly long it. That's all. Just a few deltas long.
That's a few deltas. Hey, I know you were busy Friday, but I didn't know if you were able to keep your eye on Gemini. The Winklevi crypto exchange popped more than 14% in its NASDAQ debut. The exchange operator raised $425 million in their IPO offering. Stock opened at $37.01. IPO was priced at $28. Shares traded as high as $45.89. And then they ended up closing, I think, around $32.
Yeah. Where it looks like it's quoted right now, but maybe up $1.50 this morning. So, yeah.
I am.
Yeah, values the exchange, I think, at around $4 billion, maybe.
I would not touch this stock with your money.
Well, you would not get very far with my money, honey.
I'm just saying, this is another one of these stocks like bullish Gemini. I mean, you got to be out of your freaking mind to buy these stocks here.
I mean, but it's something like you want stuff to trade. Like, nothing will make you happy.
This is true. This is true.
So, Bat, what's it doing this morning? GEMI.
Yeah, it looks like it's up about $1 or $1.50, $2.
Okay.
Something like that.
$34.
So if you want to get in under yesterday's opening price of 37, as you quoted, you could certainly do that. Seems like right. Well, you could do it right now if you wanted to.
Tether has revealed a USAT stablecoin. They have also appointed Bo Hines, a former White House advisor, to lead the U.S. business. Tether, the issuer of the largest stablecoin, has launched a new token for business and institutions dubbed USAT. Right, let's talk stablecoins, I guess. I don't know, Circle, Tether.
I'm not sure what
Bitcoin.
I'm not sure
any
what,
of the cryptos.
I'm not sure what USAT means.
I don't either. I was hoping that you would.
But it's a wonderful acronym.
Yes.
Yeah. I don't know what your question is here.
No, what are you just doing in digital assets as a whole to start the week?
Nothing.
Okay.
I mean, we're always long them, right? I mean, it's just a matter of how much.
We're always long them. Yeah.
Yeah. See. Well, speaking of IPOs, ticket reseller StubHub's IPO is 20 times oversubscribed, according to a source. The outsized demand for the IPO, which is set to price shares on Tuesday, reflects pent-up investor appetite for tech-heavy consumer platforms. Are you surprised, yay or nay?
I mean, I'm surprised given that StubHub. I don't know what you guys think about StubHub. I hate StubHub.
I mean, they're all. I mean, all ticket brokerages are not great.
I don't like any of the ticket brokerage. I agree with you. The one I've been using lately is SeatGeek because they put everything in the same number, so you don't have to you don't have to.
Yeah, but sweetie, I think that's the law. Like, I think that's an FTC law.
No,
I think
StubHub doesn't do it.
Okay, well,
StubHub doesn't do it.
Wrong. Okay.
But SeatGeek does. I don't use a lot of these, but I've found SeatGeek to be better than StubHub personally.
When you're looking for more Dua Lipa tickets?
Yes.
That's so sick and wrong.
What? Where's the lie?
No lie.
No, the last time I used it was for I wanted to buy Bears parking.
Oh, I gotcha.
Hey, I just looked at something, Sadnop. I don't know if you saw this. The MESP just rallied for a second. They got up to 6,666, which is 6,000 handles above that line that I drew.
I don't think that they touched 666, did they?
I mean, I've been doing this a long time, Tom. I mean, I've been a quote boy for quite some time.
Okay, because I was trying to watch it because I didn't see him trade there.
Well, evidently you're not watching it attentively enough. So if I say, I don't know if you saw this, enough, they just jumped up to 6,666, which is 6,000 handles above the lows where I drew my line back in the day. Then, back in 87, you should know.
Okay, well, if that's it, then that's the high.
Thank you. Just wanted to know.
666 to 6,066.
Yep.
Dude, that's bonkers. You guys never thought you would see these levels?
Are these Z's? Are you doing Z's? Yeah, Z's, right? Yeah.
I'm doing the most active month, Sosnov, because that's the one that I trade. Which one do you trade?
Well, I haven't rolled yet. I'm going to roll today because I was away on Friday.
About time you start getting in with the program.
Let's see. I got to roll right now. Roll your boat. Are these rolls trading for $47, $57?
I haven't checked that, but I can right now. If you look here, Sadaf, a good way of seeing this, yes, that would be right. The front month is trading 66.62, and the back month is 66.05. So yes, that would give you your $57, as you said, right?
57. Looks like 57.30.
Semantics. De minimis.
Hey, OpenAI's spending spree is powering the tech industry. Oracle is just the latest winner. Oracle's historic stock surge last week was fueled by a massive backlog, which is largely due to a deal with OpenAI. A week earlier, Broadcom shares soared after the company announced that it was doing a $10 billion custom chip deal that analysts said was with OpenAI. As we start the week, are you looking at any of these tech stocks with kind of a side eye after the massive moves last week? Like any opportunity in Oracle this week or Broadcom or anything?
Well, first of all, I wouldn't call Oracle an opportunity last week. It was a disaster.
Okay, I'm so sorry.
She means after the earnings is what.
Yeah, I mean, I don't think we've, as long as I've been trading, I don't think I've ever seen a stock move 4 standard deviations up on earnings and then 2 standard deviations lower by the end of the week. Like that is
that's good perspective. That's crazy.
that's the first time I've ever seen a move like that. It dropped $50 off its high, and it rallied $100 off its low and $50 off its high. I don't think I've seen that kind of movement on a stock like Oracle like ever.
And Ivy rank is 54. Markets are a little bit wide in there too. AVGO, on the other hand, Ivy rank of 12. AVGO looks unchanged, maybe down $1, and Oracle looks up around 7.
Anyway, I thought trading Oracle was really difficult. I pretty much got out on Thursday.
Yeah, a few days after the earnings. You only had a couple of dollars left to make. You were inverted.
Yeah.
Okay.
Yep.
I was just curious if there was anything left, so just be careful, I guess. Microsoft has been able to sidestep a hefty EU fine by unbundling their Teams. The European Commission last year accused Microsoft of breaching competition rules by bundling its Teams and Office products. In May, the U.S. tech giant committed to make versions of its Office 365 and Microsoft 365 software suites available without Teams. The EU agreed to accept Microsoft's commitment and said they are now legally binding under its antitrust rules. I think Microsoft down maybe $4.50 this morning.
You are 100% correct. Trading around $505. Ivy rank only 11 in Netflix.
I wish Microsoft would unbundle all of their products and stop torturing me. I hate Microsoft. What are you doing in Microsoft?
I don't have a position.
Okay.
It's so nice you had to say it twice. I don't have a position.
Yeah, and also, how are you not on Teams? How did you get to not have to be on Teams?
Yeah, who do you have pictures of?
I have Teams. I refuse to log. I hate Teams.
Okay, yeah, I do too, but we have to use it.
I guess we don't.
I don't have to. I don't know why.
You're a special snowflake. Okay.
I'm a special snowflake. I can't stand Teams.
Hey, Google is being sued by Rolling Stone publisher Penske Media over their AI overview summaries. Penske's argument says that by showing an AI-generated summary of an article, let's say from a Rolling Stone magazine, at the top of the page, users have little incentive to click through to read the full article. That results in dwindling traffic finding its way to the publisher's platforms, which it needs to monetize the content. So Penske says that because of Google doing this AI overview stuff, it is materially harmed their bottom line and their business.
It's a pretty solid argument.
I don't hate it.
I'm not sure what the workaround is, but it's a pretty solid argument.
Yeah, I don't know either. But also, good luck suing Google. I mean, it's got to be a pretty big company to take on Google. What are you doing?
$4. They're not scared. Can't hurt me.
What are you doing in Google this morning?
I'm slightly short Google.
Oh, okay.
Not loving it this morning.
Yep.
Hey, good news for health enthusiasts. The FDA has cleared Apple to roll out a hypertension detection feature on some of its smartwatches. The company unveiled a blood pressure monitor in its latest Apple Watch 11 at the September 9th event, where it also introduced a refreshed lineup. But Apple said the new hypertension notification would be available for Apple Watch Series 9, 10, which I have, 11, and the Premium Ultra 2 and Ultra 3 models. Tom, do you know what your blood pressure is?
No,
I'm going to say no.
I for sure don't want it on my watch.
But I think that's helpful, though.
I mean, maybe.
Like during the show, my blood pressure spikes because I have to deal with you.
That's right.
How is Apple doing post their big event last week?
It's kind of been a take under for Apple, although it did catch a bid yesterday and it is up 3 this morning. So the last 2 days it's been up. The prior 4 days it had been down. So it's clawing its way back. Apple IV rank of 15.
Keith Rabois, Open Doors' new chairman of the board, says the company he co-founded needs to slash their workforce by 85% to fix its cost structure. Girl. That's a lot. He said there's 1,400 employees at Open Door. I don't know what most of them do. We don't need more than 200 of them. This guy went to the Tom Sosnoff School of Management.
Uh-huh. Sure did. What do you think about Open Door, Sosnoff, going to 200?
Yeah.
Open trading 9.50 and change, up 50 cents after being in early July it was around $1.
In breaking news, President Trump this implied implied that a TikTok deal has been reached with China. I have the story in here. The deadline is set for September 17th, but the U.S. is meeting with Chinese leaders in Spain. That's a confusing sentence. But according to the crawl at the top of CNBC, apparently a deal has been reached, but we don't get to know the details yet. They're top secret, very special details. We will find out maybe at the end of this week. But that does affect stocks like Meta.
Doing anything in Meta, Sosnoff?
No.
752 down around $3. Kind of a mixed bag of tricks here on these NASDAQ stocks, with the NASDAQ catching a small bid up 35. Talking about the futures.
Yeah. Tom would be very sad if TikTok went away. So
The TikTok is not going away.
okay, well, I'm just reporting the news. Hey, striking defense workers reject a Boeing contract offer. The union representing striking Boeing workers said Friday that the members voted against Boeing's latest contract offer. The tentative 5-year agreement was revealed last week. Workers have been on strike for, I think, around like 6 weeks or so. More than 3,000 workers in the St. Louis area will remain on strike. So Boeing not going anywhere.
Maybe that's why we flew that 35-year-old plane, Sosnoff, 2 weeks ago or so.
These are the mechanical worker, but yeah, still, whatever. Yes,
Whatever.
they're on strike.
Going up around $1, 217. But you're right. Over the last 2 weeks or so, it has slid from almost 240 down to around 215. It sits at 217. Get yourself some Boeing.
The FAA said they are launching a pilot program to speed up the rollout of air taxis. Archer Aviation and Joby Aviation, major players in the eVTOL space, say they are participating. Joby, you can trade, and Archer, you can trade. ACHR and JOBY.
ACHR up around 50 cents, but it is a $9 stock. And Joby, which sounds like get a job. What was it? JOB?
Why?
Did I type it in wrong? Oh, no, there it goes. Yes. I just got to, when you type something in, all you have to do is click enter after that. If you don't click enter, nothing happens. A little public service announcement there. Joby up 75 cents, $14.75, off of its highs of almost $20, well off its lows of around $7.
Tom, would you take one of these air taxis?
Is there a pilot?
No.
No.
Yeah, but you would take a Waymo now, which doesn't have a driver, right?
Yeah, I feel safer on the ground.
Yeah,
First
but
of all,
if it could get you to LaGuardia in like 10 minutes, like this is a good idea.
I mean,
You were pressed for time this week to get to LaGuardia.
listen. I would consider it, but I have to have that with me because I'm.
Oh, is your emotional support?
Oh! You just want my legacy to be the guy that nobody remembers who died in the Joby with Tom Sosnoff. That's
Exactly.
what you want.
Yikes.
Wow.
Hey, the internet is in a frenzy over a Home Depot Halloween decoration, but it is not a 200-foot skeleton. It is spooky season, and Home Depot has a hit on their hands. Their Homer bucket, the bright orange buckets, has gotten a refresh for Halloween, sporting Home Depot's logo featuring jack-o'-lanterns, bats, ghosts, spiders, and spider web. Now, the Halloween buckets are in hot demand, with some stores selling out.
Why?
Because it's cute. Oh, why do you hate everything? Because it's a sturdy candy bucket. It's better than like a pillow sack. Like you could really fill this up.
A sturdy candy bucket? That thing looks like it's a garbage pail.
Okay, I'm so sorry. They don't have a Louis Vuitton one for you, my lord.
Oh, they'll find one. They'll find one.
I know. Wow. I thought you would like this, but I was wrong.
I want a Birkin bag.
You were such a diva. Okay, well, keeping it moving, then Barnes & Noble is announcing they're opening 30 more stores before the end of 2025. After more than 15 years of declining store numbers, the bookseller is going to open 60 new locations in 2025. 30 of them are coming before the end of the year. That's crazy.
Beth, can you cut out that I want a Birkin bag? I think I'm going to need that for social media.
But good job, Barnes & Noble, for
When was the last time you were ever in a
back.
bookstore, Sosnoff?
Good job. The state of Massachusetts has filed a lawsuit in state court against Kalshi, alleging the predictions platform offers sports gambling without a license under the guise of event contracts. In a brief filed with the Suffolk County Superior Court, Massachusetts argues Kalshi is making more money on sports wagers than legal licensed sports books.
What do you think about that?
First of all, I don't consider it the same kind of sports gambling because these are binary. But again, I think it's I think the fees at Kalshi are way too high. And so I think the customers are being price gouged.
Oh, okay. Well, this is the first lawsuit, and I mean, Massachusetts is a pretty big state, so we will see what happens with this. Finally today, for my viral video of the day, I don't know if you caught this, watching some college football, but my favorite thing in sports is when a defensive play is made and the big guy has to rumble to the end zone for a touchdown. This happened during the USC Purdue game, and it's just one of the just all-time great sports clips. Watch this. USC player, I think he weighs 340 pounds.
Brown, heavy pressure, hit as he throws, it's intercepted. Picked off by Jamal Jarrett, the big guy, rumbling his way. He's going to take it all the way for a touchdown, USC.
Watch the celly, though.
360 pounds, lumbering 70 yards for the touchdown.
I'm sorry, 360 pounds.
It's good, but it's not as good as the classic. You know,
I mean, but this is a new generation. It's pretty good, though. You gotta start doing that dance in the lunch line, Tom.
If Dick quotes at 360, he's over 360. I'm gonna give him.
But
the
who was it? Was it Washington? Who was on the Bears that time?
Oh, Trailer, maybe?
Trailer. Was it Keith Trailer?
Yeah, I think so.
Yeah, and whoever's calling the game goes.
They called him Tractor Trailer.
It's like a refrigerator going down. The professional call was better, but yeah.
You still love to see it, so I don't know.
Of course you do. Of course you do. You can't stare. You can't look away.
Yeah, that's my time for today. Bat, what's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live with Confirm and Send next. Back in 90 seconds, Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, Are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The tastylive research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend. You know what that means? Time for a little bit more taste. That what I see, you sold 66.65 because you know they're not going to get back up to 66.66.
I'm working 66.66s, just so you know.
Preemptive strike here for
preemptive strike. I'm working 6666. How could you not?
How you feeling today? Good from your trip to Maine and everything like that? You ate good. You were healthy.
I feel great.
Awesome.
You
look good too, boss.
I feel amazing.
You look amazing.
Thank you.
You do look amazing. Well, you know what? You know what else is amazing? Sounds like we got confirm and send.
Are you guys done with your little? Are you done with your little shtick?
You want more?
No.
I have pictures that would say you're not doing that good, but I'm not going to show them yet. I'm going to save them. My Paquito.
I'm doing amazing. Yeah, let's do a little confirm and send. It's 7:53, and
let's get it.
Monday, September 15th, we are in Chicago, and we got a little bit of a short week for the Bat and I. We have a Monday, Tuesday, and Wednesday for me. Thursday and Friday, I'll be in New York City doing our couple different shows. And don't forget, if you want to come to Friday's show at Webster Hall, you've got to sign up right now. It's full. It's waitlist only. But there will most definitely be some openings. I mean, it always happens.
Love to have you. Love to have you.
It's triple witching. We're gonna have some fun. It's a morning of triple witching. Can't wait.
That's correct. But don't worry, Sadnov. I'm not. I take flights that allow me to work on Thursday too. So I'll be working on Thursday, as I will be working on Friday at Webster Hall. Correcting all of your mistakes live in front of a studio audience.
I've got a lot of stuff doing Thursday too. There's 66 is finally okay. Can't say we didn't get it. How many points should I take out of this? 2, 3, 5? 37, 193. What'd you take?
If you can get a quarter, if you can get it.
$1.
Volatility in by 23 cents also.
Tom Sosnoff, he's Tony Batista. Let's see what we got here, Beth. Do buying power requirements change when a futures contract rolls? For example, when the ES rolls from September to December, from U to Z, does the buying power requirement change because the price is different?
No.
The answer is niet.
No.
It does not change. Just because the underlying price changed a little bit, the buying power requirement will not change.
Sometimes the price actually goes down depending on how. Remember, this $57 for this roll that Tom actually just did in the S&P futures is just the difference between dividends, cost to carry. It doesn't have anything to do with price action or anything else like that.
The buying power requirement is set based on the risk, and so the underlying price doesn't really matter. Let's go to the next slide. Is there such a thing as time-weighted deltas? For example, I am long a few hundred deltas, but they're spread out over October, November, December, and January. Would you view that differently than if all your deltas were in October?
It's a great question, and I have to answer it with a yes. Again, your October, November, December, January, you really don't have any options for like this cycle that's expiring in September. You're in the month that most of us are in, at least the beginning one, in October. Now they are taking them all together to give you a beta weighted delta to the S&P right now, but I certainly would take a closer look at where I was getting those deltas. October delta is going to be a lot different than January delta. So yeah, I'd have to do a little bit of a deeper dive in here, but your beta weighted delta is what the S&P is right now. So take what I said with a grain of salt.
Yeah. So there's no such thing as a time weighted delta. And I don't think I would view that differently than if all your deltas were in October. I mean, because delta is just delta and it's already adjusted for the time. So I don't think
you'd want to see where you could get potentially, longer and shorter in October versus January. It would give you much heavier delta. Would you agree?
It would, but it would be reflected in the delta number. That's all I'm saying. Is the number that's reflected on the screen on your position in the software is the real number. So I wouldn't.
Yep.
Don't try to overthink this. Okay. It's already adjusted for time.
Yep.
Let's go to the next slide. Everyone is expecting a rate cut of a quarter point on Wednesday. I don't see how that can mean anything other than buy the rumor and sell this and sell the news setup. Would you agree with that?
Yeah, most times we do agree with something like that. The way the market usually behaves from our way of watching it is, they buy the rumor, we're at all-time highs, so we get exactly what we want, the quarter or 0.5% rate cut. And we usually have that all baked in, and we get a little bit of a sell-off. Now, does that sell-off mean 1%, 2%, or 3%, or does it mean 8%, 9%, 13%? I don't know. That I can't tell you.
What movie are you watching? Does that sell-off mean 1/10%?
Sure.
I mean, the sell-off could be $6 for all we know.
Sure.
Yeah, I think everyone's expecting a rate cut, and everyone's also expecting a buy the rumor, sell the news. So I don't know. I agree with it, but I'm not playing it that way. I'm already short a little bit. I'm just going to keep my shorts as is. I'm not going to get more short into a rate cut for Wednesday. We're just going to trade them.
Yep.
Let's go next slide. On first call last night, I believe you said September expiration has a positive bias. But as we head into October, isn't that a month where bad things have happened historically? And because of that, do you trade October with a different approach that skews bearish?
That skews bearish. No, I mean, I take history into account. I take, what has happened in the past as one part of what I think about when I'm placing a trade. But you have to trade the here and now. And as of right now, volatility making new lows. Your bearish September and your bearish October look absolutely fine in the middle of September.
Yeah, I mean, so thanks to one of our customers, Brad, who always sends me all the expiration stuff he has for years. So big thanks, big shout out and thanks. Over the last 27 years, and this is what I was referring to last night, over the last 27 years, expiration, which is Thursday to Friday, there's been 8 up and 19 down in September. So that's pretty, that's wrapped right a little over 70% of the time. September's been higher, but the average down day, when you get a down day in September, it's about 17 points, almost 18, and the average up day is about 9. So the down days are twice the size of up days. The total moves, though, for September have been up 315 points for the last 27 years, which is an average move of about $11. So yeah, September had a positive bias going into triple witching. Now, what's happened recently is a little bit different, and in the last couple of years, it just to give you an idea, September settlement, okay, bet.
Yep.
In 2020, it was down 3. In 2021, it was down 9. In 2022, it was down 30. In 2023, it was down 13. In 2024, it was down 13. So although 27 of the last 27 years, only 9 have been up. I'm sorry, only 9 have been down. I say 9 or 8. I'm sorry. In the last 27 years, only 8 have been down, but 5 of those 8 are the last 5 years. So
just like the deltas being in the front month versus the back month, you're going to weigh that a little bit differently, even though deltas.
I'm not. The only thing I'm going to do differently, because I kind of agree with this person that I don't think anything bad based on what the expected move is for this week. I'm not so sure anything bad's going to happen this week or early on. So I think I'm going to wait until Friday or Monday and get a little more short. That's what I'm thinking.
Yeah. Okay.
Let's go to the next slide. What is the difference between a warrant and an option?
Oh, you know what? This used to confuse the crap.
I can give you. I know this.
Yeah, okay, go ahead.
Because they are very similar, except
they are extremely similar. I mean,
yeah,
but
warrants are usually longer than options. And they go out like years, but that's not the real difference. The real difference.
Oh, I thought you were talking about like with the police.
Funny. So a warrant is issued by the company. This is the difference. So a warrant is like companies issue stock. Well, companies issue warrants, and so the company sells the warrants, which is a right to buy the stock by a certain price at a certain date. The option marketplace, the companies do not issue options. Options are created on an exchange, and they have nothing to do with the company. The company has no control over the option market. So the difference between a warrant and an option is a warrant is produced by the company, and an option is a warrant is created by the company, and an option is created by an option exchange. The company controls the warrants that they produce, and they have nothing to do with the option marketplace.
Yeah, and they actually create new shares too, Thomas. So that could dilute the
you mean the warrants? Yeah, of course. When warrants are exercised, then they become shares.
Yeah.
But again, the main difference is the warrant is created by the company rather than the exchange. Let's go to the last slide. So is a Jade Lizard a good strategy to use for the VIX?
Jade Lizard is a bullish strategy. It's selling a naked put and selling a naked put and selling a call spread above the market. So it is bullish delta. So it's a good strategy for the VIX. You'd have to be bullish on the VIX. Now, if you're looking at it from a pure option point of view, VIX has a lot of call skew. So that call spread you're selling, you're actually selling it cheap relative. Remember, the price is what it is. You can always buy it or sell it for a penny, but it's relatively cheap. And the put that you're selling is relatively, the call spread is relatively.
No, you're right. You're right. The call spread's relatively cheap, and the put is cheap too. So a Jade Lizard is not a good strategy for the VIX.
Preferable, right? Not the preferred strategy.
Here in the VIX, VIX, the puts trade for next to nothing. So, so it's not a good strategy to sell a put, and the call spreads trade super cheap because of the call skew. And so the Jade Lizard would be one of the worst strategies for a upside play in the VIX. The VIX is a weird index. If you want to play the upside, you pretty much got to buy a very wide call spread, very wide, or you have to buy the futures themselves. There's really no put selling, no put spreads, that kind of thing in the VIX. If you want to trade something different like UVXY or VXX, that's a little bit different. But the VIX itself, no, not a good strategy.
So look, that's our last question of the day. As we sit here at 6:06, we're going to take a quick 90-second break and come back with some more Tasty Live with an option jive next.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's option. Jive.
Option.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with our friend Kai. Kai, what's up, dude?
Option.
Not much.
Jive.
Well, option Jive. Give it to us, Kai.
All right. No problem. So a little bit
TikTok deal is being announced. Saved again.
Thank you, President Trump.
Sorry, Kai, go ahead.
No, that's fine. All right, so a little bit of summary from last week. What happened? Definitely one of the biggest news is some major economic events. The data was not satisfied by the market, but the indices in the market still kept rallying. And SPY or S&P 500, NASDAQ, and Russell 2000 hitting new high. Dow is very close to the new high. So any news is good news for the market right now. No matter it's economic or political, whatever, market just keep going higher.
This is true. And I thought, Kai, you were going to announce that you were instrumental in the TikTok deal. That would have been a nice little feather in your cap coming in here on a Monday, but evidently you were not part of the deal.
I don't even watch TikTok.
All right, whatever.
Yeah, and also some political news. The courts ruled Trump's tariffs illegal. Something probably going to happen. Let's see if the volatility will kick in.
Mm-hmm.
So looking ahead for this week, some of the important events, right? Fed rate decision, definitely the most important one on Wednesday for day traders and zero DT traders. This is probably the most important one before Wednesday. And interesting triple witching day this Friday.
Friday triple witching, the moment we've all been waiting for.
Yeah.
Mm-hmm. What do you think of this week? Is a triple witch days more likely quietly keep going up, or you think there will be more volatility?
There's obviously not going to be any volatility right now with the Fed rate decision and triple witching. They have no volatility built into this market. There's the cheapest thing on the board. The cheapest thing in the world right now is volatility. Everything else is expensive. Stocks are expensive. Commodities are expensive. Digital assets are expensive. Gold's expensive. Everything to me is expensive except fear. The cheapest thing out there. So, no, I don't think anything's going to happen this week.
Interesting.
So if you were going to buy something, you'd be looking to buy fear?
If I'm looking to, well, you don't have to buy fear. You can just get short the S&P. Same thing.
Sure. Yeah.
Okay, fair enough.
And that's the reason you have to be a little bit short. That's in my opinion.
So at which level you would consider long volatility product directly?
None.
Below 13?
None. I don't like buying volatility products. I find it throughout all the years of my trading. Well, we've really only been trading volatility for the last, let's call it 23 or 24 years. And I just haven't done that well with just straight volatility indexes. I don't think I do that well.
It's a short-term trade because of the drag of
yeah,
volatility.
but I've never gone out and bought a bunch of calls like in in the VIX, just thinking that, as a hedge or anything else. I've just never done it. I just don't.
You'd rather sell futures or do anything.
I'd rather do anything else than that.
Yeah.
Got it. Okay, so indices performance, we had a pretty good week. So other than Russell 2000, everything else has more than 1% move to the upside. We had a 2 quiet week before, so last week was pretty good, very green. And expect move, definitely beyond the expect move. So the expected move from at the beginning of last week was 1.1%. If we go to the next slide, so actually we have 1.6%. And right now the VIX was even lower, probably half a point lower than the beginning of last week, 15.3 or so. Right now we're sitting around below 15. So 1% in SPX, that's what we expect to see at the end of this Friday. That's very small. 60 points.
Tiny.
Yep.
And each week it keeps getting smaller and smaller and smaller. Each day keeps getting smaller and smaller and smaller too.
Doesn't this kind of remind you of like 2008-ish?
Sure, but I don't know if it's 2008 January or 2008.
Right, of course. It reminds me of 2017, where it was like the deadest year. It took the whole year, it didn't move until the following year. Exactly.
Oh, don't scare the children.
Expected move in the ES is under 14.5 points. On Friday, Nick and I did an SPX trade at 9 o'clock. It was 16.5 points at 9 o'clock, which is a half hour into the trading session. You're already a half hour before the trading session, and it's It's going to be under 14 in a second.
I'm going to have some thorough analysis in the following slides about the Friday's SPX performance. It's really, really tiny range.
Mm-hmm.
It's very difficult to get fill in the 0DT. You have to chase market very quickly, but it's just tough.
Yep.
Okay, IVR, major assets IVR last week. Next slide. We had a pretty quiet week, so across the board the IVR dropped. Except the S&P 500 didn't change, Bitcoin didn't change. The only IVR we saw that increased is natural gas, which not too many people trade. But most of the assets we saw, it didn't move that much. The currency, the interest rate, trading a relatively tighter range, and the IV drop.
Okie dokie.
All right, some interesting move from last week. The first one, let's go slide, is last Friday. So last Friday, we only saw a 0.3% intraday range. That range that's calculated from the high to low. It's not like positive and negative. It's the total range is 0.3% of the SPX price. So we go to next slide. This is a 5 years intraday range, 0.3% range. There are only less than 1% of the occurrences happen in the past 5 years. So if for 0.5%, so 0.5% of the intraday range, the percentage actually increased quickly. There are 10% of occurrences. We can see a 0.5%. If we increase another 0.25%, 0.75, there are roughly one third of occurrences on every day. If we see 1% daily change or intraday range, half of the occurrences had a 1% intraday range for SPX, not ES. So 0.3 is a very small range for SPX. So pretty much 30, what is that? 27 we saw last Friday. Oh, sorry, 20.
That seems super low, right?
Yeah, very, very low. Next slide. So last week's market was quiet. The one thing that catch the eyes is the Oracle. Oracle had earnings, then gained 36% from close to close. This is the best performance day since 1992. What is that? 27 years? No, 37 years. In 37 years. In one day, the Oracle gained 244 billion in market cap. That's greater than last week's the capital gain from Google. So one day is larger than Google's whole week's capital gain from last week. And if I remember correctly, Google was up like almost 30% too on the day after. The 5 largest single day gains in the stock market history, the top 3 were from NVIDIA. All happened last year. Oracle, the 4th one, and Meta, also the last year, the 5th one. So this is one of a big event. Not only the earnings, these are just single day performance. And right now, the Oracle valued very close to $1 trillion. It ranks the 13th most valuable company in the world right now. Just something interesting to throw in there.
It is something interesting. Taking a look at this, the 5 largest single gains in the stock. NVIDIA is your leader in the clubhouse, and as of late in NVIDIA, like NVIDIA this morning, down around $2 and change. Although it isn't far off of its highs, it doesn't seem to have that oomph to it. The IV rank is only 4 in NVIDIA. It's quite low, expecting kind of smaller moves. So we'll see if we can keep this market higher with NVIDIA kind of losing its oomph. Not going down, but certainly losing some of its velocity.
Yeah, I saw on the Twitter and a lot of media, rather than talking about NVIDIA in the past weekend, now they start talking about AMD. Don't miss the next $4 trillion market cap company.
Oh, they always find a new pony to ride, Kai. I mean, that's nothing new. I mean, I'm not going to say something politically incorrect, but go ahead.
Okay. Next slide.
Sure.
So biggest movers from S&P 500, liquid ones. The top ones, MBD, due to the takeover news, up 53%. IV rank increased 83%. Next 4, Oracle for sure. MU up 20% too. Tesla up 14%. It already crossed 400. Kind of what it's called is resistance line.
400. It crossed 425. Kai, it's up another
this morning.
$30 this morning. Yeah, 20 to 30 bucks. Yep.
Yeah, SMCI up 12%. To the downside, HUM down 11%. Boeing, Moderna, Lulu, CZR down 6 to 5%.
Yeah, I'm surprised Netflix didn't make that group there too. I know Netflix was a $1,200 stock, now $1,187. It's had a little bit of a fall from grace too.
Yeah, it was there. I think so, 5 or 4%, or it's
got it.
What is WBD?
That's Warner Brothers.
Warner.
Come on, Vanetta told you all about this. Were you not paying attention?
Obviously not for Warner Brothers. What happened? They got bought out or something?
It's. What was the other one? What was the
rumors? Not rumors. It's the new meme stock.
Oh, got it.
Mm-hmm. Warner Brothers is up small this morning. Unchanged this morning.
Okay, Fred.
Okie dokie. Taking a look at the earnings. Earnings last week, definitely Oracle for sure, up 36% on Wednesday. And can we go to the next slide? And Chewy down 17%. These are the only 2 had a double-digit movement the day after. I believe LMNR had 8% or something, but these 2 are the biggest mover.
Mm-hmm.
And looking at the long term, again, right now we're pretty much finishing the earnings season. Another week past, we have only roughly 100% company, 100 company stocks earnings, and the stats didn't change. For this season, we're going to see roughly 49 to 51 winners to losers, and average return is 0.1%, very close to 0 again.
Much to do about nothing, which is typical, right? When you look at it.
I think second quarter or first quarter, we saw a positive 0.5% to the upside. That's very rare in the past 3 years.
Mm-hmm.
I think the past quarter. And we don't have a lot of earnings coming this week. Probably something interesting is Cracker and Barrels. A lot of investors talking about it, retails. We also have FedEx and Lennar. I don't even think anyone you would trade.
Nah, Yeah, maybe I'd trade Cracker Barrel for any other restaurant in the world, but I wouldn't look to trade them for earnings.
No, we won't trade FedEx either, probably. It's rare that we trade FedEx.
You're not even going to be here. I mean, you don't care.
Oh, yeah. I don't care.
See, Kai? See how quickly he changes? All right, Kai. I'm gonna let you go spy on the rest of Sosnov's searches on TikTok. We'll take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell. Good job, Kai.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I'd started to disrupt my trading career like really early on, probably, 4 or 5 years into it. I started thinking there's got to be more than just this. Thinkorswim we built in 1999, 2000 when the market was crashing. And Tasty was in the middle of 2010, 2011 when markets were kind of in turmoil. So yeah, it's always best to start things when it's worse. When I speak in front of a large crowd, I usually say right up front, I'm going to try to give you a takeaway every 15 minutes because I think it's important. You came out for a reason, and we respect that, and it's humbling in its own sense. So we have to deliver our part. Like, you can't just give somebody, hey, here's a one-liner, and you take it home, and then you try to figure out what to do with a one-liner. You have to challenge people to think.
If the VIX is over 40, we'd like to see an allocation of about 50%. The reason you allocate more when the VIX is higher is because when you have a higher VIX, you have the opportunity to make more money.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. With the opening bell imminent here, Sosnoff, in a minute and a half. I see.
Imminent.
strategically scratched your 66, 65s to raise your average to 66, 66 while they're trading 66, 67 and a half bid right now.
Thank you so much for your
recap. That was a recap. Volatility in by 22 cents. Hasn't moved off of these lows of 1775. NASDAQ up 67, even though Tesla is up a gazillion after Elon puts $1 billion into Tesla. Buy the rumor, sell the news.
In Tesla, I don't have a Tesla position on.
That's why I'm asking you now.
I think so.
Tesla's earnings October 22nd. Let's see some more movers here before we get going here. Bonds are up 9 ticks, 117.22. All the indices are up around the same, with the Dow being the weakest of the group, only up 57. There's your opening bell, Sadnoff. Bitcoin down almost 2,000 to 115 and change. But you can see it's had a nice week and a half run to the upside after trading over 117,000. Oil up 63. Gold now turned back green. So for a moment there last night, it was red by about $8 or $10. It's now up $4.50, saving the world. Silver down 19. That's a decent sized move, about a half percentage point to the downside. Nat gas back under $3, 2.9 and change. Corn, wheat, and soybeans all unchanged. Let's see what's moving this market. To the downside, the Buckers, Meta down 3, Microsoft down 2.5 or 3. Nvidia also down here, just moved on me. I'm sorry. Nvidia down $1.50. Small moves to the downside. Coin down about $1 or so. Let's see what Apple is doing. Apple is up $3. Let's see what other stocks are higher this morning. Tesla up 25 and change, like I said. Oracle up 12. Your beloved Baba up 4 and change. Nick got me into Netflix Friday. Netflix down 40 cents. That's all I got. Even the S&P is trading 71. Ooh, you just sold 71.
I'm looking at my position here, trying to figure out where the problems are. Definitely in the indexes. Not much else.
Low implied volatility, IV rank there. That's where you're getting some of your delta, correct? Yeah, Bet. That's where I'm getting my delta.
Well, I do appreciate that. It looks like you got me short Tesla on Friday, so thank you so much.
Did I get you short Tesla on Friday?
Yeah, you forget those things.
Let me take a look at this.
You conveniently forget those things.
You got, oh my God, you got a broken wing. You got a 1x2x1 spread.
I was just saying, thank you. Thank you for getting me short.
It's got 12 short deltas to it. Hang in there, my friend. This is exactly what you wanted. Remember, you're long the 425 call, Sosnoff. We're right there at 425.
Now you're going to explain to me how trading works? Thank you.
That's a beautiful spread. It's a $15. Your break even is over 460. You're 425. That's the best you could have done. You love that trade. You don't want it? I'll take it off your hands at today's prices.
If I wanted it, I could have done today at $2.50 better.
You could have doubled your credit today. You could have doubled your credit.
I could have done it $3 better today. So thank you.
I said double your credit. Double your credit.
Let's see. What else do we got going on here?
Netflix now down 5. Neither one of your fathers loves you today, Nikki.
Yeah. There is, man, me no like this opening.
Oh, are you gonna be the kind of guy today who doesn't have good positions and then ate a lot of shellfish and is now suffering?
No, I'm gonna like my positions. I mean, I'm positioning
myself. You're just not gonna like me. Is that what you're saying?
Kind of. I'm positioning myself for a much, for much bigger things.
For greatness. You're positioning yourself for greatness. Is that what you're trying to say?
I am positioning myself for greatness. That is exactly what I'm trying to say. And
that's what I figured. Yes. Makes sense now.
I'm positioning myself for greatness. That's exactly what I'm doing.
Understood. All right. I'm excited for you.
I'm gonna figure this out in a few minutes. And I'm gonna figure out I'm a little bit too short here. So I gotta let him come down to me in a little bit. But,
Okay. You're allowed to do that.
I'm a little bit too short, but you know what? I think I'm early this week. I think it's
you're a little premature.
Yeah, I think it's a week. I think I'm a week away. I don't want to miss it, but I think I'm a week away.
Understood. Okay. All right.
Looking at the markets, looking at my positions here. I kind of like to just see what's happening, scan around, see what indexes, see what I think could be a little weaker. It's hard pre-market to tell. Now that they've opened, it's even harder to tell now that everything's open. NASDAQ's a little stronger than I thought it was going to be. S&Ps are a little stronger than I thought they were going to be. Bonds are a little stronger than I thought they were going to be. So I don't really have anything I don't have any weak children yet.
You don't have any Batistas in your portfolio?
No, not really. Not yet. I mean, no. I need some help. Reddit up $4 is not helping. Apple up $3 is not helping. But going through all the different stocks in my
Tesla up 27, Sadnoff. What do you think about this piece? Back where it was trading, I think in the beginning of the year, right? Let's see where it was.
I don't know. I don't have anything really on in there.
I know. IB rank of 25. Does it not seem interesting to you?
Not really. Oracle.
What seems interesting to you right now? That the market's at all-time highs?
Trying to see if I have anything on an Oracle that seems interesting. The market at all-time highs.
Volatility only in by 16 cents. Little breath for you to the downside.
I'm
Bonds
surprised.
Up 11. Bitcoin selling off down 2,000.
I think Bitcoin's going a lot. I think Bitcoin's going a lot lower.
Well, I think monkey's going to fly out of my tuchus, but I mean, nobody knows, right?
Yeah, hang on one second. I want to just reorganize some stuff here.
Reorganizing? What are you going through a period of reorganization over there?
I'm going through a period of reorganization. Yes. Thank you.
Okay.
I wouldn't call it reorganization, but I do like to tweak my positions.
Yes, that's
that. Oops. Anyway, all right, what else do you see here? What's jumping off the screen at you, if anything?
Well, I mean, I'm trying to look at the downside here. What's going to help you with your flight lower? I mean, Netflix is down 12, AVGO, which has been a leader, down 3 or 4. Nvidia, big name, down 3. Palantir down almost 3. You do have a couple of names here from the NASDAQ. Qualcomm down around $1, so that's a little bit lower. But the upside seems to be equally as friendly here with Google and CRWV, Reddit up $3 or $4, Apple up $3.50. I don't know, Apple, Tesla higher. You have to watch these stocks go lower before you get any kind of action to the downside, Sadnoff.
Well, then the NASDAQ has been super strong, stronger than I thought it would be today. So
it's the leader today on a percentage basis, slightly.
Yeah, I got it.
Nice $3 scalp in the mini S&Ps there.
Oh, thank you so much.
I see you're not going to be playing around today. Today's going to be a non-joking kind of day. I can tell already.
No, I'll see. I mean, I'm just trying to get my.
Is your mom as disappointed in you as we are? Is that what this is all about? Because I know you saw your mom.
I'm trying to get my Oracle position in line, and you're just yakking for some reason.
This is a talk show. We do a talk show. If I stare into the screen, half the audience will be happy, but the other half is going to say something.
Trying to think, what else do I got here to do? All right, that's probably it for me right now.
You know what? Nothing says Monday like, this next man, that's right, Dr. Jim. If you look in the dictionary under Monday, you'll see his face there. That's right, we've got the skinny on options, abstract applications, immediately following these messages. We'll be back in 90 seconds. Mr. Monday, Dr. Jim, next.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Coming up on Bad Money with Jim Blamer, Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with Mr. Monday himself. Dr. Jim is in the house. Dr. Jim, what's your favorite sports team this week?
No, it's not. It's not this week. It's the same team I've been talking about for 3.5 years. Did you guys see my Rams? They're just a juggernaut, man. I've been telling you guys from the beginning. You got Stafford, you got all the other guys. They look strong, man. They look strong, you know.
All
that's all
the other guys.
You got Pua Nuka, whoever the wide receiver is. You got Cooper Criswell. No, Cooper Criswell's a reliever for the Red Sox. But, man, I'm just saying, they look good. You know, I mean, I've been talking about them in training camp. They look solid. You know, I can't say the same for your Chicago Bears, Tom. Ooh, man, they do not look good, my friend.
No, my 8.5s are looking really bad.
Yeah.
My 8.5s.
I would be looking to get rid of those for whatever you can get for them today.
I offered him out. He didn't give me a. He said I might want to double the bet. Was his answer.
So you know what's funny, Tony? You were talking in the previous segment. You were talking about you made some comment about being loaded up on shellfish.
Yes.
And I found that to be kind of funny because I don't know if you guys remember.
Yeah,
but
you're
I'm
allergic to shellfish.
That's right. So I remember being on the road and you guys kept trying to feed me shrimp and you kept trying to feed me clams and all these things. And then finally you broke me in Washington, D.C. when you guys made me eat octopus, which is not really a shellfish, but man, it is equally as nasty as all the other shellfish. And so you guys finally got me though in D.C.
Nothing good like a good choking episode at a company dinner. I mean, that breaks the ice for everybody. Everybody else feels good.
I can't remember how they prepare. Like, what's the proper way to prepare octopus? I can't remember.
You grill
like,
it.
If I remember, like they
You
just
grill
brought
it.
out the tentacles. I think
You grill
right?
it. You grill it. First
Okay.
you boil it. You boil it and then you grill it.
You can't fry it.
No, you can't fry it.
I mean, I don't know. That's why I'm asking you. Okay, so
No, you
grill
can't
octopus.
fry it. So
Is that the only way, Tony? Is that it? Is that all we can do?
I mean, you can fry it if you want to, but Saznov presented the creature of the sea properly.
no, you cannot fry octopus. But I did have a lot of shellfish.
It's still America, Saznov.
I
mean,
had way too much shellfish this weekend, so
See, I told you.
I had fried clams and scallops.
Isn't that that's one of your go-tos though, right? When you're up there in Maine?
Fried clams, the best.
Yeah. Okay.
I have to have it. It's a delicacy unlike. It's one of the great delicacies in America, and people have never had it before. You don't know what you're missing.
So here's a question for you. So calamari.
Yeah.
Are you a sautéed or are you a fried?
Oh, I prefer it fried.
Okay. So most people do, right? That's kind of the public play. But let me let you all in on a little secret. If you guys ever make it out to St. Clair Shores, Michigan, this is one of the Detroit suburbs. I've never told this story before.
Oh, God.
This is a special day. I've never told this story before. So I used to work at a seafood restaurant when I was like 16, 17, 18. This was actually before I developed my allergy to shellfish. I was not allergic to shellfish. I think because I handled crab legs every night, work in the back of the house and whatever, that might be what caused it. But that doesn't matter. We used to sell calamari, and like people would come. Tom, they would fly in from like Illinois. They would fly in from like Nebraska. We'd have people coming in from like Portland. Like, hey, I hear you guys have a calamari. We fried it and then we sauteed it. So it wasn't either or. It was both and. That was the secret. Tom, people were lined up out the door, man. We couldn't stock enough of it. So if you ever make it to St. Clair Shores, Michigan, go to Waves. Tell them I sent you. I worked there like 1998, 1999, right? Tell them that you know me, and they'll set you up.
You know, it's the San Gennaro feast, Tony, right now.
Yeah. My mom and I used to go all the time. Her birthday, September 21st. That was going to be. That was always our thing.
Thanks to TikTok, you know, you have all the foods there. I mean, they're showing everything. And
we always have all the foods there, Saz.
I know, but thanks to TikTok, you can see everything. And one of the best looking dishes they have, they got one guy who's selling fried calamari with a huge like ladle of spicy tomato sauce on top of it. Looks
you mean
great.
Just like the place that I took you to?
Yeah, that's your place, right, Tony?
That's 100% correct, Saznov. I mean, which you poo-poo all the time, but yet you ordered your own. There was one for the table, and then there was one for you to eat.
There's a difference between calamari and scungile.
No, we had calamari. We had scungili too. We had calamari with the spicy.
I'm just telling you,
red
it's at San Gennaro Feast. You're whatever you like.
And then you go, ooh, there's a hardtack underneath there too with the sauce. It's really good, Tony.
Anyway, I'm just telling you guys what they have at San Gennaro Feast.
I've been going to San Gennaro Feast since you were pooping yellow, allegedly, in New York City yourself.
You probably haven't been there in 45 years.
Closer to 25 years, but I would go with my mom every year. That was our thing.
I used to go with my grandfather all the time.
So you haven't been there in 65 years.
Oh, no, I've been there in like 19... 1990.
Oh, okay.
Yeah, 35 years ago.
Yeah, right. I think I got you by 2 years. I digress, Jim. Continue on. I apologize.
No. I'm getting good ideas. I'm getting good food ideas because I'm typically pretty good with the food stuff on my own. But if I can get some more ideas from you guys, like I'll absolutely take it.
Beautiful.
So you know what I'm going to do, Tom, is I'm going to take this recommendation and you know where I'm going to put it? I'm going to put it in my little black book. So have I ever told you about my little black book?
Oh God, yes,
This
please.
is going to be
more.
a good transition into today's segment.
No mas.
So in the fall of 2015, like when I knew, like when our courtship was like, it was hot and heavy, man. And I knew that like it was going to happen. Like I was going to join the team full time in January 2016. I got this little black book and I started writing down these segment ideas. And I came into the network like guns blazing, came in like 500-600 segments ready to go, whatever, right? Well, over the years, I've crossed them all off. Tom, there was only one segment left in that black book that I haven't done yet. And it's because I couldn't figure it out. We are going to do it this morning. Are you ready, Tom?
Yeah, I'm
ready.
This is it. So now the black book is done. It's over. It can go in the trash. All right, Beth, hit us here on the title slide. Tom, I know you love paradoxes. So here's what we are going to do tonight, Tom. We are going to try to book a room at Hilbert's Hotel.
Whoa!
The infinity paradox. Tom, have you ever heard of this before?
No.
Okay, well, I hope you have your thinking cap on because this is going to stretch your intellectual abilities. I know they won't need to get stretched too far, but we are going to reach the limits. So Hilbert's Hotel, let's go. All right, Beth, hit us here on the introductory slide. So over the years, we've challenged ourselves with a number of mathematical paradoxes and had a lot of fun doing it. In fact, on the road, gentlemen, as you guys remember, I'm sure, we've even used the Monty Hall problem, the birthday paradox as part of our live shows. Well, today we're going to work through another paradox specifically related to infinity as we look to book a room at Hilbert's Hotel. Tom, don't you ever forget, regardless of how you feel about this morning's piece, because you may love it, you may hate it, you just never know, right? Nobody knows. Nobody knows where the market's going next. Nobody knows how Tom is going to feel about a given Monday morning piece. But don't you ever forget who taught you, who brought the birthday paradox to your doorstep. It was me.
He's got a good point, Tom.
I mean, some of my favorite shows we've done on the road are the Monty Hall problem and the birthday paradox.
The best part, here's the best part about the birthday, and I don't know if everybody knows this. Here's the best part about the birthday paradox. The birthday paradox, when you decided, hey, let's do this on the show, let's do this on the road, let's do this live, whatever, that was going to be a show that I was not part of. That was going to be a show that had some other people on the team doing the show, whatever, which is totally, obviously I'm not part of every live show. But what's amazing is like 4 days before the show, you called me. You called me on like a Saturday. Like I'm hanging out with the kids, like I'm hanging out with Army, like, Jim, you're like, listen, man, you're like, I need you. Like, I need you, man. Like, I don't know how to figure this out. I don't know how to explain it. I don't know how the math works. Like, I need you. I need you here this weekend. I was like, I can't do it, man. Like, I got this, I got that. I got Legoland. I got blah, blah, blah. You're like, man, I need you. Like, no one else can do what you do. No one else can fill this void in my life right now like you can. And so what did I do? Like, I was there. I was there, man. I was there for you. Don't you ever forget that.
Is that how it went, Sosnov?
Not exactly. Like, I called Jacob and he was like, what are you, an idiot? Everybody knows how to do this. And then I called Julia and she said, what's wrong with you? Everybody knows how to do this. Okay, so I didn't want to be any more embarrassed with those two. So then I called Dr. Jim because I knew it was closer to my level.
All right, fair enough. Okay, so let's book a room at Hilbert's Hotel. All right, Beth, go ahead and hit us down the next slide. Okay, so Hilbert's Hotel is a thought experiment designed to illustrate just how difficult it is to truly wrap our minds around infinity. And this is going to be super abstract this morning, so I hope everybody's ready. But it actually does apply to us because remember, if you sell a strangle, right, theoretically you have infinite losses. You have infinite loss potential. So we're going to come back to that here at the very end. But so in the 1920s, this was a thought experiment, an idea that was developed by a German mathematician named David Hilbert. So all of the ideas that follow, I did not come up with this. I just had to try to figure out how it works, which was quite a challenge for me. But I think we got far enough to where we could go ahead and do this segment this morning. So here's Hilbert's Hotel. You have this hotel. It has an infinite number of rooms and an infinite number of guests. Okay, so this is how the problem begins. infinite number of rooms, infinite number of guests. And then one night, the night manager is on duty and he looks out the window and he can't believe it. But there's another guest looking for a room. So how is the night manager going to accommodate this new guest in his hotel with an infinite number of rooms and an infinite number of guests? Now, keep in mind a couple of things. Number one, we're looking for precision, gentlemen. We don't want to be sloppy with our answers and just say, well, it's infinity, just throw them in there, whatever. No. We want to be precise with our answers. We want to be clinical, and there can be no overlapping rooms. So like Tom, when we went on the road very frequently, you would make me bunk with Tony. And I didn't love it, but I understood. I'm like, hey, we got to save money. We got to this and that. So oftentimes it was dual occupancy with me and Tony Batista. And we made it work, didn't we, Tony?
Of course, we made it work. Dr.
I mean, it's all about the team. It's all about the team, right?
Yep.
We're just focused on winning. There's no individual stats. We made it work.
That's correct.
Yeah. So here, for the record, we never bunked, just so people know.
No. One time. What's the big deal? One time.
So there's no overlapping rooms. Okay, Tom? All right. So do you have any ideas how we should do this? What do you guys think? How do we get this new guest in a room?
Sadnov, how do we get the new guest in the room?
I don't know. I mean, there's an unlimited number of. I don't know.
Tony, do you have any ideas?
I can't show up Sosnoff on the one segment that you saved throughout this whole thing and give him the answer. No, I couldn't do that.
Okay. All right. Fair enough. Okay. So believe it or not, guys, but this one's actually quite simple. Okay. So Beth, hit us on the next slide. Here's all we need to do. The simplest solution is to ask each guest that's currently in a room to move from their current room N to room N plus 1. So the guest in room 1 moves to room 2, the guest in room 2 moves to room 3, and so on and so forth. And then what does that do? That leaves a vacancy in room number 1. So the new guest slides into room number 1 and everybody is happy. What do you guys think about this solution so far? This is the easiest level that we're going to encounter.
Okay. That makes sense.
Okay, fair enough. All right. So the night manager's feeling good. He continues to collect his infinite salary. Everybody's happy. All right. The next night, right? He's just hanging out. All of his infinite number of guests are having an infinite amount of fun, and everybody's happy. He looks out the window, and then all of a sudden, he sees an infinitely long bus with an infinite number of passengers. And now all of a sudden, he's like, man, I got to find an infinite number of rooms for this infinite number of passengers in this infinitely long bus. How am I going to do that? Gentlemen, do you have any thoughts? It's not so simple anymore, is it?
No, you're going to have to move those people out of the room, I think.
How are you going to do it, Tom, with precision? How are you going to do it without overlapping rooms?
Sosnoff?
I'm thinking.
I'm sorry.
I'll give you a hint. There is a very, very simple mathematical solution here. Once we say it on the next slide, you're going to say, oh, yeah, that makes sense. In fact, it's something that Eli and Penelope are learning right now. So, I mean, they're not learning it together per se, but Penelope's in 5th or 6th grade. I don't even know. Eli's in 3rd or 4th grade. I can't keep track. But it has to do with multiplication. Do you have any ideas?
I do not.
No.
You got nothing? Okay. All right, Beth, hit us on the next slide. So the key here is what we're going to do is we're going to ask each guest to move from room N to room 2N. Because here's what's amazing about when you multiply any number by 2. Notice what happens. Guest in room number 1 goes to room number 2. Guest in room number 2 goes to room number 4. Guest in room number 3 goes to room number 6. Room number 4 goes to room number 8. Room number 5 goes to room number 10, and so on and so forth. What happens? All the current guests all move to an even numbered room. So what does that do? That opens up all of the odd numbered rooms. So the infinite number of passengers on the infinitely long bus file into all of the infinite number of odd numbered rooms in the infinite hotel. Everybody's happy, and the hotel is booming, just like it was the previous night before at a level of infinity. What do you think, Tom?
Pretty interesting, but yeah, that's kind of cool.
Okay, well, no, we're not even done yet. The night manager is not off the hook. He thinks he's off the hook. But then the next night, the final night, He's hanging out. Everybody's happy. You know, he's counting his infinite amount of money that he makes from his, you know, infinitely long job. He looks out the window and he sees the unthinkable, Tom. An infinite number of buses with an infinite number of passengers. How does he accommodate his new guests with precision and without overlapping rooms? I'll give you another hint. To solve this problem, you're going to have to go back to around the year 300 BC.
Something Egyptian?
I wasn't everything Egyptian in 300 BC.
I'm trying here. I'm trying.
There's a little mathematical trick. Tom, you look a bit perplexed.
I need help. Yeah, I need help.
I'm not sure if you're thinking about this problem. You could be thinking about, hey, how are the Bears going to actually win a game? Both of which would leave you in an equal state of confusion. But let's go to the next slide. So
I'm
here's the
just
key.
trying to remember. I'm just trying to remember when we bunked together who was the big spoon and who was the little spoon.
No, we had separate bunks, man. No, we did the little, you know, the top and the bottom deal.
Oh,
Yeah.
okay. I didn't remember.
Yeah.
I didn't remember.
Yeah. And with my broken big toe and torn meniscus, I gave you the top bunk, man. So Beth, go ahead and hit us on the next slide. So here's how we figured this out. Around the year 300 BC, Euclid proved that he proved the following: there exists an infinite number of prime numbers. So this is the key, right? Because all the evens and the odds are taken up, but now he's got to figure out a way to accommodate his current guests and all the new guests. So here's what he does: he uses Euclid's, you know, conclusion from 300 BC that there exists an infinite number of prime numbers. So prime numbers like 2, 3, 5, 7, 11, 13, and so on and so forth. So all the current guests, he starts with the first prime number and he raises that to the power of their room number. So for example, the guest in room 7, the first prime number, of course, is 2. The first prime number over and above 1. The guest in room number 7 would go to 2 to the 7th power. He slides into room number 128. Okay, easy enough. Well, then when you go to the first bus, you just take the next prime number. Next prime number raised to the seat number on the bus. So the passenger in seat 7 will go to room 2187. And you would do that for the whole first bus until you get through a countable number of infinite passengers. And then you move to the second bus and you go to the next prime number, and the process just continues until all of the guests have fanned out and they're all comfortably in their rooms.
I never would have got that.
No.
What? Nobody would. This is what hung me up for so long. The first two are fairly simple, but this is what really hung me up for so long that I couldn't do the segment because I didn't feel like I could explain it properly. So what is the purpose of all this? Right? So, I mean, Hilbert's Hotel is a very, very famous mathematical paradox. The purpose of this, as you dig deeper, well, what do you guys think? Before I give you kind of, you know, the conclusion that most mathematicians have settled on, what do you think the purpose of all this is outside of trading, just from a purely mathematical standpoint?
You got me, Dr. Jim. I do not know.
Tom, you can yawn when the segment's over. What do you think? What do you think the purpose is?
I think the purpose is that you're just trying to show us that there's a solution. That there's a solution. That basically every math problem has a solution. I don't know.
That's actually a really good guess. That's a very, very good guess. And I'm not even gonna say that that's wrong necessarily. But the consensus in the mathematical world, and you could probably even ask, I'm sure Jacob is very familiar with this, but the consensus in the mathematical world is the purpose of this thought experiment is just to show you how we really can't wrap our minds around infinity. We really can't. Because it's such an abstract thing. Like, it's not tangible. Because, I mean, the problem started with an infinite number of rooms and an infinite number of guests. So it seems kind of simple. But then when you have additional information coming in and additional guests showing up, it kind of shows you in a way how absurd infinity really is. It's a crazy type of problem where it's like, man, like it just keeps going. And that's what it is by definition. And so that is kind of the paradoxical nature of this. Because yes, we can find these, you know, fairly precise mathematical solutions that aren't sloppy, that, you know, get everybody into a new room, whatever. But it really just highlights and illustrates just how powerful infinity truly is. So Beth, hit us on the next slide though. So why does this matter to us as traders? Well, I think to bring it back to like an undefined risk strategy, right? The theoretical possibility of infinite losses is always there. Like if you sell a call or you sell a strangle, I mean, you're going to see it right there on your Tasty Trade platform. Maximum loss is negative infinity. Well, after having gone through a segment like this, you know, you should have a brand new appreciation for that because infinity is a very abstract concept, right? There's no tangible way for that to show up in the financial markets. Now, that's not to say that you can't lose a lot of money. That's not to say that at all. But in terms of actually reaching infinity, it's not possible. You literally cannot get there, just as we saw with Hilbert's Hotel. There's always room for new guests. There's always room to go further. And you know what's even crazier, by the way? Going back to Hilbert's Hotel, there's actually multiple versions. This is another thing that hung me up. There's multiple versions of this paradox. So we actually went through, if you can believe it or not, we went through the easy version. There's another version that I couldn't do it. I couldn't figure it out. It's when you start getting into like, not just countable numbers and integer values, but you get into all the real numbers. So now you've got negative rooms, like rooms in the basement, which is when I did have my own room on the road, Tom, that's where you would typically put me. Like you guys would all be like, you know, 20th floor, 24th floor. They put me down in the garage.
If we were even in the same hotel as you.
I mean, that only happened 30% of the time in and of itself. That's right.
That's
you
right.
You guys are in, you know, the Westin, you know, you're in the Dana, whatever. You got me down the street in the Ramada, right? On the garage floor level. And so in Hilbert's Hotel, you could like mathematicians have gone with like negative numbers. You get some fractional rooms, Tom, like half a room. You get some radical rooms like square roots, cube roots. You get the pieth room. Like it gets really, really, really crazy. And so anyway, the point of all this is just to have a little bit of fun, but it's also, you know, when you see an infinitely possible loss, how do you guys deal with that? So when you sell a strangle and you sell a call, because selling a put obviously is bounded by zero technically, but when you sell a call or you sell a strangle, how do you guys process the possibility of an infinite loss?
Well, I don't think we do. I mean, if we did, we wouldn't be in this business. I mean, how could we? Because we own a brokerage firm, like where there's, you know, we have 1 million short option contracts with unlimited theoretical risk all the time. If we looked at life, if we tried to solve that, it would be insanity.
Life as we know it would cease.
Just like we just did, right? Just like we tried to solve Hilbert's Hotel. Exactly. But still, I'm going to push on that, Tom. But still, you have to wrap your mind in some context around, okay, what is my worst case scenario risk here? How do you quantify that?
I don't know. Like, what do you mean?
I mean what I mean. Like when you get into an unlimited risk strategy, and you're thinking about like, you know, what's the worst that could possibly happen? How do you begin to wrap your mind around that in a tangible way?
Well, nobody thinks about that. That's a dumb way to think. Like when you get in your car, do you worry about dying? You know, like when you get on a plane, do you worry about dying? I don't.
Who's driving? If you're driving, I worry about
I'm just
dying.
saying, to think about the absolute worst
Jim
case.
is driving, I worry about having a heart attack.
To think about worst case or infinity in any of these places doesn't make any sense. Like we don't think like that. So we think, you know, we think what's the worst case? I mean, you can look at CVAR, you can make up a number yourself, whatever it is, but there's no chance that we think about, you know, infinity.
Of course not. Of course not. But you finally got where I was trying to get you to go. Man, it took me 8.5 years. I finally got you to go where I wanted you to go. Yes, CVAR. You can look at the buying power effect as a good approximation of what is a likely tangible number of my worst case scenario. That's not a guarantee, of course, because the markets are a living and breathing thing. And you might be short some calls in Tesla this morning. That would be extremely painful. And it may get a lot more painful. But still, a lot of traders, I mean, you may not do this, Tom, but Tony, help me out here, man. A lot of traders are thinking about this. A lot of traders are thinking about, you know, okay, what is my worst case scenario here? I've never sold a strangle before. I've never sold a put before. I've never sold a call before. Like you've been doing it for 95 years. Like there's people that are doing it for the first time today, and they need to understand, okay, infinity is a very abstract thing, but what's a tangible way? Right, Tony?
Yeah, 100% correct. I mean, I would look at buying power. You might look at
There you
seed.
go. There you go. Buying power, CVAR, it's all fine. And
Yeah.
lastly, Tony, I would like you to know specifically, so I totaled my car about a month ago. Autumn and I, we made a family decision. We felt like I am a
You're gonna
liability.
walk.
I am a liability on the road. I have not gotten a new car, and I'm not going to get one. I'm a liability. I'm a man of the people, man.
I think
They've taken your keys away already?
They took my keys away, man. I got the e-bike on order, and that's the best I can do. You know, that's all she's gonna give me.
I actually think you on an e-bike is probably a strategic
Is that worse?
move for Autumn for the future. Is what she's thinking about.
To me, I mean, I'll let you guys know when it arrives, but that's got to be more dangerous than me behind the wheel. It's got to be.
100%.
Because it's the Wild Wild West out there. You're in the street, you're on the sidewalk, you're on grass, you're on dirt. You do whatever you want, man.
Yep.
I don't know.
Yeah.
Anyway, there you go. We did it. We booked a room at Hilbert's Hotel.
Autumn will be on the market in a couple of months. This is what I see right now. That's what I see. Good job out of you, Dr. Jim. I see us taking a quick break here as the E-mini S&Ps hang out at 66.72, Sadloff, my old football number. We're going to take a quick 90-second break and come back. Look at Sadloff in his eyes. Well, you want to do your takeaways? Let's do your takeaways. I'm sorry.
Oh, sure. Yeah, okay. I mean, sometimes we do them. Sometimes we don't. It's all good. Undefined risk strategies are an important part of how we build out our portfolios at Tasty. But seeing the potential for an infinite loss can certainly be pretty scary to even a seasoned trader. And while large losses are all too real for many of us at times, an infinitely large loss can never truly be reached, just like we can always find a room for a new guest at Hilbert's Hotel.
What do you think, Sadloff? Okay now?
I mean, it's cute. It's cute the way he did that.
Thank you. Thank you.
Dr. Jim and cute.
It's a cute little story.
All right.
I didn't know where
we just lost Tony. Oh,
I didn't know where he was going, but it's good.
We'll take a quick 90-second break and come back. We got more Tasty Live with Market Measure next.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
I have made a deal with the devil, and I'm long UNH.
What's your most controversial market opinion?
Well, my newest phrase of the year is until proven otherwise, which basically means buy every dip because they've been gobbled up pretty quickly. And even like the tariff stuff, at the bottom of the tariff stuff, I was like, ooh, maybe things are different. And now here we are at all-time highs, like 2 months later. So I think you still got to keep your size in check, but I think the dip buying is here to stay.
Well, I mean, I already told you my UNH trade. I have made a deal with the devil, and I'm long UNH. So I think that is pretty controversial. I don't know a lot of people that know about that stock, let alone trade it, let alone want to be long it. And so I feel like it's a whirlwind of just heinous attitude that has to be to the upside now.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live. That's right, with this market measure. First, let's take a quick look at what's going on with the market. Even the S&Ps holding steady, much like they have been last week also. After making a move, they usually don't turn around too much. They're doing that right now today. They're up 28 handles, trading just about 5 handles off of their highs. We're at record territory. NASDAQ up 138. It was kind of the weaker of the group. It's actually the stronger of the group on a percentage basis right now. Russell up $5.60, trying to join the group of all-time highs, and the Dow up 14, the weakest of the group. Volatility in by 19 cents off of its lows, but a very, very tight range here all around. Bonds are up 9 ticks. Look like they're the higher end of their most recent range. Bitcoin's been the weakest of the group. They're down almost 2% here, $2,300 in Bitcoin. Ethereum down 166. That's actually a larger move than Bitcoin. 3.5% move, down 166. But as you can see here in that very tight range, or wide tight range that they've been in. Oil up 72 cents. Gold caught a bid, up 11 south enough. Usual suspects to the upside here. Tesla up 26, Google up 11, Oracle up 10. That's been having some two-sided action. Good IV rank of their 57, with the IV rank expanding over the last 5 days. Crowd, CRWD up 8 and change. Reddit up almost 5 on the downside. South enough. Fewer and far in between, but MSTR you would think is lower, with Bitcoin lower. It is by $5. Lilly down $5, and Nvidia down 2 and change. Palantir down 2 and change. That's all I got, Saz.
Yeah, I'm not liking this market today. I mean, I'm not liking
your performance, or not liking the direction it's going, or you think it's going lower.
I'm not liking the direction it's going, and I'm not liking my performance either. But my performance, I really haven't done anything. So my performance is basically unchanged, but I'm not liking what's happening here.
Okay.
No,
because you look at the expected move for today. Let's get back to trading it for a quick second. This time yesterday, it was closer to, on Friday, it was closer to $16. It's 12.5.
Yeah, it's pretty incredible. I mean, I was telling those guys, I think it was last night. I don't think it was this morning, but back in the day, I remembered expiration weeks, like going back into some years where volatility contracted a lot, like it has this year. And I remember some expiration weeks where we got into the, triple witching, where we got into the 5, 6, and 7 handle on volatility. And it wasn't just one-offs. I mean, it happened for a while, and then all of a sudden it happens. Then you get like some massive move. It's really hard to get out of that, to get out of that mode. It's a little scary.
Yep.
I've been down this road. Yeah. Anyway, I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Dr. Jim went really long today. He was rambling on about some hotel somewhere with an infinite number of rooms.
Yep.
I wasn't sure where he was going at first, but the funny thing about that is that we never think about anything in infinite or binary terms, like worst case. You know what I mean? Like if you go through life thinking about that, you're destined to be marginalized, I think. Like those are the people that don't leave their house.
Yes. I understand what you say. Like, yes. Those are your hermits.
You can't go through life wondering what's going to happen if you slip in the bathtub, or if somebody runs you over when
because you've slipped in the bathtub, and look at you, you're fine.
Still here,
right? You're still here.
Yeah,
nothing happened to you.
You don't worry about I live in the city. I'm not worried about if I'm going to get bit by a snake, or attacked by a
trouser snake, maybe
a grizzly bear. I mean, there's certain things I don't worry about.
You got to worry about cougars where you live.
There's just can't go through life thinking about the worst case and the infinite case. It's just, and you can't do that in trading either. It's ridiculous. But I get it. Anyway, this coming Friday, if you want to see Tony and I trade live, we don't worry about anything because we're not there to worry. We're there to put some positions on and see what happens. So if you want to come out, Beth, just throw the slide up. Perfect. Webster Hall this Friday. It's going to be fun. We're expecting a lot of celebrities in the house this Friday. Don't even want to tell you who. A lot of celebrities in the house. But we're going to have some fun. Some frequent callers will be in. There'll be a bunch of other people that are attending for the first time that we've invited from various parts of the industry. It should be quite the spectacle this week. Looking forward to it. And then if you can't make this because you're on the West Coast, in 2 weeks, we will be in LA.
If you can't make the East, come to the West. Love to have you. The Fonda Theater.
They got us going from San Francisco, 2 weeks later to New York, 2 weeks later back to LA. So if you can't make New York and you're on the West Coast and you miss San Francisco show, which was really fun, we're going to be at the Fonda Theater in Los Angeles, California on Friday, October 3rd. It is just 2 weeks from this Friday. And there is plenty of availability right now. I'm sure it will fill up, but we do it one show at a time. But there's plenty of availability right now at Fonda. So we would love to see you there. And same show. But each one we do different trades. So it'll be, a lot of fun. tastylive.com/events, Fonda Theater on October 3rd, or the Webster Hall on this Friday, the October, is it 19th, right?
That is correct.
September 19th.
Yes.
September 19th.
September 19th. There we go.
Expiration.
So September 19th or October 3rd. And we do this on a Friday. The show starts at 9 a.m. The doors open at 8 a.m. wherever we do them. And can't wait to see everybody. We bullshit for about an hour before the show starts. And the show will start promptly at 9. It ends by 10:30. Back at work by 11.
I like it.
We're back on an airplane by 2 in the afternoon, heading back to Chicago. Can't believe the traffic in New York this weekend, because New York's usually not too bad. Man, it was bad on Friday.
I haven't heard too many people say New York traffic isn't that bad, but I get what you're trying to say.
I mean, Chicago traffic's bad. New York traffic is bad. The traffic in Guadalajara, that was the worst. Because they're building, of all the places I've been recently, they're building the new stadium or new highways for the World Cup, and everything is at a standstill. So, all right, let's do it.
I'm ready.
Now, we don't have Scott today, do we, Beth?
No.
No,
Okay.
no.
Okay, so then
Tomorrow.
Are we taking calls, Tony? Let's take some calls today.
We can do that. 855-238-2789 or 855-BOO-TASTY.
There's a lot of stuff going on this week. People might want to call in, so you can line up in a few short seconds. We'll have some fun with it. What to do when a strike is breached? What to do when a strike is breached? Man, if we were to count the number of emails we receive, Tony and myself, when a strike is asking what to do when a strike is breached, I think I answered about 10 last night alone. What to do when a strike is breached.
People get into it by selling premium, not wanting it to be that level, and then there they are, and that's the problem. They're worried about what now.
It's whether it's a naked position, whether it's a defined risk like an iron condor. What to do when a strike is breached is a really challenging situation, and so let's talk about it.
I'm ready.
We have a very committed, very mechanical approach, and we don't vary from it. Let's go next slide, Beth. When a trade comes under pressure, we often talk about rolling the untested side. Recently, we also shared a study on how to adjust or defend a trade, especially when losing. Viewers have since sent tons of follow-up questions on what to do, how to roll a position, when either the strike has been breached or just challenged. We don't even wait for a strike to. If we have the option, we do not wait for the strike to be breached. If we don't have the option, then there's nothing you can do.
Yeah, like if you got to move like Tesla today, where it's just up $20 some odd right on the opening.
Let's go to the next slide. So first of all, what is rolling? Rolling the untested side means that during the trade, if the stock breaches the strike, and now again, it's easy to define this thing by talking about breaching the strike, but if the stock makes you uncomfortable, it does not have to breach the strike. If it just makes you uncomfortable, we would close out the side that is untested, not a loss. And okay, what this means is we would roll up the untested side. What that means is you close out the option that is being untested, like they say here, and then you're going to open another option that's a little closer to the stock price. Basically, I don't want to make this sound too complicated or it's like two different trades. It's a single trade. It's just you buy back your short option, you sell another option. You sell another option out that's closer. That's all it is. It's a single spread. It's not a leg. There's no leg risk involved. It's just an additional credit. And the reason you do that is to reduce your delta risk and to add credits. Reduce delta, add credits. Let's go next slide. So by closing out the option that is untested and opening a new one that is close to the stock, we will receive a credit and will lower our delta exposure on the position. That is exactly correct. The result is a lower probability of making max profit in exchange for lower day-to-day risk and lower outlier exposure. This is defensive in nature. Beautifully said. That's exactly what we do. We don't touch the tested side, and on the untested side, we just roll it up if it's a put, and we roll it down if it's a call.
That is
and
correct.
Again, this is not something that requires additional capital. This is only to mitigate risk and to reduce the volatility of the trade. That's all this is. Let's go to the next slide. So we looked at a study since 2015. We sold 16 Delta Strangles, 45 days to expiration, no early management in this study, which is not really what we do, but for the study made it cleaner. We recorded the occurrences where the SPY breached either strike. In our real world, it doesn't even have to come close to breaching. It just has to make you nervous. And also, it's the same thing for defined risk trades, except you just roll up the spread. We compared the average win rate, and we looked at exiting the trade when the strike was breached, continuing to hold until expiration, or rolling the untested side to make into a straddle or anything else, and then held to expiration, just to see if we can improve upon how much adjusting really improves upon doing nothing. Let's go to to the next side, or closing out a trade. Like if you put a stop order and you close out a trade. That's not our style. Let's go to the next slide. So this study takes one specific example and method of rolling. The correct interpretation of the results should be a comparison to show the effect of rolling in general. Do not use the specific percentage, the premium over buying power numbers, as expectations for your own account. It's kind of like a disclaimer. Let's go to the next slide.
Mm-hmm.
Next slide, Beth. Okay, so rolling the trade gave you a better chance to break even than either closing immediately or continuing to hold. Now, again, we are not comparing these. There's no managing early here or that kind of stuff, and there's no other kinds of rolls. What we're saying is that we know two things that don't work. Stopping yourself out is the worst thing you can do, and you'll see the results in a minute. Mm-hmm. Continuing to hold, okay, is better than stopping yourself out, but it doesn't quite compete with adjusting the trade. So when rolling, you lose the ability to make max profit on the original trade, but on average, doing nothing saw more losses and collected less credit than the occasional full swing reversal. So what we see here is since 2015, using 10 years of research, it's a really good study. Strangles with tested strikes, and for the purpose of this study, tested meant breached. If you exited the trade, your win rate was 36%. Not good. If you continued to expiration, your win rate was still 73%, which is not bad at all. And if you rolled to a straddle, your win rate went up to 78%. Remember, the expected win rate was 68% or whatever, plus a little bit higher than that, whatever. And so, but you make less money, but you kept your win rate high and your risk low. That's exiting a trade, holding to expiration, or rolling the untested side up to a straddle. It doesn't have to be that dramatic in real terms.
Sure.
Let's go to the next slide.
Yep.
The reason we rolled to a straddle here, by the way, is because we were waiting for the stock to be breached. If we were doing it normally, just when the stock made us nervous, we rolled. If we were doing that in the future, that would be very different, and you wouldn't roll to a straddle, you just roll to a higher strangle. Historically, around 40% of strangles saw at least one breach. Actual probability of a touch. Remember, 16 delta strangle, probability of a touch of one side is about 40% throughout the 45-day cycle. Knowing a defensive tactic when markets get hard or get difficult will come into play often. And rolling the untested side reduces the delta exposure, increases the net credit, and increases the probability of breaking even or making a small profit in exchange for giving up max profit potential on the trade. If you have sent Tony or I an email in the last 15 years, this is what we have said in response mechanically. Roll up the untested side or roll down the untested side, reduce your delta risk, take in a little additional credit, and then, manage the trade early, see what happens.
You're 100% correct, my friend. And you that are waiting online, I see you Chicago, I see the Netherlands, and I see Connecticut. We're going to get to you in about 90 seconds. We got a few lines open. Give us a buzz, 855-238-2789 or 855-BE-TASTY. That's that number right there on the bottom of the screen. Give us a buzz. We'll be back in 90 seconds talking with Tom and Tony next.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
If you missed the live show, here's our cherry on top weekly recap.
I made smash burgers, and well, I can tell you what I do. That's a game changer. I took it from TikTok. You freeze a stick of butter, and then you put it through a scraper, you know, one of those things, a grater.
A grater? Cheese grater?
Yeah, cheese grater. And then you put a little butter on the, mix it in with the, you know, when you smash them. It's great.
Mix it in with the Tony. You mix it in.
This is a second language. I mean, you take you freeze the butter. It's like all that, and you take the thing and you freeze the butter.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Damn! Wow. Long live the trader nerd!
Man, you're a turd.
Trade junkie.
Hey, it's fun, see? Tom and Tony in the morning.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with, we're going right to the phone call, Sauna. We got a bunch of them, so let's do it. Chicago, Nico in Chicago. What's up, my man?
Fellas, how we doing today? Can you hear me?
Oh, we can hear you.
We can. Thank you for calling in.
Well, you know, I saw Tommy on the CNBC feed, so I was like, you know what? I got to tune in and I got to call for you today. So,
awesome. Thank you.
Then you guys surprised the whole world and you were like, you're going to do that live event. So I got a couple questions for you. I got to guess a checklist. So that live event, are you guys going to do a live stream for that, or are you guys going to have like a digital download after?
No, we're not doing either of those two. We're thinking about the last event. We're thinking about the last one we do this year, potentially doing that. But I'll tell you why we can't.
You don't know that.
Because the regulations in this industry are really weird. And if you record something and then you send it out or play it or give people access, it's considered marketing. It's considered advertising and marketing. That's just the way the whole industry works that way. So the reason we prefer not to live stream stuff like that is because we don't want it to be subject to regulatory oversight. We want to have some fun. And that's why we don't do it. At the end of the year, we may do it digitally because at that point we're not doing any more, so we're fine.
Right, because then it would be more like, I guess it'd be a lesson more so than anything, right?
That's exactly right. In fact, sometimes in some places, we did a show in London a couple of years ago where they wouldn't even let us talk about the stock market because the regulators won't even let you do something. It wasn't even being recorded. I couldn't even talk about the market. Right. So we're finally over that now. But yeah, that's why we don't live stream this show. And that's why we do it in all these different cities. So we can have some fun and do whatever we want. Because you do something live, you're protected by free speech. It's not advertising.
Yes, just like bad coffee.
Exactly.
Right.
You get the exposure. So I got a question for Tony. This is more of a fun question. So Tony, are you a Cubs or a Sox guy?
Am I a Cub or a Sox guy? I'm more of a Cub fan than a Sox fan.
Bat flip. Okay, so that's why there's no daytime baseball this year. All right, last question for you guys. So this is more like a what's an assumption kind of question, and I'm guessing that I can ask this. So if I were to go and make a trade like a calendar spread for Disney, and I were to go, say, like 60 days out, more like an institutional trader, with the IV rank that it is right now, how do you think you guys should approach that? Because I think that'd be a good question for what was in congruence with your last slideshow.
You want to take it? You want me to take it?
No, go ahead, Tom.
So, first of all, I don't know why you think we would treat Disney calendar spread wise any different than anybody else. But are you asking me?
Well, it's a seasonal trade, more than anything.
You said
we would look at the implied volatility, the IV rank of 23, and between the two different months, you've got October with a 29 and November with a 32. That's about 2.5 vol points. That's about our limit. It would be right at the fringe of being a calendar spread for me. Diagonal spread is more of a directional trade. I'd be happy to do that in any stock. Doesn't matter to me.
If you wanted to go longer, I'd be a little more comfortable going DSOC or DSNOV. That'd be my choice, just based on the at the money implied volatility. But I think they have earnings coming up in November. That's why. But whatever. I would probably go DSOC and then roll to NOV pretty soon.
All right. Well, sounds good. I'm going to take a look into both of those. I want to say a quick shout out to Jay Schultz and the Dylan Radigan Rat Pack, baby. You guys take care.
Thanks, man.
Thank you.
Thanks, Nico.
Thank you for your phone call. We're going to go to the Netherlands. I got Rob. Rob in the Netherlands. What's up, my friend?
Hey, Rob.
Hey, Tom, Tony. How you fellas doing?
We're great. We're great. Thanks for calling in.
Hey, thanks for taking my call. Had some questions for you guys, specifically relating to pairs trading on the futures contracts. Been doing the options for a while and wanted to dip my toes in. The first one is I'm curious because when you place a pairs order, it's a market order. Is there any time of day or night where you'd recommend to not place a pairs trade?
Yeah, I wouldn't place a pairs trade. I would not place a pairs trade. We're about to go to 24-hour trading on Tasty, just so you know, for stocks, and the futures are already 24 hours. But if you're talking about a futures pairs trade outside of S&Ps and NASDAQ, I wouldn't do a futures pairs trade anytime other than in regular trading hours. And if you're talking about some other commodity like gold, silver, corn, wheat, whatever it is, or just pick any two that you want, or even Dow or Russell. I wouldn't do any of those outside of the normal U.S. trading hours. I know that's a little bit of an inconvenience for you being in the Netherlands, but I mean, the markets are so much more liquid and they've already kind of established, themselves once the market's open. But if you wanted to do something like S&Ps and NASDAQ at night. You can get away with that, or bonds and notes. You can get away with that. It's just we don't do that, And as far as stocks go, or futures options, I wouldn't do any of those outside of the regular trading hours. I just think it's the markets are not as liquid in the option world.
Gotcha. Yeah, thanks for that, Tom. Just two more questions, if you don't mind. Short ones. When exiting the position, am I able to do the reverse pairs order as I entered in, or should I leg out of it?
No, we do what goes on as a spread comes off as a spread.
Okay.
There's no. Okay. Are you talking about the pairs trade, or are you talking about some other kind of spread?
No, a pairs trade specifically.
Oh, a pairs trade. It depends what product you're using, but for the most part, if you're using futures, you have to leg out. Like there is no such thing as the CME does not accept, a specific price on two different products. So no matter what you do, it's essentially a leg. So yeah, you have to leg out of that.
But you could use the pairs trader. And
you can use the pairs trader on the platform, or what I like to do is whichever one's a little harder to fill,
liquid is the word you're
you put a limit order in on that one. As soon as you get filled, then you just enter your market order on the other side.
We do a lot of this on the live show that we do. I know in the Netherlands, but yes.
Yeah.
Gotcha. Cool. And then very last question: how do you track the profitability of them? If it's if you're doing Nasdaq Russell, because you can't group them, how do you watch the profitability?
Yeah, that's the challenging part. Obviously, you're going to have to watch you either have to determine the price that you do it at, which you can do, or you just watch your open P&L for both those trades, because there's no options associated with or anything else. So you can kind of see your P&L and you kind of know where you did it. But it is a little bit challenging because you can't necessarily group them as a pair.
Yeah.
Mm-hmm. Okay. Those are my.
If you do it 1-to-1, it's pretty easy. If you do it like on some ratio, it gets a little bit more complicated, but you could still figure it out by price.
Sure.
Yeah, I'm currently having some fun just at least tracking the Nasdaq Russell intraday.
Yeah.
Seeing how the price moves throughout the day.
Yeah.
So before I pulled the plug, I just wanted to call into you guys to get some advice on those.
Yeah, that spread, that spread's really kind of widened Nasdaq over Russell recently, and so a lot of that's a trade where you got to just be careful of the ratio. I don't know if you're using the micros or the minis, but whichever one you're doing, that one tends to be around. And again, you can play with whatever numbers you want, but that tends to be 2 Russell to 1 Nasdaq.
Oh, 2 Russell. Oh, I was doing 4 Russells because the notional value was more or less the same.
You're not going to want to do 4-to-1. You can do 2-to-1. Okay. We usually like to say a little bit, whatever, you can do the proper ratio, I believe right now is like a little closer to 2.5, but so you can do 2-to-1 or 3-to-1. I would not do 4-to-1.
Okay. Clear. All right, gents, thanks so much for your advice here and for the show. Really enjoy watching you guys.
Thanks.
Thank you, man. Really do appreciate it. We're going to go to Connecticut. Jack in Connecticut, what's up?
Hey, how you doing today? I've been thinking about this Fed meeting coming up, and obviously everybody's banking on a rate cut. But it seems to me that the Fed could come up with just as many reasons to not cut, and adding to that, maybe Powell would love to flip Trump the middle finger. What do you think, and how do you think the market would react to them just holding steady?
Well, of course, anything can happen, but I think that it's a foregone conclusion that they'll do at least 1/4 point this time. You've had a monster rally in bonds and the 10-year and the 5-year and the 2-year. there's no chance in order for the Fed to get their numbers correct with where the marketplace is right now, they have to do a cut. Like it's not the Fed.
Like the market doesn't look at the emotional part of it.
Right. I mean, I think Powell wants to tell Trump a lot of things that can't be said on air. You know, they obviously,
That's what I mean, yeah.
they obviously hate each other. And I'm sure Powell, you know, in outside of a public scene would want to tell him what he thinks. And Trump's been very public about what he thinks about Powell. But that said, the Fed has an obligation. They're an independent agency with an obligation to match where the marketplace is. And the marketplace now has built in a 25 point drop, a plus 25 point drop. So it's not, it's a given. I think it's a given 25 and it could be 50. I don't think it has anything to do with, like Tony said, the emotions or the personal side to it. I think Powell is a professional. He's got a job to do and they're just going to do their job. And
a lot of people have hated each other in politics, Fed versus president or anything else like that. But you have a job to do and that you normally do. Well, forget about that emotionally. Let's just go to the numbers. When the Fed watch tool has been over 60%, it has never been wrong, or 65%. It has never been wrong. And I think it's closer to 80% right now. So I'll go with those odds.
It's just priced in already. And the Fed has to keep the actual bond. The Fed has to keep their interest rates in line with where the bond market is when they have their meeting. They can't be way out of whack. So that's all it is.
Gotcha.
Yep.
Okay, I think I got you. Thank you very much.
Sure.
Have a good
You
one.
got it, man. Good luck to you out there. I'm going to go to Dallas, Texas. I got JW in Dallas.
Love all the new callers today. Hey, JW.
Yeah, hey, thanks. Yeah, can you hear me?
Yeah.
Yep.
Hey, thanks for having me on. This is probably a question you've heard over and over, and I think I speak for everyone when I say options trade today every Tuesday and Thursday has changed the way the world looks at options. It's made trading mechanical sexy again. So what do you guys think the chances the network turns options trade today into a feature film or documentary for Netflix or one of the big studios does it? And that's all the question I have.
Sauna, if he wants to know, maybe you didn't hear him there. He was breaking up a little bit, but option trades today every Tuesday and Thursday. What do you think a documentary on that podcast?
J-Dub, are you drinking? Yeah. Have you been drinking this morning? Like, I mean,
just
a little bit, right?
Just drinking off options trade today material.
Other than drinking the Batista Kool-Aid, which is something that's sure to kill you, just so you know. Yeah, you got to stay off that stuff, man. That moonshine crap, that'll kill you. Yeah.
Maybe someday, if I get rid of Sosnoff in the near future, we can have that documentary in production.
I think it would be a Charlie style one, but
the people want it. The people get it. That's all I'm going to say.
Yeah.
We're a people.
Thanks, guys.
Thank you, brother. Appreciate it. Sosnoff, we're going to take one more. I'm going to go to Nashville. I got George in Nashville. Thank you so much for calling.
Hi, good morning.
Hey, George.
I've started to dribble or stumble into the crypto world a little bit. And the thing I'm confused on is if I buy, let's say, Bitcoin, and then I want to put that money into Ether, I don't see where there's like a direct hook where you do it. It's like you have to sell first, you sell the Bitcoin, and then you buy the Ether. So am I assuming that cash all stays in the
Are you doing this?
There?
Are you doing this, George? Are you doing this in your Tasty account, or are you doing this in your Tasty wallet?
Well, I didn't know there was a difference. I mean, I did it. I went on and went into the Tasty Trade platform.
Perfect. If you do it on Tasty Trade platform, yes, you have to do them as two separate trades, right? Because that's just there's no such thing as in the U.S. There's no such thing that spread doesn't trade. They're both cash markets. But if in the future, if you want to explore, we have something called Tasty Crypto. It's a crypto wallet that we built, and inside that wallet, there are swap markets, and the swap markets will let you. They basically present a market on Bitcoin to ETH and ETH to Bitcoin and a bunch of other potential swaps. So there are markets out there in the crypto world, but they have to be done inside of your wallet, not on the platform. Now I would say there's only a few hundred people. We have hundreds of thousands of people that trade on Tasty, and mostly everybody does it like you did it this morning on the platform. If Tony or I were to do it, we would have done it the same way you did it on the platform. Okay, so don't think you did anything wrong, because you did. We would have done it the exact same way. But there is a way, if you wanted to explore it, there is a way where you can do it as a swap on the inside of our crypto wallet. And there's a ton of information on that. If you just go to, I think it's just Tasty Crypto. Beth, is it just tastycrypto.com?
Checking.
Okay.
Yeah, let me check. Okay. Let me check with her. And we do also have a support team for that. And they're great, and they'll be happy to answer any questions you have at Tasty Crypto.
It is tastycrypto.com.
Tastycrypto.com, and it's also support at tastycrypto.com, because we have a dedicated team to that wallet that can answer questions if you want that swap market. But the way you did it on yourself, that's the easiest way to do it. Just keep it all in the same place.
Mm-hmm.
Okay, so then if I understand correctly, there's no fees for doing that.
There is
only
not.
If I take it out of the crypto site and put it back into my options account.
No, there's no fees for that either.
Oh, okay.
There's no fees, because when you make a crypto trade, what happens is the fees, the money that Tasty makes is built into the bid-ask spread, so there's no commissions at all. And so it's not, it's you're still in the end, they're still paying something, but we get the money from the market making firm, not from you.
Got it. Okay, well, thanks so much. I appreciate the help.
Sure.
You got it, man. Sadnov, I appreciate your help today. EMS&Ps appreciate your help too. They're up 35 near the highs of the day, about $1 off of the highs. Volatility in by 18 cents. We'll take a quick 90-second break and come back. We got more Tasty Live with more Tasty Live right after this.
Welcome, everybody. It's another episode. It's another rising star, and I'm looking forward to this one today. Another Florida boy. Will, how are you?
Florida man.
Florida man. Florida man.
Very good, Tom. Thanks for having me.
Florida man. Does that mean like you fight gators? Like you?
I have a pet alligator, and no.
You were gonna.
I couldn't bring him for the trip.
You were gonna totally freak me out if you said you had a pet alligator. I watched a lot of.
They wouldn't let him on the plane, so.
When you got out of school, you really wanted to get into the world of finance.
Yes, actually, my whole passion was the stock market, and that started way back when I was 12.
What 12-year-old wants to start the stock market?
My best friend at the time, his name was Tommy, and the elevator's doors opened, and he opened up this magnificent penthouse, and I said, what does your father do for a living? And he said, he's a stockbroker for E.F. Hutton. And that's when they had the commercials, my broker's E.F. Hutton, when an E.F. Hutton talks.
Sure.
And back then, the whole stock selections were like a well-guarded secret, shrouded in mystery. And,
very much so.
And I had to find out just what this business was about and how it operated, and that just started just a lifelong learning process.
It's so funny. We have so many viewers now that are younger that have no idea who E.F. Hutton was.
Oh, it was great.
They had great commercials.
Yes.
But totally a different era. So when you got out of school, you just decided, hey, I'm going right into this field. Where'd you get a job at?
Oldie Discount Brokerage. It was a controversial brokerage. My first day, you know, I got a bachelor's degree in finance, and then from that point on, I learned, you know, cost benefit analysis, cash flow statements, balance sheets, and they said, "That's your desk back there." They kicked the chair out. They said, "I don't want to see you sit down till lunchtime." I got a script, and I got a list of phone numbers.
Smile and dial.
Smile and dial, and it was brutal. So
Brutal.
yeah.
And it wasn't quite as sexy as you imagined.
No,
Penthouse.
it wasn't Wall Street. I wasn't Michael Douglas.
No.
So,
And it was, and I kind of remember Oldie Discount Brokerage.
Yeah.
But I don't really remember their whole story. You know, they're obviously, they get bought out or they went out of business.
I think the latter, to be honest.
So did E.F. Hutton, by the way.
Yeah.
Yeah, but they didn't make it either. But when I first got out of school, I got a job with Drexel.
Right.
And so very similar. Like that was my first gig.
Right.
It was your first gig. And I didn't, you know, mine was a little bit different, but I lasted 6 months before I moved to Chicago. 6-7 months. And I moved to Chicago to trade. How long did you last?
In that particular job, I hung in as long as I could. They probably 6 to 8 months.
That's not that long. I mean, that's the same as
no. It wasn't going anywhere. But
hard to make a living.
But I just had to find a way to be around the market, and it was just a passion, and that's like a dream that never really died.
What happens sometimes is when you get to inside the brokerage business and you kind of see how the sausage is made, it gets a little bit, I mean, in the pure retail, the old retail side where it was kind of the smile and dial, you know, type of era, it's a little bit depressing.
Yeah, and I didn't really, in that particular case, I definitely didn't agree with a lot of the recommendations that they pitched to clients. You know, and I figured
whatever's in inventory.
Whatever's in inventory, well, there was specific stocks they made more money on.
Yeah,
and that's
I'm saying. Yeah. Whatever had the biggest spread.
Exactly.
So did you trade options back then?
I got into options trading way back when. Shortly afterwards, I had to scrape some money up. After college, I had student loans, which I paid back. And it was different because for the retail investor back then, you didn't have a screen in front of you. You would have to call physically, pick up the phone and call your broker and find out what the bid ask is. Yeah. There was a lot more to it, so it was difficult and also a little bit more costly than it is, a lot more costly than it is today.
My first option trades were $25. The trade itself was $25, and then I think it was $5 an option on top of that.
Yes.
That's when I was an employee of Drexel. So when I got to Chicago to trade on the floor, and it was basically you could trade as much as you want for, you know, whatever, 25 cents or something, I was like, okay, this is good.
Yeah. I had to figure out a way to try to get there. And
so what'd you do next?
Temporarily, I had to push the stock dream aside, and I had to get a regular job. Like,
what was the regular job?
The regular job, I got into banking, just retail banking. I worked my way up to auditor. And with banking at that time, there was so many mergers.
Yeah.
The real money makers were the guys who changed the signs.
So you went from retail brokerage to retail banking.
Yes.
And from the retail banking, then what happened?
From there, I actually moved to Lake Placid, and I got into real estate around 2000.
Lake Placid, Florida.
Correct.
Nobody had ever heard of Lake Placid, Florida.
Well, that's because you don't know much about caladiums.
That's correct. That's correct.
Yes. And I started with real estate. even then, I started trying to trade. A lot of my trading, though, it really became more user friendly as the internet evolved.
So what year are we now? Like, can I say your age?
Sure.
55, right?
55.
Okay. So what year are we in now?
We're looking at the mid to late 2020s.
Okay.
And I ran across a subscription service that showed option flow.
Okay.
And actually had a really great year. One of the best years I had was, and I was trying to pin it down. I knew you were going to ask, either 2017 or 18. There was an unbelievable amount of call flow in Amazon, and I didn't have much in the account, maybe $5,000. I bought 3 contracts for $1,500 a piece.
That's a lot.
Well, for that size account,
Yeah.
but it's a very small account. It ran into earnings, and the very next day, that account had a balloon to like $28,000.
And you're thinking this is easy.
It was easy, and I was born to do this, and all the things that make your ego go.
This is 2020.
This is about 2018.
Oh, 2018.
Yes.
Okay, got it.
And that account had blown up to $102,000, and
From 5,000.
from 5,000. Yeah,
That's pretty cool.
It was cool, but
Now you're really thinking you're a genius.
I'm thinking I'm a genius, but I really knew nothing.
Right. No, I understand that.
You don't realize that you don't know nothing until.
No. You had $100,000 from 5,000. You're thinking you're a genius.
I wanted to tell people that had been trading for years, give them pointers. And
I'm sure you did.
And I believe the market gods saw that, and they frowned on me and said, let's correct this guy. And
What happened?
well, I did spend some of it, and I did pay my taxes that year.
Okay, let's go.
And then, yeah, slowly but surely, within a year, I blew that account up.
Okay, so you blew the whole account up.
I blew the whole account up, and that's
Okay, so now the genius is off the table, and what happens? This is when genius fails.
yeah.
So now what's next?
We're determined to learn technical analysis, moving averages.
Okay.
It's more than just realizing, hey, this is a bull market. There's a lot of people like me who make a ton of money.
So now you're in like 2020-ish?
We're in 2020-ish. We're trying to build the account back up.
How are you supporting yourself?
Real estate.
Real estate.
We're doing real estate during the bear market, I believe 2022.
Yep.
I had a lot of listings. The real estate side was good.
Well, Florida real estate at the time, I mean, I don't know so much about Central Florida, but the Florida real estate at the time exploded in that
Correct.
multi-year period.
So that was a welcome distraction, mostly because I didn't make any boneheaded trades. But I kind of noticed that during that time, you could make money on the short end as well. And I started dabbling in that. I didn't grow the account exponentially, but I was like, well, I have a profit for the year in a bear market. And that kind of had given me a lot more confidence because I knew I could trade a bull market.
So here's where we are. So we have this story of this guy that from 12 years old on has a passion for the markets, going through college, getting a little bit disenchanted with the first gig out of school, but then, staying involved the entire time, basically, your entire adult life. And then at some point around, because I got to get to the meat of this thing, at some point around late 2024, you decide, almost, let's call it November, December 2024, you decide it's time, I'm all in.
Yes, and then there was real estate had become kind of a distraction.
Yeah.
I had positions on, I remember, and I had a $10,000 profit intraday, and someone would come into the office and wanted to see a house. When I got back, I lost 5,000 or 6,000 of that profit had gone. and my focus wasn't there in front of the screens the way it needed to be.
So the reason that you're on the Rising Star segment is because of what you've done in 2025. Because we care about like the most recent stuff. And this is what's really interesting to us. And I'm going to cut to the chase, and then we'll come back and talk about all the different things you've done. But in 2025, Will turned $100,000 into $250,000. That's your Rising Star.
That's correct.
Yeah. And it's been very consistent, you know, for essentially this entire year. And it's a great story of finally, you know, being very passionate about something, but then finally, you know, having an opportunity to focus on it full time.
Yes.
And then to realize, oh, I'm actually proving concept.
Yes.
In real time.
Yes, it's a great feeling. It's about a passion that I never went away, and it's about a dream.
So, what do you mostly trade?
I trade mostly equities. I do ETFs.
Do you prefer listed equities or ETFs or futures? Where's the kind of the core of your positions?
I've considered trading futures, but I haven't warmed up to it. I think I found what works for me. I do enjoy trading leaps, and there's a strategy that you can use where you would sell when you have the initial debit. If you have 10 contracts, and let's say it's 2,800 a contracts, 28,000. Just I don't know where those numbers popped in, but they did. You could sell maybe 2 weeks out if they offer a weekly.
Classic poor man's covered call.
Poor man's covered call, and reduce that buying cost. Now, there's times you don't really want to do that. Earnings.
But what like give me some examples of some of the stocks you're trading.
Right now, I'm mostly cash. I trade the stocks where actually the options flow leads me to where the stocks.
But are you trading mostly like tech stocks, or do you not really care?
It could be. I try to look for names that you don't see every day, and where you see heavy call activity, and usually in a perfect world they'll be hitting longer dated calls.
Are you mostly on the long side? Are you mostly bullish?
I'm mostly bullish, yes. When I trade, I have shorted the market. Usually that's intraday. Zero DTE is part of my strategy, but I trade very, very small.
We trade zero DTE. What are you doing, SPX or?
I'm doing SPY. I'm doing triple Qs. Those are the two that I mainly stick with.
Okay.
Sometimes maybe T, triple Q, things of that nature.
Are you doing that just more for engagement, or is that for, has it been working to make you money?
It has been working. I'm still fairly new to that. It's something that I try to more like less scalp trade.
But you do like short-term directional trading?
Yes, I do.
Okay, so what does that, how do you do that?
How do I do that? I follow the flow. The options flow is a very key ingredient into where it's leading me. Which names I'm selecting is also based on the options flow.
Okay.
I just don't.
So you found yourself a little niche.
I found a little angle, a little a little edge.
Yeah.
Yes.
Yeah. I'm going to argue that bull markets are helping that.
Yeah.
Yeah. There's no question about that, more so than for maybe, because option flow statistically doesn't really help. But if you believe that it does and it's working, then you keep doing it,
yeah.
which totally you should. But when you do something short-term directional, you're selling puts, you're buying call spreads, you're just buying the outright. What are you doing?
I'm buying the calls outright. And sometimes if I feel a stock is not going to fall and there's bets placed directionally that is going to rise,
yeah,
I have sold put verticals for credit.
Yeah, sure.
And I'll stick to that side versus the call side. If I feel a stock is perhaps in a channel and is not going anywhere, that's when I put on the iron condor.
When you do let's go through some of these strategies because I think that's what people like to. I mean, to go from 100,000 to 250,000 in what are we in month? Just the beginning of month 9 months. Yeah, 9 months. That's more than just a couple of iron condors.
Sure.
And that's more than just, some credit spreads. I mean, you've taken some directional risk. There's no question.
Absolutely.
Yeah. Okay. And are you trading every single day?
Yes. And the other day I was just looking at, I said, well, guy, I must place about 6 trades per day. There's 250 days in the trading year. Well, that's 1,500 trades a year.
Yeah. 1,500.
Yeah.
Yeah. Are you adjusting those trades once you put them on?
Yes, that's part of the.
When you do adjustments, you're adjusting them to do what?
We're either rolling up. If it's long, rolling down is something I kind of frown upon, but it can happen. If I'm in a leap, I try to stick to 80 delta. If we're moving in the right direction, I might roll that leap up, take a little money off the table.
And what do you sell against it? What delta?
I don't, as far as covered calls against it.
Yeah.
What I use is I'll look at the chart more than I look at the delta, if that makes sense. And if you can pick a spot where the stock, that area is of significance, if we break higher, I will buy back the calls I sold and double down on the direction of that particular shorter term call.
I can't tell you how much I hate that idea, but
I've seen it work though.
If it's working for you,
I've seen it work, Tom.
I believe you. I believe you. Listen, like I said, bull markets help.
Yeah. It can be done on the put side as well.
No, I understand. Sure. Yeah. It's a very aggressive, trend type of trade.
Yeah.
Yeah.
Well, I think the key is it has to be in an uptrend. What you're trading.
Sure. I mean, it can also work in a downtrend, but yeah, same. But you have much shorter windows.
And there are iron condors I put on where I use a much lower delta, maybe 20, possibly 30, but it all depends. I don't always go by the 45 day.
Naked options a lot?
No, never.
No.
The only time if it's a position I want to own,
yeah,
I will sell a naked put.
Sure.
And if I get filled, I'm just as happy.
And when you said you're, let's just say, are you ever? Better question: are you ever buying the underlying?
Yeah, I do. I do trade common as well.
You do?
Yeah.
Okay, so you'll buy some stock. When you buy stock, do you sell calls against it?
Based on a scenario, yes, it can. It's not automatic though.
Okay.
If it's a short-term trade, obviously I'm not.
So where do you think most of your profits came from? From Delta?
No, actually, I think just mostly directional trades and probably call options, managing the leaps, sitting patiently, selling premium against it.
What underlyings have been best to you?
My biggest trade of the year was a company called Pure Cycle Technology, PCT. I noticed options flow in it out to January. And it's kind of typical to the strategy. I knew Stanley Druckenmiller had a position in it, and that helped.
Did he call you?
I'm waiting. I'm patiently waiting. I think it's going to happen, Tom. I really do. But I bought 100 contracts.
Do you think he's telling people that you bought the stock?
I never thought I'd meet Tom Sosnoff, and then, who knows if Stanley's next.
So what'd you do? You bought 100 contracts?
I bought 100 contracts. I paid $94 a contract. You
mean 94 cents?
94 cents. Yeah. It depends if the dealership.
Yeah. 94 cents contract.
94 cents.
It's a good $9,400 shot.
Yes, and he doubled his position. Upon that, the stock, there was a great deal of short interest in the stock, and it took off. I sold that position for oh God, 580 to 610. I sold half at 580 and half at 610.
It's an unbelievable trade.
That's an unbelievable trade. But I don't want to base my whole profits on one or two, you know, because it's been a lot of little consistent base hits too.
That's an unbelievable trade. So here's my question to you: How do you hold on to that trade?
One of the biggest lessons that I learned. There was a guy who used to be a member of the chat room I belonged to.
Okay.
Excellent trader. And what he said was, your worst trade is the trade you put on right after your best trade. So when I have a trade like that, I thought about it for a long time.
Your worst trade,
yes,
is the trade you put on right after your best trade.
Correct. And the more I thought about it, it's true, because I try to take the emotions out of trading. When we think emotions, we think about revenge trading. We think about, I've had a bad day, I need to get some more money. That's not a good mind state to be in. But we never think about all the adrenaline, testosterone, serotonin, dopamine that's flowing through you after you've had a big winner. So what I do is I take a few days off just to calm down. And then when I can see the market clearly again, I will go ahead and take it up again.
That is very interesting, because I can't, my mind doesn't work that way.
I understand.
Totally different. So it's, I love hearing these stories. So now you're not bitten. You're now all in. Like, this is not a passing.
There's no going back.
That's right. There's no going back.
We've gone too far.
This is the rest of your life now.
Yes.
Yeah. You're prepared for this?
The ups, the downs. I've been on both sides of the coin.
Right.
Yes.
Right. But you're committed now.
I'm committed.
Yeah. This is, there's no more 2 o'clock showings in the,
no, we're down to one listing. So there could be, but
So how do you grow from here?
Well, I mean, if you size up and you get lucky, it could be 1 year, but that's not my strategy.
I don't want that to be your strategy.
No. Although I like a mill. I think just being consistent, watching your position sizing.
Consistent are you?
Yeah, it's been pretty good this year.
Obviously, yeah, but I mean, do you look at things like, I mean, because you're not really trading very probabilistically, it's a little different approach. You're much more, there's no question you're directional.
Yes.
Which there's absolutely nothing wrong with that, but that's a little less than, I should say less. It's a little different than a probabilistic approach.
Yes, no, it's a different strategy.
Yeah.
Most definitely.
Are you trading any of the big name companies, or some old?
Yes. No, I am. I do trade, for example, Broadcom was one recent winner.
They had earnings on Friday.
Yeah, I try to avoid the earnings.
You do.
But I should have played that one for. I was going to evidently.
Yeah, evidently.
Yeah.
Yeah, they hit it.
I'll do that. Google is another. But it's usually the flow that guides me. I'm in a room with a lot of really good traders.
In a chat room.
In a chat room.
Now, did you trade? You traded in 2022, which was a down year most of the year.
Yes.
How tough was that for you with a bullish bias?
I thought about that a lot, but it's just the ability. I was very busy with real estate that year.
Yeah.
And I did have some things personally with my mom's health. However, intraday just simply became one of the 3 strategies I use. One for income, which is iron condors, put credit spreads, call credit spreads. Sometimes I just pick one side, and sometimes I put the full iron condor. I find that to be a pretty decent income. And then there's both leaps and call it selling premium against leaps.
Yeah.
If a situation where the market doesn't look good, and that's the whole key, is you have to know, and well, that's the $1 million question. Not everyone can.
Do you let me know when the market doesn't look good?
I wish I could.
Because We're pretty much at record highs right now. So
Yeah,
you gotta let me know when the market does.
I'm heavy cash, but it doesn't mean that we can't melt up into the end of the year either.
No, of course not.
So you have to have an unbiased look when you're trading the market.
Do you come in every day with a relatively unbiased look? Like every day you start, in your head, you start over? Yeah.
Yeah.
That's the smart thing. That's the smart thing to do. And do you think you're going to incorporate any more either strategies and or underlyings this year?
Yeah. I mean, for example, GLD is one that I sold a put credit spread against. I saw some activity on the call side, and I said, well, I don't know.
What, the gold ETF?
The gold ETF. I'd like to look at. I noticed a video in which you showed the different correlations between the S&P. That was very good, by the way. And in a bad market, those are options as well, from natural gas to
Yeah. This has been great. Will, this has been, it's hard to come here and share your story in 30 minutes or less. It's a challenge, and I think what you've done in 2025 is an exceptional story of passion finally paying off, and hopefully you can continue that into perpetuity. So you got a lot of time left, and so you got to do this forever.
We hope, yes.
Yeah, you do. So thanks so much, and enjoy your time in Chicago.
Thank you, Tom. Appreciate it.
Hello, everybody. We're back again. This is going to be a fun episode today. We're going to do a future store. Anthony in the house. How are you?
I'm good. How are you?
I'm good.
That's good.
I'm excited you came up here. You're a Florida boy.
Yep, all the way from Panama City. So we're very excited to be here in Chicago with y'all.
I'm glad you came in. And we haven't done a future store segment in quite some time. And I love these because there are some kids that I had their first interview when they were 12, 9,
yeah, pretty young,
15, 16 over the years, and they're all still trading.
Right.
They're all still trading. So the good news is you're doing this at an age when you're probably like one in a tiny handful of kids in your school.
Yeah.
How many kids go to your school?
Probably around like 200 now, maybe 300, because school's still growing because it's so new.
Oh.
But yeah, so very, very small amount. And even smaller that, have even looked into investing. So
Sure. And you're going into 11th grade.
Yes, I am.
Got it.
Junior.
If I was to say, hey, what's your favorite, like what do you excel at?
I'd say I really excel at math. I like math, yeah.
And that this is like a Tasty and really for trading, it's just a big math game.
Yeah, exactly.
Everything we do is pure quantitative probabilities.
Right.
That's
pure numbers. That's why I think I was able to fit in so well with this, because it was numbers, and I'm used to that.
It's just a crazy numbers game, and it doesn't. In the world of like stocks and futures and any other kind of like asset, let's say, it's very black and white. Like if it goes up, you make money, and if it goes down, you lose money.
Yeah.
That's it. In the world of trading, it's completely different. It's all strategic, so it is all numbers.
Yeah.
And all the numbers are kind of you can back into probabilities.
Yeah, exactly. And I really like how you can still make money if you're wrong, but you can also lose money if you're right. So you can make money and
that's my line. Use that line like other times.
Yes, I've heard that a lot.
Yeah.
Right, but you can make money in bullish markets, standing markets, and even bearish markets. So it's very nice.
How long have you been following the stock market?
Probably around a year and a half now, maybe 2 years.
Yeah.
So
are there certain companies you like, or do you care what you trade at this point, or is it just?
Well, normally I like to stick to tech and companies that I hear about, like Chipotle, Intel, things like that. So bigger companies, more liquid too, and so yeah.
Just companies that you recognize.
Yeah, exactly.
Yeah.
Right.
Do you trade any indexes or anything like that?
Sometimes the S&P 500, but no, not too many indexes.
Okay, so you're going into 11th grade. You started trading maybe like halfway through your 9th grade and then all the way through 10th grade.
Right. Yeah.
Okay. A friend of your parents got you involved.
Right. Right.
Okay. And he's a trader.
Yes, he is a big time trader.
And he talked you into it.
Yeah, he basically talked me into.
What kind of psychopath talks a 16-year-old, a 15-year-old kid into trading?
A very persuasive psychopath. I'll tell you that.
Okay.
A very persuasive one.
All right, that's good. So very persuasive psychopath talks you into starting to trade when you're 15 years old, which I actually love. And do you remember do you remember going to your dad and saying, like, because you didn't have any money, right?
Right, yeah, I had no money at the time. I couldn't even get a job.
Okay, well, yeah, I mean, you're 14, 15.
Right.
And you went to your dad and you asked for what?
So I basically, I asked him for some money to get to trading with, and he had told me that if I was able to show that I was actually, willing to commit to this and to do the research, that he would give me some money to start off with.
Because I'm not sure if my 14-year-old son or 15-year-old son, who hasn't at that point even learned to hit the toilet, when I would be confident in giving him money. So I got to give your dad some kudos, because I'm not sure that I would have done that with my own son.
He was not confident either. In fact, he told me, he was like, "Son, I know that you're going to lose this money," because with any kind of market, only like 5%, I think it is, of traders are actually profitable throughout the year. So
it depends. The statistics vary with, it could be as much as 40%, 45%. It could be as much as 5%. Depends on product, style, everything like that.
That's true.
How much money did you ask for?
Well, I asked for around 3,000, because I saw that was really like the baseline, right? Basically the minimum to get into trading. And so he said, "Son, I know you're going to lose this money, but I want you to go into this being able to learn from the kinds of strategies you do, and to be able to really pick up from this." Because he said the goal for me was to not try and make money, but it was to try and learn really that I was doing, right, in trading. So
You got a good dad.
Yeah.
He believes in you, because I'm not sure I would have done that with either of my kids, and they're both pretty successful now. But I don't know. I don't know if I would have done that. So he gives you 3,000. Now you're obviously trading in his account, but he gives you a couple thousand trade. He doesn't trade.
Right. He does not trade.
Does your mom trade?
My mom doesn't trade either.
Okay.
No.
So you're on your own.
Right.
You got this one friend of your dad.
Right, one mentor that's giving me, decent advice, but nobody in my family trades.
Right, okay. And giving you some decent advice, and you can obviously reach out to him by email or call him if you have any questions.
Yeah.
So but you're still pretty much on your own.
Yeah.
What's your first trade?
My first trade, I think, was an iron condor on Meta for their earnings, because I dropped in around earnings.
Oh, so you went straight into the heavy stuff.
Straight into it.
Okay. You do a Meta earnings trade.
Yeah.
And did Meta blow up either way? Was it a crazy?
It did actually blow up. Yeah. So my first trade was
a full loser.
Yeah, pretty much. Full on loser.
Full on loser. Then you're like, oh, this isn't as easy as I thought it was going to be.
Yeah, it was very rough on me.
Okay. Before I get into a lot of the fun stuff, how long did the $3,000 last you?
It lasted probably around, I want to say, 6 months, maybe.
That's not bad.
Yeah.
6 months, and then you blew up the account.
Yeah, and then I just blew it up.
As you were in the process of blowing it up, you kind of realized that you were blowing it up.
Yeah, pretty much.
At some point, you probably doubled up to catch up.
Yes, I was.
All the classic mistakes.
Yep, exactly. I was panicking. I was like, I need to get out of this. I can't be I was worried about letting my dad down, even though he had told me he knew I was going to lose all the money.
Now, was he tracking you this whole time?
He would ask me how I was doing, every week or so.
He didn't actually look at the account.
No, not really.
No, so he's just asking how you're doing.
Yeah, exactly.
And are you trading all the time?
Yeah, around like once, twice a day, couple more. Yeah, more or less.
So you're making a lot of trades. You're learning.
Yeah.
But you're not doing very well, and you're
no.
And you realize that you're in trouble.
Yeah, exactly.
At what point, after you kind of blew up, did you let your dad know that you blew up?
It took a lot longer than the day it happened. I'll tell you that. It was probably like maybe a week after, because I I was so worried about it.
But you came clean.
Yeah, I did come clean. He did find out eventually, and it wasn't by looking at the account. I told him. So,
You know, when my son was growing up, and he scratched my car, a nice car.
A nice car.
Yeah, and he scratched it like whole side. And
Oh.
came home, I saw my car, and I'm like, and I didn't see the scratch for a couple of days.
Mhm.
And I said, "How'd this happen?" He goes, I don't know, somebody did it while I was parked. And I'm like, and he totally
negated from himself.
Totally. When he gave the commencement speech to his graduation,
Mhm.
and he copped to it in front of everybody. He goes,
Wow.
Dad, I scratched your
At the
car.
graduation
So
speech,
anyway, yeah, it took him like 2 years.
Oh wow.
So a week's not bad.
Yeah.
Okay, so you tell him, okay, and what does your dad say to you?
He said he wasn't surprised. You know, he knew it was gonna happen. So, but
he probably said cheap lesson.
Yeah. It was. He said it was a good lesson that I learned, but that he wouldn't help with funding me anymore, because he had looked at the kind of poor decisions that I was making towards the end. You know, with trying to catch up, and because you know somewhere during that period he said, you know, if I was able to actually, you know, prove that I could
prove concept.
Yeah, prove concept, that he would try funding me a little bit more, and this was basically proof to him that I wasn't capable of holding on to it. And so I felt super defeated. You know, I was like, darn, you know,
Are you competitive?
Yeah, I'm a very competitive person actually. So this was a really sad moment.
You do what kind of sports?
I do jiu-jitsu. So
I don't know a lot about jiu-jitsu, but do you like have?
It's like a physical chess, sort of, in a way. And
so do you fight other people?
Yes. So you spar people, and there's all these different kinds of positions, and you know, I kind of like to think of it as the physical chess, because you know there are situations in which the opponent is up against you, even though you might have not totally lost. They're up, you know, you have an advantage up on them, and so it's, you know, it's a very competitive sport, and it's not really team-based.
So you're super competitive.
Yeah.
So now you're mad.
Yeah, I'm very mad. And so,
how about your friends? Do they think you're crazy?
My friends think I'm crazy. Yes, they were like, this. We knew this was gonna happen. You know, like you, you like this couldn't. They were basically telling me that this was proof that it was basically just gambling. You know?
Did your dad's buddy offer to back you, to fund you?
Not necessarily, and I didn't want to go to him for backing, because.
But you still like trading.
Yes.
You're
yes,
just
very
mad
much so.
that you weren't
Yeah,
successful.
Right. This is a defeat.
So your dad says to you, if you want to trade, get a job.
Yeah. Well, I came to that on my own.
Okay.
But yeah, he had said that the account is still, you know, you can still manage the or not, you can still manage the account, and so I thought to myself, you know, I'm gonna go in January, I'm gonna get a job, right? Because that's when restaurants pick up. And so I went to my my local pizzeria.
You're 15.
Yeah, I'm 15 at this time. So I wasn't.
You work at 15? I guess so. Yeah.
You can, but it's a lot more difficult than 16, right? Because you don't have a car that you can really drive to work.
Oh, how far do you live from the pizzeria?
I mean, at the time, it's like a golf cart ride, because it's right outside the community I'm at. So it was perfect that they picked me up. So, but yeah, so I drove my golf cart there probably around April of this year.
By the way, only in Florida can you drive a golf cart to work. Okay, in Chicago, that doesn't.
It would not work around here, not in this city.
You can't drive a golf cart. Nobody does that here.
Yeah.
Yeah.
So I guess it was good that we lived in Florida, or we live in Florida.
So you drive a golf cart to the pizzeria.
Pizzeria.
How much they paying you?
They pay me around 11, 12 an hour.
So $11 or $12 an hour. That's a lot of hours you got to work.
Whole lot of hours I was working.
You get tips.
Yeah, and I'll tell you, since there's a cap on how much you can work during the school year, it was not fun. It was really tedious.
How much money did you make?
Over the next couple months, I made around $3,000, $3,500 probably.
$3,000. You saved it all.
I tried to save as much as I could. So
that's impressive.
Yeah, I was surprised with myself.
And you put it back into your account.
Yes, I came to my dad with the bills in my hand, right? I withdrew from the bank. I told him, Dad, I want to put this back into my account.
And what did he say?
He said, go on right ahead, son. And so he took the money and he transferred it into my account, so I was back to where I was before.
That's pretty cool.
Yeah.
Yeah, that's cool. So now you're back to your $3,000 account.
Yeah.
And now you're trading like smarter.
Yeah, I came in with it. I was in the same spot, but I had a lot more knowledge than I did before. So, you know, I was able to trade a lot more logically than before, and eventually I was able to, before I had deposited the next 1,000 in, I was able to make around 1,000 on the 3,000 I had deposited.
Oh, that's nice.
Yeah, very nice.
So you figured something out.
Yeah,
You became more mechanical.
Yes, a lot more mechanical.
Now, what kind of strategies? I mean, small accounts. You're not doing anything naked, right?
Yeah, yeah.
So you're mostly trading what? Verticals, spreads?
Yeah, yeah. Iron condors, bull puts, sometimes bear calls, but yeah, mostly debit. So, or credit.
Mostly credit
Yeah,
spreads.
credit
Mostly like you're selling put spreads.
Yeah, yeah, exactly.
Okay. And sometimes you're doing both sides.
Yeah, yeah, sometimes.
Okay. And what kind of stocks you using or index? Same thing, tech stocks?
Yeah, primarily tech, you know, things that had like a lot of volume in it and that I knew about pretty well, you know, like Chipotle, Intel, things like that. So pretty well known.
And you're still doing this kind of on your own. I mean, you don't have
Yeah,
your friends.
yeah, exactly.
None of your friends are sitting by your side.
No, not exactly. After seeing what had happened last year.
Okay.
So
somehow you got your account up to like $8,000.
yeah.
How'd you do that? Did
So-
your dad give you more money?
No, my dad did not give me more money. He promised me he was not going to put anything else in.
So how'd you get the account up to $8,000?
I kept working.
Okay.
Of course.
And you kept putting the money from working.
Yes, I kept putting
the account.
as much money as I could into into the account, but in $1,000 increments, so I could still keep track of how much I had made from trading. And so yeah, I basically deposited over time, and now I'm sitting at around 10,000. So plus profits and deposits.
So the cool thing about this story is that in the last year, you're up about 25% trading.
Yeah.
And which is impressive because it's not easy to trade, you know, to get a $3,000 account, even with adding $1,000 every now and then that you're making on your own to you know, to 10,000. That's impressive. You happy with that?
I am pretty happy with how I'm doing. So
did your dad ever tell you if you get to a certain number, then he'll put more money in?
well, actually, he did tell me that if I had you know, if I ever wanted to at around maybe 12,000 or if I wanted to, he would put in the same amount that I had in, so I could have even more buying power and more things to be able to do in the account.
How often do you trade now?
Probably at least like 3-4 times a day now. So I've trade daily.
So you're kind of like a little, like you're more than a future star. You're kind of a future, you know, trading junkie.
Yeah, you can put it like that. Yeah.
Yeah, you know, you're never going to be able to stop.
Yeah, I don't think I could ever go back.
Because I started when I was in my early 20s, and I've never looked back. I was a little older than you when I first started because I didn't even know about. First of all, there was no online.
Yeah, it was a lot more niche, you know.
Well, we didn't have an internet.
Yeah, exactly.
But it's, you know, once I started, I couldn't stop. So you'll be doing this for the next, you know, 50 years. So in some capacity.
Yeah.
What do you think you want to study when you go to college?
I definitely want to study medicine right now. I want to become hopefully an anesthesiologist.
Oh, nice.
So yeah.
We have a lot of anesthesiologists who are customers here.
Really?
Doctors have a lot of downtime, and they also love trading. So this year, as you get into 11th grade and stuff, I think there'll be a lot more. I think other kids are going to get interested.
Yeah, I've definitely been. You know, actually, it's a bit surprising. Those same kids that, you know, it said you have no chance in this.
Now they're gonna say, hey, how do we get in?
They've been asking me how to get into it. So it's you know, it's been a fun journey. So
yeah. By the way, that's what always happens. We've had some, just to give you some really something to look forward to. One of the kids who I first interviewed as a future star when he was 12 is now running a prop firm in, you know, Chicago, and they've been building their own software for 4 years, and now they're running a high frequency prop firm. And it's an amazing operation that they've built, and very successful so far. So and that was, let's see, they got to be 24 now. So that they started 12 years ago.
Wow.
Same kind of story, except he was 12 when he started, and then started managing his dad's money. Another kid that we interviewed when he was super young, went on to become a full-time trader, working for a prop firm. So there's lots of stories, where this stuff wasn't just like a passing, it just wasn't some phase that you go through.
Yeah.
I mean, it's something where like either they got into the industry, like, you might, as an undergrad, you might study whatever you need to study to go into medicine. And I'm not exactly sure what's required now, but you might take like finance as a minor.
Yeah.
And or math. What we do is really just, some version of calculus.
Yeah.
It's like you can call it whatever you want, but it's all math related. So, and the other thing I think that you're going to notice, and tell me if this is the case so far, like your ability to do two things: take risk and make fast decisions.
Yes.
Do you notice that compared to like your friends?
Yes, I definitely have.
I mean, definitely learn how to take risk.
Right. Yeah. Exactly.
I mean, probably when you first started, you're like, oh man, you're like nervous about the iron condor or whatever it is.
Yeah. Exactly.
Now you're thinking like, it's just,
it's it's all mechanical. Right. Exactly. So.
And then how fast do you make decisions now?
I'd say I act on decisions I make pretty quick, but also I assess the risk that's involved. I know that there's going to be risk, but
well, that's the whole thing. You're able to. It's all part of the same process.
Right.
Like,
exactly.
Yeah. It's all the same back of the envelope calculation, but you just do it in your head.
Right. Yeah.
Most people can't do that. I mean, it's a very rare skill for a high school kid to be able to do that. Like most people overthink everything.
Yeah, exactly. So I've learned how to kind of cut most of that noise out and just be able to act on it.
Your story is like, I don't want to say it's typical because it's cool, but it's also something that I wish there was 100 of you, but there's not.
Right, exactly.
But it's a really fun story, and I think you're on your way to something special. So
I really hope so too.
Congrats on your success.
Thank you.
Your 25% return.
Yeah.
And just remember, it's just a start.
Yeah.
Thanks so much.
Thank you.
What's up, everyone, and welcome to The Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade management, and closing order. In this episode, we will cover a put ratio spread. I'm looking at something that's kind of been a hot topic recently, talking about uranium and alternative energy and whatnot. So these stocks have really gone parabolic, so to speak. If you look at URA, it's one of the ETFs that tracks the uranium space. It's had a really significant rally to the upside here. CCJ is kind of the most tradable of the bunch here. It's been a stock that people have suggested to me to look at for the last couple weeks here. I think it's an interesting one, just given that it trades at about a $50 price tag. It's a relative kind of mid-cap stock here at $22 billion. Does have earnings coming up in November, so that's something to consider, but I think it's liquid enough and small enough for me to put on a position here. And I'm looking to do something that I haven't done yet in this portfolio, which is regular ratio spreads. So we've done some broken wing butterflies, which are very similar to ratio spreads. They're just defined risk. With the ratio spread, you actually have a naked position. So how you'd set this up is you are long one option closer at the money, short two further out of the money options. You use those two short options to finance buying that long option. It gives you a risk profile very similar to a ratio spread. So for me here, I'm looking at a downside ratio spread. The stock has had a significant rally here. It can go higher, of course, but I'm going to play for maybe a sideways / slightly lower move in CCJ after the move that it's had here. So here, I would look to go around the 30 delta for the long option, maybe this 34 strike, this 34 delta here at 70 or at 48. You could look at the 47 if you'd like. Not much of a difference there. For me, you want to collect about $1 on each option so that you're offsetting the total cost of this long option. So here we would go to like the 46 strike and do 2 of those. So you can see this routes at a net credit of 59 cents. It's a relatively tight range to hit on the downside. If you wanted to, you could move this to the 45 and do this for, you know, a penny or 2 credit. You could move this down to the 47 strike if you want to be a little bit more conservative here. This gives you a break even down at 43, and that's because you have this embedded long spread here. So you're long this 47, short the 45 long put spread, which gives you a $2 range to the downside plus that credit that you're getting on entry. We can look at this on the analysis mode as well. If we go to the at expiration here, you can see you get that little extra pop of profit potential on the downside if you do get a little bit of a move down. You have no risk to the upside, and you'd keep that 40 some odd cent credit if you do get filled somewhere around here. So it's an interesting trade to have no risk to the upside, but have an extra potential profit potential to the downside here. So we're going to route this here. Let's try it like 45 cents is where I thought I'd get filled here. No fill on that. You can see the markets are a little wide here, 10 cents-ish on each one. Let's go to the 43. There we go. So we're in for a 43 cent credit here. The interesting part of this trade, too, is that you are naked a put. Synthetically, that's your risk here. So you do have the option to sell a call at some point if you'd like to collect a little extra premium here. It will give you risk to the upside, though. So maybe if we do get a little bit of a rally here, I'll sell out that call. But we'll see if that happens in the next couple weeks here. All right, so we've got an interesting position here with a couple of different options that we can play into right now. No pun intended on that. So CCJ is a uranium stock and a uranium play, and it's been on an absolute tear to the upside. $58 is where it's trading now. So the stock's gone up $8. A put ratio spread and a broken wing butterfly are omnidirectional trades where the put ratio will actually have long delta to start because you're doing this for a credit. We did it at a 43 cent credit where you're selling 2, buying 1, and you're doing this for a net total credit on the position. You're going to have long delta, which means that, you know, you technically want the stock to go higher. But when you look at a risk profile of the position, your max potential profit, and if we do the Theo or at expiration here, we could see the analysis mode here. Your max profit is actually against your delta. So this is a dynamic delta position as the stock, or if the stock had gone down and time passes, you'll see your delta actually flips from long to kind of flat / short as time passes if you are somewhere in this area of the ratio spread. So this position right now, the way you can look at this is that you could close this position out just by buying the 2 and selling out of the 1. For a small debit, a 9 cent debit here, or 10 cent, depending on where we get filled, and keep that $34 in profit. Now, I would usually say this is probably the route to go, just to free up the capital. You know, you get your $500 back, you take your $30 or $40 in profit, you know, around 8 to 10% return on capital, nice trade in the books. You know, you could certainly do that. If you wanted to take this position, we've done this with broken wing butterflies. One of the things you can consider, and going back to the analysis mode, is where your risk is on this position. So you can see we have no risk to the upside. We'll keep that 43 cents if the stock stays above our short puts at 45. But you can see we have risk below around 43, which is very far out of the money. Granted, it's 15 points out of the money. But it's very cheap to keep this as sort of a lottery ticket. And the way you can do that is similar to what we did with that broken wing butterfly in Tesla. is that you can buy in that risk. So there's two ways you could do this. You could either buy the 43 strike put. Buying this put for whatever debit you can pay here. The markets are pretty wide here, so I'm imagining that you can get filled closer to 10, maybe even below 10 on this position. Buying in this put to make this an equal with butterfly. So what this would leave me with would be a long 47, short 2 of the 45s, long 1 of the 43s. So this sort of position I would have on, if I do it, let's say for a 10-cent debit, I would have this butterfly on for a net 33-cent credit. A long butterfly for a credit, which means I'd be closing the position if it does come into value, if the stock comes down, for another credit. So it would put me into a position with basically no potential loss in principle based on my position that I put on originally. You can see it would also free up capital. The other way you can address this position or give yourself a kind of lottery ticket type position is just to buy in the risk completely. So when you think about this position, I'm short an extra put. This long put spread uses no capital because I put the original trade on for a credit. I sold that put to finance buying the long put spread. So if I can buy this 45 strike put, just one of the contracts, for less than my credit, I'll have a net credit of profit with no risk going forward and a $2 potential profit or some additional value if the stock were to come down. So this is the move that I'm actually going to take on this position, and the reason is just because the bid-ask spreads are all wonky on this 43 strike. So I'm just going to buy in this 45 strike put for, let's try and do it for under the mid price here, and we'll work our way here, for 16 cents, and that'll basically close out of the risk of the position. You could see I'd be closing out and freeing up $450 of buying power here. So let's see if I can do that. No fill there. Now the probability of getting to this spot is about a 10% probability. When you look at the delta, the probability of touch of a position is about 2 times the delta. That's a little trader hack. So very small probability that this will actually come into play for me in terms of being profitable on this position, or I shouldn't say profitable because I am profitable. Getting more profits out of this position, very, very small shot. But for me, I don't mind risking the 18 cents to potentially make 50 cents or $100 on this position if we do get that move lower. So now I've got this long put spread on, which is long the 47, short the 45. I've got this on for a net credit of $33. So I've taken in 33 cents. That is value that I've captured, and I'm long this put spread. Now, if you want to get even more risky, you could just buy back this put, and you basically own this long put for free for the next 25 days. So you can think about doing that if you want to take an extra spicy lottery ticket. But for me, this position is done with. It's closed. It's a 33-cent profit. It'll very, very likely expire worthless. We could take a look at this at expiration, just kind of walk through that position as well. But it gives you a lottery ticket if we do drift lower from here. So we'll see if we get a little bit of a pullback on that position. It's dropped about $6. We had this put ratio spread. So that put has gone from 18 cents to about 35 cents. So it saved us about 17 to 18 cents, which is marking us at a value right here of this far out of the money put spread of 36 cents. We had this on for a net credit of 25 cents. We had no risk on this position. It was a free shot. And we've talked about this before. You know, I wasn't expecting it to get to 45, but if we had a little bit of a down move, this spread might add some value to my position, and it has today. And so we're sitting here at a 34, 35 cent credit, depending on where we can get filled here for this leftover long put spread. You could certainly leave it on and let this go to the next 15 days. The only risk you have is this value that it's trading at right now of 33 cents, or wherever we get filled here. You can see the markets are moving around pretty significantly. But for me, just given this move, that we've had, about a $6 or $7 down move here in CCJ. I think I'm going to try and just take my profits here and move on to something new. So something happened here. You had some wide bid-ask spreads. This one just widened out here. I'm going to start this at where we were marked before at about 34 cents. And see if I can get filled here. It's not uncommon to have far out of the money options kind of have, wider bid-ask spreads. And CCJ is not one of the most liquid underlying. So, this isn't total shock. We're going to just work this down from here because I'm not trying to get the 11 cents. I think this should trade more so around like 25 cents would be my guess. Let's see. But we're going to work it and we're going to try and get filled here. Nope. Oh, there we go. All right, so we worked the order down to 28 cents, more than I thought we would get out of this position. This position was one that we legged out of the naked put. We left the long put spread on. That long put spread added another 20, 30 cents in value. We exited this position at a $53 profit. So a nice little trade, kind of just playing the back and forth in the market. We look at the chart, we kind of top ticked it based on when we bought back that put. Got a nice down move back to, where we originally started the trade. That value came in. We took those profits, moved on to the next trade. So good little trade for the Johnnies.
It's option. Jive.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with our friend Kai. Kai, what's up, dude?
Option.
Not much.
Jive.
Well, option Jive. Give it to us, Kai.
All right. No problem.
TikTok,
So a little bit
TikTok deal is being announced. Saved again.
Thank you, President Trump.
Sorry, Kai, go ahead.
No, that's fine. All right, so a little bit summary from last week. What happened? Definitely one of the biggest news is some major economic events. The data was not satisfied by the market, but the indices in the market still kept rallying. And SPY or S&P 500, NASDAQ, and Russell 2000 hitting new high. Dow is very close to the new high. So any news is good news for the market right now. No matter it's economic or political, whatever, market just keep going higher.
This is true. And I thought, Kai, you were going to announce that you were instrumental in the TikTok deal. That would have been a nice little feather in your cap coming in here on a Monday, but evidently you were not part of the deal.
I don't even watch TikTok.
All right, whatever.
Yeah, and also some political news. The courts ruled Trump's tariffs illegal. Something probably going to happen. Let's see if the volatility will kick in.
Mm-hmm.
So looking ahead for this week, some of the important events, right? Fed rate decision, definitely the most important one on Wednesday for day traders and zero DT traders. This is probably the most important one before Wednesday. And interesting triple witching day this Friday.
Friday triple witching, the moment we've all been waiting for.
Yeah.
Mm-hmm. What do you think of the this week? Is a triple witch day is more likely quietly keep going up, or you think there will be more volatility?
There's obviously not going to be any volatility right now with a Fed rate decision and triple witching. They have no volatility built into this market. There's the cheapest thing on the board. The cheapest thing in the world right now is volatility. Everything else is expensive. Stocks are expensive. Commodities are expensive. Digital assets are expensive. Gold's expensive. Everything to me is expensive except fear. The cheapest thing out there. So, no, I don't think anything's going to happen this week.
Interesting.
So if you were going to buy something, you'd be looking to buy fear?
If I'm looking to, well, you don't have to buy fear. You can just get short the S&P. Same thing.
Sure. Yeah.
Okay, fair enough.
And that's the reason you have to be a little bit short. That's in my opinion.
So at which level you would consider long volatility product directly?
None.
Below 13?
None. I don't like buying volatility products. I find it throughout all the years of my trading. Well, we've really only been trading volatility for the last, let's call it 23 or 24 years. And I just haven't done that well with just straight volatility indexes. I don't think I do that well.
It's a short-term trade because of the drag of
Yeah,
volatility.
but I've never gone out and bought a bunch of calls like in the VIX, just thinking that, as a hedge or anything else. I've just never done it. I just don't.
You'd rather sell futures or do anything.
I'd rather do anything else than that.
Yeah.
Got it. Okay, so indices performance, we had a pretty good week. So other than Russell 2000, everything else has more than 1% move to the upside. We had a 2 quiet week before, so last week was pretty good, very green. And expect move, definitely beyond the expect move. So the expected move from at the beginning of last week was 1.1%. If we go to the next slide, actually we have 1.6%. And right now the VIX was even lower, probably half a point lower than the beginning of last week, 15.3 or so. Right now we're sitting around below 15. So 1% in SPX, that's what we expect to see at the end of this Friday. That's
Tiny.
Very small. 60 points.
Tiny.
Yep.
And each week it keeps getting smaller and smaller and smaller. Each day keeps getting smaller and smaller and smaller too.
Doesn't this kind of remind you of like 2008 ish?
Sure, but I don't know if it's 2008 January or 2008.
Right, of course. It reminds me of 2017, where it was like the deadest year. It took the whole year, it didn't move until the following year. Exactly.
Oh, don't scare the children.
Expected move in the ES is under 14.5 points. On Friday, Nick and I did an SPX trade at 9 o'clock. It was 16.5 points at 9 o'clock, which is a half hour into the trading session. You're already a half hour before the trading session, and it's going to be under 14 in a second.
I'm going to have some thorough analysis in the following slides about the Friday's SPX performance. It's really, really tiny range.
Mm-hmm.
It's very difficult to get fill in the 0DT. You have to chase market very quickly, but it's just tough.
Yep.
Okay, IVR, major assets IVR last week. Next slide. We had a pretty quiet week, so across the board, the IVR dropped, except the S&P 500 didn't change, Bitcoin didn't change. The only IVR we saw that increased is natural gas, which not too many people trade. But most of the assets we saw, it didn't move that much. The currency, the interest rate, trading in a relatively tighter range, and the IV drop.
Okie dokie.
All right, some interesting move from last week. The first one, let's go slide, is last Friday. So last Friday, we only saw a 0.3% intraday range. That range that's calculated from the high to low. It's not like positive and negative. It's the total range is 0.3% of the SPX price. So we go to next slide. This is a 5 years intraday range, 0.3% range. There are only less than 1% of the occurrences happen in the past 5 years. So if for 0.5%, so 0.5% of the intraday range, the percentage actually increased quickly. There are 10% of occurrences. We can see a 0.5%. If we increase another 0.25%, 0.75, there are roughly one third of occurrences on every day. If we see 1% daily change or intraday range, half of the occurrences had a 1% intraday range for SPX, not ES. So 0.3 is a very small range for SPX. So pretty much 30, what is that? 27 we saw last Friday. Oh, sorry, 20.
That seems super low, right?
Yeah, very, very low. Next slide. So last week's market was quiet. The one thing that catch the eyes is the Oracle. Oracle had earnings, then gained 36%. from close to close, this is the best performance day since 1992. What is that? 27 years? No, 37 years. In 37 years. In one day, the Oracle gained 244 billion in market cap. That's greater than last week's the capital gain from Google. So one day is larger than Google's whole week's capital gain from last week. And if I remember correctly, Google was up like almost 30% too on the day after. The 5 largest single-day gains in the stock market history, the top 3 were from NVIDIA. All happened last year. Oracle, the 4th one, and Meta, also last year, the 5th one. So this is one of a big event. Not only the earnings, these are just single-day performance. And right now, the Oracle valued very close to $1 trillion. It ranks the 13th most valuable company in the world right now. Just something interesting to throw in there.
It is something interesting. Taking a look at this, the 5 largest single gains in the stock, NVIDIA is your leader in the clubhouse. And as of late in NVIDIA, like NVIDIA this morning, down around $2 and change. Although it isn't far off of its highs, it doesn't seem to have that oomph to it. The IV rank is only 4 in NVIDIA. It's quite low, expecting kind of smaller moves. So we'll see if we can keep this market higher with NVIDIA kind of losing its oomph. Not going down, but certainly losing some of its velocity.
Yeah, I saw on the Twitter and a lot of media, rather than talking about NVIDIA in the past weekend, now they start talking about AMD. Don't miss the next $4 trillion market cap company.
Oh, they always find a new pony to ride, Kai. I mean, that's nothing new. I mean, I'm not going to say something politically incorrect, but go ahead.
Okay. Next slide.
Sure.
So biggest movers from S&P 500, liquid ones. The top ones, MBD, due to the takeover news, up 53%. IV rank increased 83%. Next 4, Oracle for sure. MU up 20% too. Tesla up 14%. It already crossed 400. Kind of what it's called is resistance line.
400. It crossed 425. Kai, it's up another
this morning.
$30 this morning. Yeah, 20 to $30. Yep.
Yeah, SMCI up 12%. To the downside, HUM down 11%. Boeing, Moderna, Lulu, CZR down 6 to 5%.
Yeah, I'm surprised Netflix didn't make that group there too. I know Netflix was a $1,200 stock, now $1,187. It's had a little bit of a fall from grace too.
Yeah, it was there. I think it's 5 or 4%, or it's
got it.
What is WBD?
That's Warner Brothers.
Warner.
Come on, Vanetta told you all about this. Were you not paying attention?
Obviously not for Warner Brothers. What happened? They got bought out or something?
It's.
What was the other one? What was the
rumors? Not rumors. It's the new meme stock.
Oh, got it.
Mm-hmm. Warner Brothers is up small this morning. Unchanged this morning.
Okay, Fred.
Okie dokie. Taking a look at the earnings. Earnings last week, definitely Oracle for sure, up 36% on Wednesday. And we go to the next slide. And Chewy down 17%. These are the only 2 had a double-digit movement the day after. I believe LMNR had 8% or something, but these 2 are the biggest mover.
Mm-hmm.
And looking at the long term again, right now we're pretty much finishing the earnings season. Another week passed, we have only roughly 100% company, 100 company stocks earnings, and the stats didn't change. For this season, we're going to see roughly 49 to 51 winners to losers, and average returns 0.1%, very close to 0 again.
Much to do about nothing, which is typical, right? When you look at it.
I think second quarter or first quarter, we saw a positive 0.5%. to the upside. That's the very rare in the past 3 years. I think the past quarter. And we don't have a lot of earnings coming this week. Probably something interesting is Cracker and Barrels. A lot of investors talking about it, retails. We also have FedEx and Lennar. I don't even think anyone you would trade.
Nah. Maybe I'd trade Cracker Barrel for any other restaurant in the world, but I wouldn't look to trade them for earnings.
Nah, we won't trade FedEx either, probably. It's rare that we trade FedEx.
You're not even going to be here. I mean, you don't care.
Oh, yeah. I don't care.
See, Kai? See how quickly he changes? All right, Kai. I'm gonna let you go spy on the rest of Saznov's searches on TikTok. We'll take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell. Good job,
Peace.
Kai. Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. With Mr. Monday himself, Dr. Jim is in the house. Dr. Jim, what's your favorite sports team this week?
No, it's not. It's not this week. It's the same team I've been talking about for 3.5 years. Did you guys see my Rams? Like, I mean, they're just a juggernaut, man. I've been telling you guys from the beginning. You got Stafford. You got all the other guys. They look strong, man. They look strong. You know,
all
that's
the other guys.
You got Pua Nuka, whoever the wide receiver is. You got Cooper Criswell. No, Cooper Criswell's a reliever for the Red Sox. But man, I'm just saying they look good. You know, I mean, I've been talking about them in training camp. They look solid. You know, I can't say the same for your Chicago Bears, Tom. Ooh, man, they do not look good, my friend.
No, my 8.5s are looking really bad.
Yeah.
My 8.5s.
I would be looking to get rid of those for whatever you can get for them today.
I offered him out. He didn't give me a. He said I might want to double the bet. Was his answer.
So you know what's funny, Tony? You were talking in the previous segment. You were talking about you made some comment about being loaded up on shellfish.
Yes.
And I found that to be kind of funny because I don't know if you guys remember.
Yeah,
but
you're
I'm
allergic to shellfish.
That's right. So I remember being on the road and you guys kept trying to feed me shrimp and you kept trying to feed me clams and all these things. And then finally you broke me in Washington, D.C. when you guys made me eat octopus, which is not really a shellfish, but man, it is equally as nasty as all the other shellfish. And so you guys finally got me though in D.C.
Nothing good like a good choking episode at a company dinner. I mean, that breaks the ice for everybody. Everybody else feels good.
I can't remember how they prepare. Like, what's the proper way to prepare octopus? I can't remember.
You grill it.
Like, if I remember, like they just brought out the tentacles. I think
you grill it. You grill it first.
Okay.
You boil it. You boil it and then you grill it.
You can't fry it.
No, you can't fry it.
I mean, I don't know. That's why I'm asking you. Okay, so
no, you
grill
can't
octopus.
fry it. So
is that the only way, Tony? Is that it? Is that all we can do?
I mean, you can fry it if you want to, but Sazonov presented the creature of the sea properly.
No, you cannot fry octopus. But I did have a lot of shellfish.
It's still America, Sazonov.
I had way too much shellfish this weekend, so
I told you.
I had fried clams and scallops.
Isn't that that's one of your go-tos though, right? When you're up there in Maine?
Fried clams, the best.
Yeah. Okay.
I have to have it. It's a delicacy unlike it's one of the great delicacies in America and people have never had it before. You don't know what you're missing.
So here's a question for you. So calamari.
Yeah.
Are you a sautéed or are you a fried?
Oh, I prefer it fried.
Okay. So most people do, right? That's kind of the public play. But let me let you all in on a little secret. If you guys ever make it out to St. Clair Shores, Michigan. This is one of the Detroit suburbs. I've never told this story before.
Oh, God.
This is a special day. I've never told the story before. So I used to work at a seafood restaurant when I was like 16, 17, 18. This was actually before I developed my allergy to shellfish. I was not allergic to shellfish. I think because I handled crab legs every night, work in the back of the house and whatever, that might be what caused it. But that doesn't matter. We used to sell calamari and like people would come, Tom, they would fly in from like Illinois. They would fly in from like Nebraska. We'd have people coming in from like Portland. Like, hey, I hear you guys have a calamari. We fried it and then we sauteed it. So it wasn't either or. It was both and. That was the secret. Tom, people were lined up out the door, man. We couldn't stock enough of it. So if you ever make it to St. Clair Shores, Michigan, go to Waves. Tell them I sent you. I worked there in like 1998, 1999, right? Tell them that you know me, and they'll set you up.
You know, it's the San Gennaro feast, Tony, right now.
Yeah. My mom and I used to go all the time. Her birthday, September 21st. That was going to be. That was always our thing.
Thanks to TikTok, you know, you have all the foods there. I mean, they're showing everything. And
we always have all the foods there, Saz.
I know, but thanks to TikTok, you can see everything. And one of the best looking dishes they have, they got one guy who's selling fried calamari with a huge like ladle of spicy tomato sauce on top of it. Looks
you mean
great.
Just like the place that I took you to?
Yeah, that's your place, right, Tony?
That's 100% correct, Sosnoff. I mean, which you poo-poo all the time, but yet you ordered your own. There was one for the table, and then there was one for you to eat.
There's a difference between calamari and scungile.
No, we had calamari. We had scungili too. We had calamari with the spicy.
I'm just telling you,
red
it's at San Gennaro Feast. Whatever you like.
And then you go, ooh, there's a hardtack underneath there too with the sauce. It's really good, Tony.
Anyway, I'm just telling you guys what they have at San Gennaro Feast.
I've been going to the San Gennaro Feast since you were pooping yellow, allegedly, in New York City yourself.
You probably haven't been there in 45 years.
Closer to 25 years, but I would go with my mom every year. That was our thing.
I used to go with my grandfather all the time.
So you haven't been there in 65 years?
Oh, no, I've been there in like 1990.
Oh, okay.
Yeah. 35 years ago.
Yeah, right. I think I got you by 2 years. I digress, Jim. Continue on. I apologize.
No. I'm getting good ideas. I'm getting good food ideas because I'm typically pretty good with the food stuff on my own. But if I can get some more ideas from you guys, like I'll absolutely take it. Beautiful. So you know what I'm going to do, Tom, is I'm going to take this recommendation and you know where I'm going to put it? I'm going to put it in my little black book. So have I ever told you about my little black book?
Oh God, yes, please.
This is going to be a good transition into today's segment.
No mas.
So in the fall of 2015, like when I knew, like when our courtship was like, it was hot and heavy, man. And I knew that like it was going to happen. Like I was going to join the team full time in January 2016. I got this little black book and I started writing down these segment ideas. And I came into the network like guns blazing, came in like 500-600 segments ready to go, whatever, right? Well, over the years, I've crossed them all off. Tom, there was only one segment left in that black book that I haven't done yet. And it's because I couldn't figure it out. We are going to do it this morning. Are you ready, Tom?
Yeah, I'm ready.
I'm ready.
This is it. So now the black book is done. It's over. It can go in the trash. All right, Beth, hit us here on the title slide. Tom, I know you love paradoxes. So here's what we are going to do tonight, Tom. We are going to try to book a room at Hilbert's Hotel.
Whoa!
The Infinity Paradox. Tom, have you ever heard of this before?
No.
Okay, well, I hope you have your thinking cap on because this is going to stretch your intellectual abilities. I know they won't need to get stretched too far, but we are going to reach the limits. So Hilbert's Hotel, let's go. All right, Beth, hit us here on the introductory slide. So over the years, we've challenged ourselves with a number of mathematical paradoxes and had a lot of fun doing it. In fact, on the road, gentlemen, as you guys remember, I'm sure, we've even used the Monty Hall problem, the birthday paradox as part of our live shows. Well, today we're going to work through another paradox specifically related to infinity as we look to book a room at Hilbert's Hotel. Tom, don't you ever forget, regardless of how you feel about this morning's piece, because you may love it, you may hate it, you just never know, right? Nobody knows. Nobody knows where the market's going next. Nobody knows how Tom is going to feel about a given Monday morning piece. But don't you ever forget who taught you, who brought the birthday paradox to your doorstep. It was me.
He's got a good point, Tom.
I mean, some of my favorite shows we've done on the road are the Monty Hall problem and the birthday paradox.
The best part, here's the best part about the birthday, and I don't know if everybody knows this. Here's the best part about the birthday paradox. The birthday paradox, when you decided, hey, let's do this on the show, let's do this on the road, let's do this live, whatever, that was going to be a show that I was not part of. That was going to be a show that had some other people on the team doing the show, whatever, which is totally, I mean, obviously I'm not part of every live show. But what's amazing is like 4 days before the show, you called me. You called me on like a Saturday. Like I'm hanging out with the kids, like I'm hanging out with Army, like, Jim, you're like, listen, man, you're like, I need you. Like, I need you, man. Like, I don't know how to figure this out. I don't know how to explain it. I don't know how the math works. Like, I need you. I need you here this weekend. I was like, I can't do it, man. Like, I got this, I got that. I got Legoland. I got blah, blah, blah. You're like, man, I need you. Like, no one else can do what you do. No one else can fill this void in my life right now like you can. And so what did I do? Like, I was there. I was there, man. I was there for you. Don't you ever forget that.
Is that how it went, Sosnoff?
Not exactly. Like, you know, I called Jacob and he was like, what are you, an idiot? Everybody knows how to do this. And then I called Julia and she said, what's wrong with you? Everybody knows how to do this. Okay, so I didn't want to be any more embarrassed with those two. So then I called Dr. Jim because I knew it was closer to my level.
All right, fair enough. Okay, so let's book a room at Hilbert's Hotel. All right, Beth, go ahead and hit us down the next slide. Okay, so Hilbert's Hotel is a thought experiment designed to illustrate just how difficult it is to truly wrap our minds around infinity. And this is going to be super abstract this morning, so I hope everybody's ready. But it actually does apply to us because remember, if you sell a strangle, right, theoretically you have infinite losses. You have infinite loss potential. So we're going to come back to that here at the very end. But so in the 1920s, this was a thought experiment, an idea that was developed by a German mathematician named David Hilbert. So all of the ideas that follow, I did not come up with this. I just had to try to figure out how it works, which was quite a challenge for me. But I think we got far enough to where we could go ahead and do the segment this morning. So here's Hilbert's Hotel. You have this hotel. It has an infinite number of rooms and an infinite number of guests. Okay, so this is how the problem begins. Infinite number of rooms, infinite number of guests. And then one night, the night manager is on duty and he looks out the window and he can't believe it. But there's another guest looking for a room. So how is the night manager going to accommodate this new guest in his hotel with an infinite number of rooms and an infinite number of guests? Now keep in mind, a couple of things. Number one, we're looking for precision, gentlemen. We don't want to be sloppy with our answers and just say, well, it's infinity, just throw them in there, whatever. No. We want to be precise with our answers. We want to be clinical, and there can be no overlapping rooms. So like Tom, when we went on the road very frequently, you would make me bunk with Tony. And I didn't love it, but I understood. I'm like, hey, we got to save money. We got to this and that. So oftentimes it was dual occupancy with me and Tony Batista. And we made it work, didn't we, Tony?
Of course, we made it work, Dr.
I mean,
we're team
it's all
players.
about the team. It's all about the team, right?
Yeah.
We're just focused on winning. There's no individual stats. We made it work.
That's correct.
Yeah. So here, for the record, we never bunked, just so people know.
No. One time. What's the big deal? One time.
So there's no overlapping rooms. Okay, Tom? All right. So do you have any ideas how we should do this? What do you guys think? How do we get this new guest in a room?
Sadnov, how do we get the new guest in the room?
I don't know. I mean, there's an unlimited number of. I don't know.
Tony, do you have any ideas?
I can't show up Sosnoff on the one segment that you saved throughout this whole thing and give him the answer. No, I couldn't do that.
Okay. All right. Fair enough. Okay. So believe it or not, guys, but this one's actually quite simple. Okay. So Beth, hit us on the next slide. Here's all we need to do. The simplest solution is to ask each guest that's currently in a room to move from their current room N to room N plus 1. So the guest in room 1 moves to room 2. The guest in room 2 moves to room 3, and so on and so forth. And then what does that do? That leaves a vacancy in room number 1. So the new guest slides into room number 1, and everybody is happy. What do you guys think about this solution so far? This is the easiest level that we're going to encounter.
Okay. That makes sense.
Okay, fair enough. All right. So the night manager's feeling good. He continues to collect his infinite salary. Everybody's happy. All right. The next night, right? He's just hanging out. All of his infinite number of guests are having an infinite amount of fun, and everybody's happy. He looks out the window, and then all of a sudden, he sees an infinitely long bus with an infinite number of passengers. And now all of a sudden, he's like, man, I got to find an infinite number of rooms for this infinite number of passengers in this infinitely long bus. How am I going to do that? Gentlemen, do you have any thoughts? It's not so simple anymore, is it?
No, you're gonna have to move those people out of the room, I think.
How are you going to do it, Tom, with precision? How are you going to do it without overlapping rooms?
Sosnoff?
I'm thinking.
I'm sorry.
I'll give you a hint. There is a very, very simple mathematical solution here. Once we say it on the next slide, you're going to say, oh, yeah, that makes sense. In fact, it's something that Eli and Penelope are learning right now. So, I mean, they're not learning it together per se, but Penelope's in 5th or 6th grade. I don't even know. Eli's in 3rd or 4th grade. I can't keep track. But it has to do with multiplication. Do you have any ideas?
I do not.
No.
You got nothing? Okay. All right, Beth, hit us on the next slide. So the key here is what we're going to do is we're going to ask each guest to move from room N to room 2N. Because here's what's amazing about when you multiply any number by 2. Notice what happens. Guest in room number 1 goes to room number 2. Guest in room number 2 goes to room number 4. Guest in room number 3 goes to room number 6. Room number 4 goes to room number 8. Room number 5 goes to room number 10, and so on and so forth. What happens? All the current guests all move to an even numbered room. So what does that do? That opens up all of the odd numbered rooms. So the infinite number of passengers on the infinitely long bus file into all of the infinite number of odd numbered rooms in the infinite hotel. Everybody's happy, and the hotel is booming, just like it was the previous night before at a level of infinity. What do you think, Tom?
Pretty interesting, but yeah, that's kind of cool.
Okay, well, no, we're not even done yet. The night manager is not off the hook. He thinks he's off the hook. But then the next night, the final night, he's hanging out. Everybody's happy. You know, he's counting his infinite amount of money that he makes from his, infinitely long job. He looks out the window and he sees the unthinkable, Tom. An infinite number of buses with an infinite number of passengers. How does he accommodate his new guests with precision and without overlapping rooms? I'll give you another hint. To solve this problem, you're going to have to go back to around the year 300 BC.
Something Egyptian?
I wasn't everything Egyptian in 300 BC.
I'm trying here. I'm trying.
There's a little mathematical trick. Tom, you look a bit perplexed.
I need help. Yeah, I need help.
I'm not sure if you're thinking about this problem. You could be thinking about, hey, how are the Bears going to actually win a game? Both of which would leave you in an equal state of confusion. But let's go to the next slide. So
I'm just trying to remember when we bunked together who was the big spoon and who was the little spoon.
No, we had separate bunks, man. No, we did the little, the top and the bottom deal.
Oh, yeah. Okay. I didn't remember.
Yeah. And with my broken big toe and torn meniscus, I gave you the top bunk, man. So Beth, go ahead and hit us on the next slide. So here's how we figure this out. Around the year 300 BC, Euclid proved the following. There exists an infinite number of prime numbers. So this is the key, right? Because all the evens and the odds are taken up. But now he's got to figure out a way to accommodate his current guests and all the new guests. So here's what he does. He uses Euclid's, conclusion from 300 BC that there exists an infinite number of prime numbers. So prime numbers like 2, 3, 5, 7, 11, 13, and so on and so forth. So all the current guests, he starts with the first prime number and he raises that to the power of their room number. So for example, the guest in room 7, the first prime number, of course, is 2. The first prime number over and above 1. The guest in room number 7 would go to 2 to the 7th power. He slides into room number 128. Okay, easy enough. Well, then when you go to the first bus, you just take the next prime number. Next prime number raised to the seat number on the bus. So the passenger in seat 7 will go to room 2187. And you would do that for the whole first bus until you get through a countable number of infinite passengers. And then you move to the second bus and you go to the next prime number, and the process just continues until all of the guests have fanned out and they're all comfortably in their rooms.
I never would have
Tom,
got that.
No.
What? Nobody would. This is what hung me up for so long. The first two are fairly simple, but this is what really hung me up for so long that I couldn't do the segment because I didn't feel like I could explain it properly. So what is the purpose of all this? Right? So, I mean, Hilbert's Hotel is a very, very famous mathematical paradox. The purpose of this, as you dig deeper, well, what do you guys think? Before I give you kind of, the conclusion that most mathematicians have settled on, what do you think the purpose of all this is outside of trading, just from a purely mathematical standpoint?
You got me, Dr. Jim. I do not know.
Tom, you can yawn when the segment's over. What do you think? What do you think the purpose is?
I think the purpose is that you're just trying to show us that there's a solution. That there's a solution. That basically every math problem has a solution. I don't know.
That's actually a really good guess. That's a very, very good guess. And I'm not even gonna say that that's wrong necessarily. But the consensus in the mathematical world, and you could probably even ask, I'm sure Jacob is very familiar with this, but the consensus in the mathematical world is the purpose of this thought experiment is just to show you how we really can't wrap our minds around infinity. We really can't, because it's such an abstract thing. Like, it's not tangible. Because, I mean, the problem started with an infinite number of rooms and an infinite number of guests. So it seems kind of simple. But then when you have additional information coming in and additional guests showing up, it kind of shows you in a way how absurd infinity really is. It's a crazy type of problem where it's like, man, like it just keeps going. And that's what it is by definition. And so that is kind of the paradoxical nature of this. Because yes, we can find these, fairly precise mathematical solutions that aren't sloppy, that, get everybody into a new room, whatever, but it really just highlights and illustrates just how powerful infinity truly is. So Beth, hit us on the next slide though. So why does this matter to us as traders? Well, I think to bring it back to like an undefined risk strategy, right? The theoretical possibility of infinite losses is always there. Like if you sell a call or you sell a strangle, you're going to see it right there on your Tasty Trade platform. Maximum loss is negative infinity. Well, after having gone through a segment like this, you should have a brand new appreciation for that, because infinity is a very abstract concept, right? There's no tangible way for that to show up in the financial markets. Now, that's not to say that you can't lose a lot of money. That's not to say that at all. But in terms of actually reaching infinity, it's not possible. You literally cannot get there, just as we saw with Hilbert's Hotel. There's always room for new guests. There's always room to go further. And you know what's even crazier, by the way? Going back to Hilbert's Hotel, there's actually multiple versions. This is another thing that hung me up. There's multiple versions of this paradox. So we actually went through, if you can believe it or not, we went through the easy version. There's another version that I couldn't do it. I couldn't figure it out. It's when you start getting into like, not just countable numbers and integer values, but you get into all the real numbers. So now you've got negative rooms, like rooms in the basement, which is when I did have my own room on the road, Tom, that's where you would typically put me. Like you guys would all be like, 20th floor, 24th floor. They put me down in the garage.
If we were even in the same hotel as you.
That only happened 30% of the time in and of itself. That's right.
That's right.
You guys are in, the Westin, you're in the Dana, whatever. You got me down the street in the Ramada, right? On the garage floor level. And so in Hilbert's Hotel, you could like mathematicians have gone with like negative numbers. You get some fractional rooms, Tom, like half a room. You get some radical rooms like square roots, cube roots. You get the pieth room. Like it gets really, really, really crazy. And so anyway, the point of all this is just to have a little bit of fun, but it's also, when you see an infinitely possible loss, how do you guys deal with that? So when you sell a strangle and you sell a call, because selling a put obviously is bounded by zero technically, but when you sell a call or you sell a strangle, how do you guys process the possibility of an infinite loss?
Well, I don't think we do. I mean, if we did, we wouldn't be in this business. I mean, how could we? Because we own a brokerage firm, like where there's, we have 1 million short option contracts with unlimited theoretical risk all the time. If we looked at life, if we tried to solve that, it would be insanity.
Life as we know it would cease.
Just like we just did, right? Just like we tried to solve Hilbert's Hotel. Exactly. But still, I'm going to push on that, Tom. But still, you have to wrap your mind in some context around, okay, what is my worst case scenario risk here? How do you quantify that?
I don't know. Like, what do you mean?
I mean what I mean. Like when you get into an unlimited risk strategy, and you're thinking about like, you know, what's the worst that could possibly happen? How do you begin to wrap your mind around that in a tangible way?
Nobody thinks about that. That's a dumb way to think. Like when you get in your car, do you worry about dying? You know, like when you get on a plane, do you worry about dying? I don't.
Who's driving? If you're driving, I worry about
I'm just
dying.
saying, to think about the absolute worst
Jim
case.
is driving, I worry about having a heart attack.
To think about worst case or infinity in any of these places doesn't make any sense. Like, we don't think like that. So we think, you know, we think what's the worst case? I mean, you can look at CVAR, you can make up a number yourself, whatever it is, but there's no chance that we think about, you know, infinity.
Of course not. Of course not. But you finally got where I was trying to get you to go. Man, it took me 8.5 years. I finally got you to go where I wanted you to go. Yes, CVAR. You can look at the buying power effect as a good approximation of what is the likely, what is a likely tangible number of my worst case scenario. That's not a guarantee, of course, because the markets are a living and breathing thing. And you might be short some calls in Tesla this morning. That would be extremely painful. And it may get a lot more painful. But still, a lot of traders, I mean, you may not do this, Tom, but Tony, help me out here, man. A lot of traders are thinking about this. A lot of traders are thinking about, okay, what is my worst case scenario here? I've never sold a strangle before. I've never sold a put before. I've never sold a call before. Like, you've been doing it for 95 years. Like, there's people that are doing it for the first time today, and they need to understand, okay, infinity is a very abstract thing, but what's a tangible way? Right, Tony?
Yeah, 100% correct. I mean, I would look at buying power. You might look at
There you go. There you go. Buying power, CVAR, it's all fine. And lastly, Tony, I would like you to know specifically, so I totaled my car about a month ago. Autumn and I, we made a family decision. We felt like I am a liability. I am a liability on the road. I have not gotten a new car, and I'm not going to get one. I'm a liability. I'm a man of the people, man.
I think
they've taken your keys away already.
They took my keys away, man. I got the e-bike on order, and that's the best I can do. That's all she's gonna give me.
I actually think you on an e-bike is probably a strategic
Is that worse?
move for Autumn for the future, is what she's thinking about.
To me, I mean, I'll let you guys know when it arrives, but that's got to be more dangerous than me behind the wheel. It's got to be.
100%.
Because it's the Wild Wild West out there. You're in the street, you're on the sidewalk, you're on grass, you're on dirt. You do whatever you want, man.
Yep.
I don't know.
Yeah.
Anyway, there you go. We did it. We booked a room at Hilbert's Hotel.
Autumn will be on the market in a couple of months. This is what I see right now. That's what I see. Good job out of you, Dr. Jim. I see us taking a quick break here as the E-mini S&Ps hang out at 66.72, Sadov, my old football number. We're going to take a quick 90-second break and come back. Look at Sadov in his eyes. Well, you want to do your takeaways? Let's do your takeaways. I'm sorry.
Oh, sure. Yeah, okay. I mean, sometimes we do them. Sometimes we don't. It's all good. Undefined risk strategies are an important part of how we build out our portfolios at Tasty. But seeing the potential for an infinite loss can certainly be pretty scary to even a seasoned trader. And while large losses are all too real for many of us at times, an infinitely large loss can never truly be reached, just like we can always find a room for a new guest at Hilbert's Hotel.
What do you think, Sadov? Okay now?
I mean, it's cute. It's cute the way he did that.
Thank you. Thank you.
Dr. Jim and cute.
It's a cute little story.
All right.
I didn't know where
we just lost Tony. Oh,
I didn't know where he was going, but it's good.
We'll take a quick 90-second break and come back. We got more Tasty Live with Market Measure next. Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live. That's right, with this market measure. First, let's take a quick look at what's going on with the market. Even the S&Ps holding steady, much like they have been last week also. After making a move, they usually don't turn around too much. They're doing that right now today. They're up 28 handles, trading just about 5 handles off of their highs. We're at record territory. NASDAQ up 138. It was kind of the weaker of the group. It's actually the stronger of the group on a percentage basis right now. Russell up $5.60, trying to join the group of all-time highs, and the Dow up 14, the weakest of the group. Volatility in by 19 cents off of its lows, but a very, very tight range here all around. Bonds are up 9 ticks. Look like they're the higher end of their most recent range. Bitcoin's been the weakest of the group. They're down almost 2% here, $2,300 in Bitcoin. Ethereum down 166. That's actually a larger move than Bitcoin. 3.5% move, down 166. But as you can see here in that very tight range, or wide tight range that they've been in, oil up 72 cents. Gold caught a bid, up 11 enough. Usual suspects to the upside here. Tesla up 26, Google up 11, Oracle up 10. That's been having some two-sided action. Good IV rank of their 57, with the IV rank expanding over the last 5 days. Crowd, CRWD up 8 and change. Reddit up almost 5 on the downside. Sadnov, fewer and far in between. But MSTR you would think is lower, with Bitcoin lower. It is by $5. Lilly down $5, and Nvidia down 2 and change. Palantir down 2 and change. That's all I got, Saz.
Yeah, I'm not liking this market today. I mean, I'm not liking
your performance, or not liking the direction it's going, or you think it's going lower?
I'm not liking the direction it's going, and I'm not liking my performance either. But my performance, I really haven't done anything. So my performance is basically unchanged, but I'm not liking what's happening here.
Okay.
No,
because you see, you look at the expected move for today. Let's get back to trading it for a quick second. This time yesterday, it was closer to, on Friday, was closer to $16. It's 12.5.
Yeah, it's pretty incredible. I mean, I was telling those guys, I think it was last night. I don't think it was this morning, but back in the day, I remembered expiration weeks, like going back into some years where volatility contracted a lot, like it has this year. And I remember some expiration weeks where we got into the, triple witching, where we got into the 5, 6, and 7 handle on volatility. And it wasn't just one-offs. I mean, it happened for a while, and then all of a sudden it happens. Then you get like some massive move. It's really hard to get out of that, to get out of that mode. It's a little scary.
Yep.
I've been down this road. Yeah. Anyway, I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Dr. Jim went really long today. He was rambling on about some hotel somewhere with an infinite number of rooms.
Yep.
I wasn't sure where he was going at first, but the funny thing about that is that we never think about anything in infinite or binary terms, like worst case. You know what I mean? Like if you go through life thinking about that, you're destined to be marginalized, I think. Like those are the people that don't leave their house.
Yes. I understand what you say. Like, yes. Those are your hermits.
You can't go through life wondering what's going to happen if you slip in the bathtub, or if somebody runs you over when
because you've slipped in the bathtub, and look at you, you're fine.
Still here,
right? You're still here.
Yeah,
nothing happened to you.
You don't worry about I live in the city. I'm not worried about if I'm going to get bit by a snake, or attacked by a
trouser snake, maybe
a grizzly bear. I mean, there's certain things I don't worry about.
You got to worry about cougars where you live.
There's just can't go through life thinking about the worst case and the infinite case. It's just, and you can't do that in trading either. It's ridiculous. But I get it. Anyway, this this coming Friday, if you want to see Tony and I trade live, we don't worry about anything because we're not there to worry. We're there to put some positions on and see what happens. So if you want to come out, Beth, just throw the slide up. Perfect. Webster Hall this Friday. It's going to be fun. We're expecting a lot of celebrities in the house this Friday. Don't even want to tell you who. A lot of celebrities in the house, but we're going to have some fun. Some frequent callers will be in. There'll be a bunch of other people that are attending for the first time that we've invited from various parts of the industry. It should be quite the spectacle this week. Looking forward to it. And then if you can't make this because you're on the West Coast, in 2 weeks, we will be in LA.
If you can't make the East, come to the West. Love to have you. The Fonda Theater.
They got us going from San Francisco, 2 weeks later to New York, 2 weeks later back to LA. So if you can't make New York and you're on the West Coast and you miss San Francisco show, which was really fun, we're going to be at the Fonda Theater in Los Angeles, California on Friday, October 3rd. It is just 2 weeks from this Friday. And there is plenty of availability right now. And I'm sure it will fill up, but we do it one show at a time. But there's plenty of availability right now at Fonda. So we would love to see you there. And same show. But, you know, each one we do different trades. So it'll be, you know, a lot of fun. tastylive.com/events, Fonda Theater on October 3rd, or the Webster Hall on this Friday, the October, is it 19th, right?
That is correct.
September 19th.
Yes.
September
19th. There we go. So September 19th or October 3rd. And we do these on a Friday. The show starts at 9 a.m. The doors open at 8 a.m. wherever we do them. And can't wait to see everybody. We bullshit for about an hour before the show starts. And the show will start promptly at 9. It ends by 10:30. Back at work by 11.
I like it.
We're back on an airplane by 2 in the afternoon, heading back to Chicago. Can't believe the traffic in New York this weekend, because New York's usually not too bad. Man, it was bad on Friday.
I haven't heard too many people say New York traffic isn't that bad, but I get what you're trying to say.
I mean, Chicago traffic's bad. New York traffic is bad. The traffic in Guadalajara, that was the worst. Because they're building of all the places I've been recently, they're building the new stadium or new highways for the World Cup, and everything is at a standstill. So, all right, let's do it.
I'm ready.
Now, we don't have Scott today, do we, Beth?
No.
No,
Okay.
no.
Okay, so then
Tomorrow.
Are we taking calls, Tony? Let's take some calls today.
We can do that. 855-238-2789 or 855-BOO-TASTY.
There's a lot of stuff going on this week. People might want to call in, so you can line up in a few short seconds. We'll have some fun with it. What to do when a strike is breached? What to do when a strike is breached? Man, you know, if we were to count the number of emails we receive, Tony and myself, when a strike is asking what to do when a strike is breached, I think I answered about 10 last night alone. What to do when a strike is breached.
People get into it by selling premium, not wanting it to be that level, and then there they are, and that's the problem. They're worried about what now.
You know, it's whether it's a naked position, whether it's a defined risk like an iron condor, what to do when a strike is breached is a really challenging situation. And so let's talk about it.
I'm ready.
We have a very committed, very mechanical approach, and we don't vary from it. Let's go next slide, Beth. When a trade comes under pressure, we often talk about rolling the untested side. Recently, we also shared a study on how to adjust or defend a trade, especially when losing. Viewers have since sent tons of follow-up questions on what to do, how to roll a position, when either the strike has been breached or just challenged. We don't even wait for a strike to... If we have the option We do not wait for the strike to be breached. If we don't have the option, then there's nothing you can do.
Yeah, like if you got to move like Tesla today, where it's
Right.
just up $20 some odd dollars right on the opening.
Let's go to the next slide. So first of all, what is rolling? Rolling the untested side means that during the trade, if the stock breaches the strike, and now again, it's easy to define this thing by talking about breaching the strike, but if the stock makes you uncomfortable, it does not have to breach the strike. If it just makes you uncomfortable, we would close out the side that is untested, not a loss. And okay, what this means is we would roll up the untested side. What that means is you close out the option that is being untested, like they say here, and then you're going to open another option that's a little closer to the stock price. Basically, I don't want to make this sound too complicated or it's like two different trades. It's a single trade. It's just you buy back your short option, you sell another option. You sell another option out that's closer. That's all it is. It's a single spread. It's not a leg. There's no leg risk involved. It's just an additional credit. And the reason you do that is to reduce your delta risk and to add credits. Reduce delta, add credits. Let's go next slide. So by closing out the option that is untested and opening a new one that is close to the stock, we will receive a credit and will lower our delta exposure on the position. That is exactly correct. The result is a lower probability of making max profit in exchange for lower day-to-day risk and lower outlier exposure. This is defensive in nature. Beautifully said. That's exactly what we do. We don't touch the tested side, and on the untested side, we just roll it up if it's a put, and we roll it down if it's a call.
That is correct.
Again, this is not something that requires additional capital. This is only to mitigate risk and to reduce the volatility of the trade. That's all this is. Let's go to the next slide. So we looked at a study since 2015. We sold 16 Delta Strangles, 45 days to expiration, no early management in this study, which is not really what we do, but for the study made it cleaner. We recorded the occurrences where the SPY breached either strike. In our real world, it doesn't even have to come close to breaching. It just has to make you nervous. And also, it's the same thing for defined risk trades, except you just roll up the spread. We compared the average win rate, and we looked at exiting the trade when the strike was breached, continuing to hold until expiration, or rolling the untested side to make into a straddle or anything else, and then held to expiration, just to see if we can improve upon how much adjusting really improves upon doing nothing. Let's go to the next side, or closing out a trade. Like if you put a stop order and you close out a trade, that's not our style. Let's go to the next slide. So this study takes one specific example and method of rolling. The correct interpretation of the results should be a comparison to show the effect of rolling in general. Do not use the specific percentage, the premium over buying power numbers, as expectations for your own account. It's kind of like a disclaimer. Let's go to the next slide. Next slide, Beth. Okay, so rolling the trade gave you a better chance to break even than either closing immediately or continuing to hold. Now, again, we are not comparing these. There's no managing early here or that kind of stuff, and there's no other kinds of rolls. What we're saying is that we know two things that don't work. Stopping yourself out is the worst thing you can do, and you'll see the results in a minute. Continuing to hold, okay, is better than stopping yourself out, but it doesn't quite compete with adjusting the trade. So when rolling, you lose the ability to make max profit on the original trade, but on average, doing nothing saw more losses and collected less credit than the occasional full swing reversal. So what we see here is since 2015, using 10 years of research, it's a really good study. Strangles with tested strikes, and for the purpose of this study, tested meant breached. If you exited the trade, your win rate was 36%. Not good. If you continued to expiration, your win rate was still 73%, which is not bad at all. And if you rolled to a straddle, your win rate went up to 78%. Remember, the expected win rate was 68% or whatever, plus a little bit higher than that, whatever. And so, but you make less money, but you kept your win rate high and your risk low. That's exiting a trade, holding to expiration, or rolling the untested side up to a straddle. It doesn't have to be that dramatic in real terms.
Sure.
Let's go to the next slide.
Yep.
The reason we rolled to a straddle here, by the way, is because we were waiting for the stock to be breached. If we were doing it normally, just when the stock made us nervous, we rolled. If we were doing that in the future, that would be very different, and you wouldn't roll to a straddle, you just roll to a higher strangle. Historically, around 40% of strangles saw at least one breach. Actual probability of a touch. Remember, 16 delta strangle, probability of a touch of one side is about 40% throughout the 45-day cycle. Knowing a defensive tactic when markets get hard or get difficult will come into play often. And rolling the untested side reduces the delta exposure, increases the net credit, and increases the probability of breaking even or making a small profit in exchange for giving up max profit potential on the trade. If you have sent Tony or I an email in the last 15 years, this is what we have said in response mechanically. Roll up the untested side or roll down the untested side, reduce your delta risk, take in a little additional credit, and then, manage the trade early, see what happens.
You're 100% correct, my friend. And you that are waiting online, I see you Chicago, I see the Netherlands, and I see Connecticut. We're going to get to you in about 90 seconds. We got a few lines open. Give us a buzz, 855-238-2789 or 855-BE-TASTY. That's that number right there on the bottom of the screen. Give us a buzz. We'll be back in 90 seconds talking with Tom and Tony next.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading. Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
What is going on, everybody, and welcome back to Risk and Reward. Today, it's a little bit of a different segment for today. But we're going to talk a little bit about some Tesla, some interest rates. We got some things that might hopefully shake up the market this week. But we'll get into all that. Gus, how are we doing today, brother?
Doing good, man. Hanging in. Happy to be here during market hours. We can actually place some trades on our show.
Right.
Can you believe that? Usually we just got to sit here and talk about it for 30 minutes. Today we get to trade some things.
I'm looking forward to it. I'm so excited to be here. Of course, we're trading at all-time highs as we're on for our segment today. As everybody knows, it's one of my least favorite times to trade at all-time highs.
My favorite. It go higher.
It just it grind higher. That is all-time highs. But yeah, we'll talk about it.
All-time highs do put you in an interesting spot, especially if you're trying to trade, the actual all-time highs that we're talking about. If you're trying to get involved with SPY or SPX or whatever it may be, because all-time highs mean that there is always momentum going anytime we make new all-time highs. But at the same time, it's like, you don't want to fade the momentum, but at the same time, you're too afraid to lead into it because all-time highs tend to mean all-time resistance, uncharted territory. So, yeah, it's interesting. What's going on, Big Deal? Happy to see you.
What's going on, Big Deal?
No futures power hour today. No, apologies. You're stuck with us.
Power hour though. We could power through some futures now. No, I'm kind of in the same boat there, especially when it comes down to trading all-time highs. I think we took some data on this. I think once we trade at all-time highs or once we take a new high, we're more likely to get another new all-time high than to reverse and sell off and correct. So I think that's what the data shows too. So it's so funny how naturally, let's start getting short when the data even lets us know that we're more likely.
Well, and it's a paradoxical thing, right? Because we always emphasize how you want to be contrarian a lot of the time here at Tasty. That's something that we place emphasis on. And at all-time highs, it is actually public or chalky to think that all-time highs are going to be resistance. It's a paradoxical thing because that's the spot. It seems like it would be contrarian to get short, but really everybody's thinking, oh, all-time highs, this means resistance, we should get short. So it turns all the way back around to where being contrarian actually is just getting long.
Right. Also, I think all-time highs, what resistance are we talking about? We've never even traded at these prices.
Exactly.
This is fresh liquidity up here. So, no, with that being said, we can go ahead and jump into some of these slides. Tesla, baby. Tesla. Elon's back on the radar. What's going on in Tesla?
Yeah, Tesla. It's interesting. We got a giant move today. They are back at highs that they haven't seen since February of this year, and nearing all-time highs once again. But it's because Elon has bought some shares, quite a few of them, 2.57 million of them to be exact. About $1 billion total post up for Elon Musk. He bought these on September 12th, this past Friday, and then just disclosed his position this morning. Tesla was up 8% in pre-market on the news, and has stabilized around that level. It's come down a little bit off that 8% number specifically, but is still trading well up and after a gap today. It's Elon's first major share purchase since 2020. That was, I feel that's funny because I haven't thought about this in a long time. But yeah, I feel like there was a long time there where I was constantly seeing headlines about Elon buying up shares of Tesla, and I didn't really realize that they went quiet. But it has been quite a while apparently. And most critically, this move comes ahead of the November vote from the shareholders on Elon's new compensation package, which I don't know if this is the same billions and billions of dollars pay package, because I thought something got approved a couple of months ago with Tesla, but this one that they're voting on in November is actually a incentive-based pay package for Musk. So if Tesla is able to hit certain specified goals in terms of quantity of vehicles sold, total revenue, share prices, things like that, Elon stands to make more money, which if I were a shareholder is something that I think I would be in favor of.
Clearly Elon is a little bullish about this too because Elon's buying up some more shares. But it's funny we're talking about Elon today. I had some opinions on Elon over the weekend. I know everything going on last week, all of the uproars going on last week. I started to think of Elon a little bit this weekend, and I started to think a little bit more about Tesla. And then I started to think I've always liked Elon. Like I've always kind of been like, I like Elon, but now I've turned to, I don't really trust Elon, and I started to put a lot of thought into that this weekend. Like I've never been super, super pro Elon, but I've always been a proponent of new tech being built. And I've always thought that was super sick. But over the weekend with some of the things that he's been getting involved with, like even politically, he's been doing that over the last year. My mind now goes to, this is one of the most intelligent people in the world. What are you trying to do here? So even with like everything Elon does now, whether it's a stock buyback or whatever it is, I'm always like second guessing everything he's doing because I'm like, I don't think Elon plays for any team, even maybe not even Tesla at some point. I think he does whatever's in the best interest of what moves he's trying to make at the moment. So I don't know. With Elon, when I hear these news pop up, I just have second opinions now.
I was just reading last week that it actually has turned over now to where Elon's net worth, I mean, most of his wealth and most of his income is tied up in his private businesses, which that's never been the case. It's always been that Tesla was the majority, and then SpaceX and all these other ventures were sort of a secondary thing, but we have just now turned over to where his private investments are worth more than his public companies.
That's insane.
So that perhaps lends itself to what you were just talking about, where perhaps his priorities begin to shift as different things begin to be more successful or make him more money. And also, you know, when you get to a certain net worth, I would say most net worths that start with a B, but really as you start to get over like 10 billion in net worth, it becomes a lot more about legacy and trying to figure out how you can change the world and all these things.
Where's the incentive here?
Yeah, and so I could also see an angle for sure where he really starts to get distracted with, say, SpaceX trying to get to Mars, and that becomes the full focus because you begin to be more concerned about legacy and how you will be remembered than how much money you can possibly make.
Because money's not
Bezos has his stupid clock in the desert that I hate.
Is that a thing?
Yeah, Bezos. He put it's like the dumbest billionaire project I've ever seen. But yeah, Bezos. It's in the desert, maybe in New Mexico somewhere or something like that. Could somebody tell me where the Bezos clock is located? What desert that's in? But yeah, he's got some kind of clock, and it's gonna run for 10,000 years, or it can be opened in 10,000 years or something. This is all.
Okay. So this is what I see right off the bat. The Bezos clock, more formally known as the 10,000-year clock or the clock of the long now. Keep in mind, I haven't got a fact check to this yet. This is what I'm pulling up as of now.
That all sounds correct so far.
All right, cool. It is a monumental 500-foot mechanical clock funded by Jeff Bezos that is being built inside a mountain in West Texas by the Long Now Foundation. Designed to last for 10,000 years, the clock is powered by thermal cycles synchronized by sunlight and features a chime generator capable of over 3.5 million unique melodies. All intended to symbolize and foster long-term thinking beyond human lifetimes.
Yeah.
Clock sold separately.
Yeah, so that's his idea, is that he's trying to outlive humanity with this clock.
Okay.
But I know part of it too is that it's really, really inaccessible. It's like in a really remote part of the desert in West Texas, and like you'd have to really put in some effort to even be able to go see it, which I think is also kind of part of the calculus for him, is that he wants it to be like that. Not even like, it should be a hard to reach tourist destination. He just like doesn't want people to go, I think.
Right.
But yeah, man, build a skyscraper. Like whatever your thoughts on the man are, Donald Trump had it figured out, man. Just build a big ass building and slap your name on the front.
Right in the middle of a city that doesn't really message you too much.
Boom. There you go. Right. Legacy. Run it back a few times if you so choose.
Before we pivot back off of the Bezos clock, it also sounds like, some of these billionaires like Bezos in this caliber also have figured out they're not going to be able to extend human life, or else I don't think they would be looking to put in this clock to have your legacy last a little bit longer than, I don't know, it might have been. So I just think, okay, it sounds like the billionaires have not found a way for us to live longer yet. We're producing big clocks now.
Yeah, there's the one guy that's trying to live until he's 200 or whatever. You know who I'm talking about?
I don't know, but that sounds miserable.
Yeah.
Until I'm 200.
Well, and that's what I always think. Anytime, why is his name escaping me right now? It's because it's a pretty basic name.
Yeah.
Like I want to say Randy Johnson.
Did he get
it's obviously
popular
not
on
Randy
social
Johnson.
media because of that?
Yeah. Okay. He's giant on social media, and he's 47 right now, but his biological age is 32, and he's trying to reverse aging. If you Google guy trying to reverse aging, he'll pop up. I guarantee it. But yeah, and he has this whole like insane routine every single day. He sleeps in a hyperbaric chamber with specific types of lights on him, and he takes 100 pills every morning when he wakes up.
Brian Johnson,
that's it. That's why I said Randy Johnson, the one of the greatest pitchers of all time, but I was right there. I knew it was a pretty common name like that. But anyway, yeah, so he's dedicated his whole life to just living as long as possible, which kind of like sounds, like you said, sounds miserable. Sounds like you defeat the purpose of even living that long when the entire existence is just to stay alive. But also the big part of it is that he's saying he wants to like experiment on himself and try to advance the future of medicine and like let people live longer in the future.
He wants to be a test.
But when you're getting experimental, sometimes things happen. And I know that like 2 months ago, they did something and it aged him like 3 years and like a month. And then they were like, oh, okay, we need to stop this one. Yeah, it doesn't always go right, but he does all kinds of weird stuff. I just was reading last week or 2 weeks ago, he did a 3-way blood transfusion with his dad and his 17-year-old son. They all went and swapped blood they called it a tri-generational blood sharing or something like that.
I got another name for that.
Yeah. It's all very
crazy.
odd. But yeah.
Yeah, blood transfusion, whatever, all that, blood mix and all that, that sounds pretty dangerous and pretty, I don't know, to use yourself as a test dummy, you must be pretty convicted in your belief.
Yeah, and obviously, and he has a team of like 30 doctors that support the whole thing, and obviously everything he does is
Very
like,
wealthy man.
Yeah, oh yes.
He's got these guys on salary then.
Yes, incredibly wealthy. Yeah, he's got all these people on retainer and a full team that like helps him every day and everything. And he's active, obviously, and like, you know, gets his physical activity in. But anyway, point is, you have to do that. If you want to try to live longer, you have to do that. And the billionaires don't want to. They'd rather enjoy the time while they're here.
Yeah.
Building clocks. Tesla. Let's get this back to Tesla here. So anyway, I could see Elon becoming more interested in trying to build legacy than in trying to further the future of Tesla, although perhaps there's an argument that there is legacy there.
Right.
So, you know, Henry Ford. We still know all about Henry Ford because
we do.
Because Ford.
And, you know, again, what's going to be interesting about these legacies moving on, like the legacies that these people left behind for the most part, we all know of Henry Ford, but Elon Musk is going to have a way larger personal footprint because personal brands are a thing in today's age than they were back in the 1800s. You couldn't document yourself as much as you could with Elon Musk now. So I think there's going to be a little bit more of a extra emphasis to the legacy. That's
well, yeah, and you have to be really careful with catering your legacy to like thinking about what people will remember about you too. I mean, that's part of it. Like Henry Ford. Here's what I know about Henry Ford. Ford cars, advanced vehicles.
Right. I think Dolly
Model A, Model T, all that, and then assembly line.
Assembly line. I said Dolly system.
And anti-Semitic. Those are my three.
Was Henry Ford anti-Semitic?
Massively so. Yes.
Really?
Yeah.
I didn't know that.
Yeah. Those are the three things that I know about Henry Ford. So I'm sure that he would rather me not be remembering the third one. So you got to be real careful with how people are going to remember you. Oh man.
That's a really good point. We can jump to the next slide.
Tesla clock.
Just the fact that is one of the things that you remember. I think there's a lesson in that. But anyways, maybe one of the first rate cuts that we haven't seen in a while is upon us this week, which we might be excited about. So we got the first rate cut in a while. It's expected to be 25 basis points. Anything beyond 25 basis points or anything under, or maybe no cut, anything outside of that I think is going to cause some type of shake up in the market. I think we get 50 basis points or we hold still and don't do anything. It's going to catch a lot of people off guard. It's going to catch me off guard. So we have seen a cooling labor market. Things have been slowing down a little bit more. I think, I don't want to quote the numbers from here, but a couple weeks ago, I think we had the job numbers come out. Not as bad as we anticipated, but it's still down.
Yeah, it was like better. Right. It was better than expected.
It was better than expected,
still down,
but yeah. Then inflation's still a little sticky, trying to get inflation down to that core 2%. Is that ever going to happen again? I don't know. Kind of sounds like a fairy tale at this point. But risks to watch. Is this going to be kind of a sell the news event? This is kind of where I've been leaning towards a little bit, Gus. I don't know. Is an interest rate decision going to turn into a sell the news event? I feel most things have been priced in. Is that going to be the case once this news drops? I don't know. We'll see. But I do feel, and I'm going to be prepared for more of a sell the news event, especially with us trading at all-time highs. I think maybe the market wants to take it to another all-time high before it does that. So.
Yeah, I mean, I think it's a sell the news event in the event that we get the expected cut of 25. Right. I think should anything else happen, then all bets are off. Obviously, we couldn't have that priced in yet. Also, I'm not being serious. Why don't they just move the inflation target? Like, let's just shift those goalposts.
Right.
4% inflation. We're doing great.
We could. I mean, we always shift the goalposts.
Fed, if you're watching. Get out your boy. I got ideas.
They're going to be like, 2% is dated now.
Yeah, but I think 50 is very much in play. I must say. I think a cut is definitely coming. I would be shocked if we get no change here. But I think we could be live for 50. I've kind of had this view for like the last month. It's coming time to be the witching hour here. I think 25 is most likely, but I gave the analogy that it's like every few days for the last 6 months, we pump a little bit of air into this balloon,
right?
And it's got to pop sometime. And I think it could potentially pop in a big way. Perhaps we've become too overdue here. However, the Fed has not seemed particularly in any particular rush to get cuts through. So on that side of the coin, I would see 50 is highly unlikely. But yeah, I don't know. I think holistically, I see 50 as a greater possibility than no change.
Yeah, 100%. 50 would be pretty crazy too. I'd be like, dang, you guys are serious. Like, you're gonna go to 50 basis points off the first one. Y'all are trying to set a tone, set an example. No, we can go ahead and jump over to the platform. Yeah, I hope they do too. We can go ahead and jump over to the platform here. We'll do a little tour to market and just talk about some of our expectations moving forward. My Lulu trade is going to take a long time to come back around again. Lulu, what's been going on in Lulu? Lulu earnings was not too long ago.
Also, to touch on the Fed decision one last time, Polymarket is pricing in a 90% chance of a 25 BPS decrease and a 8.6% chance of 50, and then everything else.
The 25 was what again?
25 is 90.
90. Okay.
Yeah.
That would be an insane flip if we don't get that.
Yes.
That'd be insane.
Yes, it would. And no change is at 2.4%.
2.4.
Yeah. So very, very low. Which,
no
yeah,
change. No
just
change.
aligns
I'd be
with
like, all right, what are we doing, guys? We're playing chicken with the human lives, American lives out here.
Yeah. No change. All of a
Like,
sudden
we're not doing anything.
Yeah.
Like, not even a rate. Nothing.
Yeah. If we go no change, I think
No
that
plan?
that becomes 50 the next time for sure.
Right.
But that's a whole other discussion.
Right. Lulu's been absolutely taking a beating. IB ranked 22.5. Really not too bad. What are these puts looking like over here in Lulu? It's been so tough getting long. I know you've been leaning more long Delta. How are you feeling at all-time highs in terms of new positions, managing what you got on already? Where are you at?
I mean, I would really say just kind of the same as anywhere else, to be quite honest. I mean, my whole thesis this whole time is that I'm just going to be long until proven otherwise. So I see every all-time high as simple confirmation that my sentiment still is holding.
But at a new all-time high, are you feeling comfortable here, or are you wanting to add more here? Or are you just like, okay, I'm gonna manage what I got on?
I'm kind of neutral. I definitely wouldn't be adding more. I might take some profits on a few things throughout the day today. I was just eyeing some spots. I might be able to take profits earlier, but everything that I have is kind of in strange middle spots right now. I have 4 things expiring at the end of this week that are all just massive winners that do not need to be managed. And then they're all leaps is what it is. It is just long leaps I've been sitting on forever. Yeah, and then so we got 3 winners coming in there, and then it's just a giant jump to things that are 32 DTE, and then 95 is my next sort of expiration cycle, at least I should say personal expiration cycle after that. So yeah, there's just nothing that's really around management time, and there's nothing that is, dated short enough that I'm worried we're going to get some kind of massive pullback that could mess it up right around the time of expiration. So yeah, sort of just sitting on my hands for now, letting the things that are already secured max profit cruise in that way. And also at times like this, I like to look around and see what I have that is not moving against all-time highs in the market, or maybe moving down, and see if there's any red flags popping up there.
Yeah, I mean, what's been weak in the strong market? I mean, good Lord, I just zoomed out on the 1 week, 5 years. And this market is strong.
Yeah, I'm getting killed on Hormel Foods, HRL is the ticker. This one, they had a big dump on earnings, and I didn't think it was quite justified. I was trying to play a quick recovery back off a bad earnings call a few weeks ago, and it has just sat down in this 24-25 range and not moved a single inch. And it came down, I think it was at 32, and then took a giant gap down to like 24. So I got a little bit aggressive with this trade, which was posted in the follow page when I took it. Bullish put spread, sold the 28, bought the 26. So I needed over 28. The cost basis was fantastic when I put it on. Was a part of the reason for it. But yeah, this has just stagnated hard. Usually those parabolic earnings moves, you'll get at least a little bit of a dead cat bounce or something, and it just has not come.
Yeah, no, I mean, this thing's been pretty dead lately. IB rank is still there though.
That's what I get for doing like 4 seconds of TA right after an earnings call on a company I've barely heard of before in my entire life. Guys, do your due diligence.
Let's see. As Becky reminds us, the Fed has never gone against the market when odds were above 55%. Is that the case?
Interesting.
That means 90% is pretty high relative to the other prior announcements then.
Yeah. I mean, those. I mean, efficient market hypothesis. I can see how that would be the case.
Efficient market hypothesis.
Fed likes to telegraph. It's true. Well, yeah, the Fed, that's the whole thing, too. It's like the Fed's job isn't to confuse us. It's, in fact, quite the opposite. It's to be transparent about where we're at and lead us in a good financial direction. So, yeah, it's not like, they're not trying to keep this a secret. I mean, they give forward guidance for what they're going to do the next meeting every time they do this, for crying out loud. So.
Taking a look at gold here, gold has still been on an absolute tear. I don't know if anybody else has been trading some metals, maybe some silver, some gold. Gold is one I've been meaning to look at a little bit more, but in this volatile market, it's been tough to get your toes wet a little bit.
Well, you're short some gold, or you never wound up putting that on?
Oh, actually, I am short some gold. I just mean more so just trading gold. I've never really traded gold directionally, but I did sell an out-of-the-money call spread on gold. But this market has been no joke, especially over the last week. So I'm thinking this interest rate decision this week will shake more things up in gold than it already has been.
Yeah, that's true.
Other than that, we got gold, we have Google, NVIDIA, we have some QQQ, we have some SPY, all leaning short delta, except QQQ. We have an out-of-the-money put spread that we sold on QQQ. We can look to manage that one here soon. Other than that, I mean, really, this interest rate decision is really going to be a huge determining factor on how a lot of these positions are managed by the end of this week, 5 days. These have what? I think we got a week and a half or 2 weeks left before managing these. So maybe we get some directional turn, and until then.
Yeah, I'm still taking advantage of this UNH move, which is chilled out severely today. But my full position there has finally swung completely into the green, which is insane. This thing was down like 65% on me at one point, and has come all the way back from the depths, and there's still a lot more room left.
You're talking about UNH?
Yeah.
I mean, it's holding the move, the leg up it put in last week. It's holding it. I mean, we pulled back a little bit, but it's holding most of the gains.
Yeah, I mean, it's just in a really great spot to me. I mean, and now all the giant whales, the Warren Buffetts of the world are starting to put their money where their mouth is on that as well. But yeah, it just makes so much logical sense. UNH. I mean, yeah, I've gone on this rant before, but the only thing that's fundamentally holding them back right now is this DOJ investigation. The CEO thing, like, obviously tragic. That's going to hurt. I understand why their share price tanked when it did, but ultimately you can get a new CEO in there who can do just as well. Their clientele hasn't shrunk at all, and nothing fundamental has changed about the company outside of this DOJ investigation. So I think as soon as this DOJ investigation concludes, whatever conclusion they come to, even if it is a guilty verdict and UNH has to pay out some fines or something, I think just the certainty from that is enough to prop this up, maybe all the way to 400. And if it's a good verdict for UNH, I think it could be even higher right away. And then after that, there's nothing fundamental that keeps this thing from going back to 600. I don't know if it'll get all the way back there. But yeah, I'm bag holding shares, naked shares, like I can have a freaking strike price expiration on shares. And then I also have June 18th, 2026, 500 calls.
We got a lot of time on those. Yeah, we're chilling.
Yeah, I'll be in the money before the end of the year, so
It's all short delta, huh? Rancher, I am. I have all short delta on right now. My beta weighted delta is -30. So it sounds very aggressive, but it's not that bad. It's just a beta weighted 30 delta to the downside.
Yeah, Errol and I have been doing this forever now, where I'm perpetually long and he is perpetually short. My beta weighted delta for my portfolio is 72, positive 72.
Yeah.
So.
Yeah. See, -30 is not that bad.
No, not really.
It's just playing for a little brief pullback. I don't think the world is ending. Not yet. Let's take a look at the VIX. This is what I've been most excited about. Well, first of all, VIX is popping off right now. So it seems that since we've been on here, the market might be selling off.
I was gonna say, yeah. Since VIX popping on a green day is uncharacteristic.
Yeah, I was about to say.
There you go.
I didn't recognize we had the pullback in the market. I thought we were still at the all-time highs for the day and today. So I was like, VIX is popping right now, and the market is going up. What is going on? But I mean, to the point that you just made, VIX was going up while the market was rallying this morning. It's just popping even more now since we're pulling back.
Well, and in theory, there should be.
What's that?
In theory, it should happen often where there is enough upward volatility.
Oh, right.
VIX is able to move.
Yeah.
But it just, the VIX, it's just hilariously always seems to be an inverse of the S&P 500, like a microcosm. I'm
so conditioned to it already.
It is. Yeah, it's strange.
So we'll see if we get any type of pops. What's going on, Bob Sala? Taking a look at VIX right here. Let's see what's going on with some of these metals. Gold has been an absolute beast.
It might be high time for me to get involved with the VIX again, off all-time highs.
You think it's time?
Seems like a good spot to do it.
I mean, right prior to the FOMC this week too.
Oh yeah, I always like to keep a right at the money VIX call leap around, just to kind of serve as a portfolio hedge in the event of massive catastrophe.
Massive catastrophe.
Let's see what some stuff looks like into the new year on the VIX here.
What they got over there? Looking at silver. Silver's been going on a tear as well. I'm going to be a little patient since we have that gold spread on in there.
A little pricey. I'm going to go a bit shorter dated.
Google's another one. I don't know if anybody else has been trading Google, but that's a man on a mission. Earnings after the bell November 4th. Google is a man on the mission, no doubt.
Yeah, not seeing anything I'm in love with on the VIX here.
Nah, nothing too attractive.
Yeah, it's just the expiration cycles are a bit prohibitive with the VIX. I mean, that's always the case unless you're trading something super close. But anytime I want to get longer on a longer date like this, it's always a little bit annoying.
Is this true? What's going on with TikTok in America? I just seen a comment made about that, and I could have swore a couple hours ago I had seen another comment made about the TikTok ban potentially moving forward. I didn't have any time to fact check it or go see what the whole fiasco was about. Do you know anything about that?
I haven't seen anything on the ban front. Everything that I've seen has been reporting that there might be a buyer. That there's
really
that those talks have been going well.
I didn't even know the conversation came back.
No, yeah, it never went away. I mean, even when they unrestricted TikTok the last time that they did that, I'm pretty sure even then, the plan was always for that to be a temporary thing, until ByteDance was able to find a buyer in the U.S.
Yeah.
But yeah, all I've seen this morning, unless something has changed since 3 hours ago, is that there's trade talks going well with China, and that TikTok buyer might be in the equation as part of that.
Yeah, buy TikTok. Dang, we're throwing shade on TikTok like that still. Meta not doing too much. Meta's volatility been a little dead lately. Take a look at Apple. Apple's decent. Ivy rank, kind of there, not really. I just have a hunch. I got a feeling we got a lot of traders waiting to make a lot of decisions after this move. It's just a hunch that I have.
No, yeah, you always kind of get into this waiting period on these FOMC weeks, especially when, no changes in what we're pricing in.
Right.
Yeah, got to kind of just wait around and see how the market reacts. I mean, yeah, I think we have, like you said, I think we have everything baked in. I think this could be, in terms of market reaction, a nothing burger if we get the 25-point cut. Yeah, sort of just a little bit of a
was Oracle a buyer of
waiting period here.
TikTok? No way.
Oh, that makes it look like it.
It does make it look like it. Anyways, anything else you wanted to check out before we start to?
Interesting. Oracle.
Would you like Oracle? You like what you see?
That's intriguing. I just wouldn't have expected them to step in to be a buyer here. Oracle, though, I mean, giant corporation. I mean, obviously has gotten a lot more coverage recently, but this has been a top 25 largest company in the world for some time. So yeah, I guess I can see it. I don't know. I was really fully expecting Elon to just do it. it was kind of
to buy it.
Yeah, it was kind of where I was at. He already has Twitter. Build that social media portfolio out a little more.
I mean, why do you think he wouldn't buy it if he can?
Oh, he's. I mean, at least publicly, he's this big advocate for free speech and wanting people to be able to get their voices out there and everything. TikTok, largest social media platform in the world, massively profitable as is without making any changes to it. This seems like an investment that would make sense.
Why wouldn't he buy it? I'm so sus of Elon. I'm just so sus of him now.
I mean, it feels like a very similar situation to what he did with Twitter to me. It's like there is, he feels that there is some moral reason to buy a social media platform.
Yeah.
That could be a profitable investment. So why not do it?
Yeah.
That was
I'm just surprised he didn't scoop up TikTok. I never really, played with those ideas in my head.
Well, yeah, and he's boys with Trump now, right. And Trump's the one that's pushing for the TikTok to be sold to the U.S. in the first place. So yeah, it just seems like all the pieces are there. But yeah, Oracle, that's interesting. Appreciate that, Soul Train. Thank you for the deets. But no, yeah, I got no closing remarks. I will float this actually. Qualcomm, which I have spent a lot of time complaining about on this show before, has taken a slight little upward move for me here. I grabbed some stuff like towards the end of April. I have a short put and then a much longer dated call Leap. But yeah, we were channeling forever. But man, we are back on the top end of this channel, and so help me God, if Qualcomm cannot break this damn 160 to 162 resistance level, I'm going to lose my mind.
That's a barcode, brother. Go ahead and scan that.
For real.
That's not going in.
I know. I don't need anything crazy, man. Just anything. If we could get a confirmed break up to that 170 level or something like that, I'd be over the moon. I don't need 200. But damn it, people, buy Snapdragon chips, please. Help this company out because they are not helping me as it is right now.
No. We won't touch too much on those topics, but I think
Ellison's kid is the CEO of Paramount and Skydance. That's interesting. I guess I did know that, but
who said that the other day? Pisky?
P-Sky? That was me.
That's
Yeah.
what you said.
Yeah.
Pisky or P-Sky? That's what it is.
Gotta go with the program. They said Walmart was going to try to buy it.
Yeah.
It's back when it was a security risk. Interesting.
Yeah. No, obviously I'm not gonna get into all the weeds of the politics and things like that, but I do think it's always interesting subjects to touch on.
Yeah, think about the TikTok shop integration with Walmart.
No, it would go crazy. Oh no, that's Jeff Bezos' worst nightmare. I promise you, Jeff Bezos is lobbying to block that as we speak.
I guess Amazon could do it too if they wanted to.
I hear Walmart's online e-commerce or online e-commerce. Walmart's
as opposed to their in-person e-commerce.
Yeah, I hear it's actually really good. Like, I've never bought anything off of Walmart, but I was like, yo, who's actually using Walmart's? I hear it's with Amazon. And it's pretty functional.
The reason it works so well is because they just literally copy-pasted Amazon's exact e-commerce model because they have the infrastructure to support it. But it works.
So that's the second mover advantage.
Yeah, it's the exact same thing. You spend over $30, you get free 2-day shipping, all that good stuff. But yeah, they just have the DCs and the warehouses and the stores to be able to facilitate.
Would you rather be the first or second mover? It's like the first mover, you get to take advantage of all the market share, and if you capitalize on it correctly, you get to take advantage because you're the first player in that niche. Second mover, less risk because there's more proof of concept, but you are going to have to copy off of the first concept. And then, as a first mover, you're going to feel like, well, damn, everybody's copying me now. Everyone's taking my ideas. What would you rather be? There's really no right or wrong.
I think that there's always an advantage to being the first mover to me. I think that allows you to, try to stay out ahead of things. And you just, I think that you generally get to be more visionary. If you play your cards right, you will always stay one step ahead in that regard. But that's the thing is you can't be the first mover and then let the second mover be the first to do something else.
Right.
You have to keep them second the whole time, which Amazon has done a great job of so far. There's nothing that Walmart has done that Amazon has not done first. And I'll tell you what, when I worked at UPS, which the last year I worked at UPS was in 2021, but as early as 2021, our volumes of stuff we were receiving in for our box holders, like the people with the PO boxes in the store, not actually PO boxes, but it's all nuanced and weird. Anyway, the shipments that would come in, it was Walmart stuff was probably about a third of the volume of Amazon that we would get, but that was definitely the second most common package that we would get was people ordering stuff from Walmart and all kinds of stuff too, toilet paper and stuff. Don't order toilet paper online. You got this big ass box for no reason. Please go to the store and buy your toilet paper.
I did just order some toilet paper.
Did you really?
Yesterday.
You sickened me.
But you got to hear me out real quick. Remember your thought. Had to order stuff, right? I've been ordering groceries.
Yeah.
I have my vehicle out here in Chicago, so I'm like, okay, let me order these groceries. It's a lot easier to get them in the fridge. Been pretty easy. They've been just bringing the toilet paper too, so.
I'll
take it.
That works. Actually, I don't order toilet paper with my grocery deliveries because I don't.
Sanitary?
Well, no, I just always think about the space. I don't know. I think I have to make 2 trips or I don't know.
You're putting your stuff in your own.
They got their little wagon. But anyway, toilet paper and paper towels are infrequent enough purchases that I just walk down the store and grab them, and then I walk back with toilet paper on my shoulder.
That's completely valid.
This. And as I'm walking, I'm like, man, everybody that sees me is thinking, oh, that guy poops.
Yeah. The other day, so I was doing that, but with the case of waters. Right, I felt like I was him walking down the road with the 36 pack on my shoulder. No, anyways.
Yeah, but that's different though. A delivery is a different story than just purchasing the item one off on Walmart by itself. That always struck me as a little strange. I don't really care, guys. Order whatever you want online. We live in the age of convenience, man.
Caveat: I'm one of the proponents that will argue against ordering things online. I just think it's not very convenient. I think depending on what you're ordering, that's why I was so against Instacart and actually order. Now I go through Kroger. I go through the actual grocery store. I don't have to use Instacart but it's always been such an inconvenience. I love when I can pick something up. I know exactly what I'm about to purchase. I don't like how this looks. I don't like how it feels. Whatever it is, like the most little things that you might critique before you make a purchase, I hate running into any of that. Will I order any clothes online? I hate it. I literally, how do you know if this is going to fit correctly? Sometimes the way something is seamed is the decision that makes you purchase something or not. So when it comes to online shopping, I just hate not getting exactly what I thought I was going to get. So convenient.
Yeah.
Not my first choice.
Clothes are definitely difficult, but I don't know. I mean, it's just like everybody is constantly taking steps to try to fix, everything that you were just saying. I mean, it only is ever getting easier and easier to return things online if you don't quite like them or whatever. But that's just an additional inconvenience. I agree with that.
I don't even know what the process looks like because once I get it and I don't want it, I'm like, well, I'll just call it a dud.
Yeah, no, I mean, Amazon especially is insanely easy returns. I mean, you don't even put the item in a box or anything. These days you just walk into UPS with the item in your hand and scan a QR code and you're good to go. Which is about as convenient as you could possibly make it. But again, that is an extra trip that you have to take to do something. Yeah, clothes are a little more challenging, but I do a ton of online shopping and ordering. The only thing that I don't like about ordering the groceries online is the rare case where something is out of stock, because for a while, I would try to set substitution preferences and it would get all weird. So I've gotten around that by just saying, if item is out of stock, refund it for everything. I'm like, don't use your judgment and try to get me a different item that's close. Just refund it. I'll figure it out. And that's done a lot for me.
Let me put on a quick reminder, everybody. I'm going to do that exact same thing because I just ordered a couple things. They just came in, and I ended up not receiving two of the things. I should have pressed No, I'm sorry. It swapped it with two other things that I literally would never purchase in 1,000 years. So one of those was a chicken breast. I got no chicken breast for the gains this week. That didn't come in. And then number two was, I forget, it was something for the bathroom that I needed, but it was a very particular thing. And those substitutions caught me off guard. As you can tell, I'm new to this.
Well, yeah, and
so I might have more questions.
Yeah, and it's even like just funny little stuff. Like I remember one time I ordered a box of the 6 packs of Oreos, and I do that on purpose because I can't eat a family size pack quick enough and they get stale by the time there's like a row and a half left. So I like to just have them compartmentalized out into little 6 packs, which is perfect. It makes sense.
Past the 6, the other 6 get stale, and it's a waste.
No, it's true. Well, because a family size thing of Oreos, it's probably
a lot.
It's like 45 Oreos.
A normal person, I would just say, would just smash the other 6.
It's more than 6. It'll be like I can eat like, I don't know, say there's 45 in there. I probably eat 20 over the course of like 3 days, and then we're getting into stale territory, and it's like, Oreos are a lot. I can't just sit there and put down on Oreos.
For the resealable, I thought that had a little bit to do with
it. Helps. It helps, but it's just not perfect.
So was it just a marketing tactic? Be honest.
No, I mean I think it helps more than if they were just exposed to open air in a Ziploc or something. Like it's.
For sure.
I guess it's probably equivalent to a Ziploc.
Yeah. They're gonna turn into some crackers. You just leave them.
Yeah, but they do. It still does get stale quicker. It's like if you get the big cardboard box at Goldfish, it's like they eventually start to get stale, even though they're
that's valid.
Nice and close.
I haven't seen one of the boxes of the cardboard in a while.
Yeah. But anyway, point is, and the person shopping for me very logically substituted the family size pack of Oreos when they were out of the boxes of 6 packs of Oreos. But it was like a very specific reason I did not want that. And so then that was like the first time that I was like, okay, I got to start switching this to refund because I can never be mad at somebody for making this substitution. That makes so much sense.
Right.
But it's, it's like too specific and weird.
Yeah, 100%.
Please convert that stash into handlebars. I literally almost
laughed while you were talking.
Oh man, I can't make the move to handlebars, Wolf, because our good friend Chase, who works on the other side on the trade desk, he rocks the handlebars, and he also had his mustache first originally. So it would seriously be stealing his whole flow if I were to go for the handlebars. I like rocking the chevron. Okay.
Look, mustache is fire. The handlebars and curly is just you just won't ever forget that twirl.
It's true. It's true.
Ever.
Yeah. No. Yeah. It definitely keeps you looking distinct. But I got my beauty routine in the morning is already way longer than I want it to be. I don't need to add gel in the mustache.
Our bandwidth is
if you cannot eat that many Oreos, then you are not trying hard enough. I figured that take would pop up in this chat.
Thank you, Soul Train.
I mean,
tell this man.
When I was younger, I definitely could. But yeah, it's like too sweet now, man. It's just
too sweet. Lock in.
It's too sweet. I can't do more than like 4 or 5 Oreos in one sitting. I've moved over, and what I really can put down on now is fudge stripes. I'll buy those.
What are those?
You don't know fudge stripes?
never
Keebler
heard of that
fudge
in my
stripes?
life.
Look them up. You
never even
you saw them in the lunchroom when you were a kid, for sure. They were
Fudge stripes.
Yeah, this guy doesn't know fudge stripes.
Oh,
guys.
yeah. Those are OGs.
Yeah.
The OGs.
Yeah, we have them in the kitchen out there sometimes.
Yeah, those are good.
But anyway, yeah, I'll buy those big family size things of fudge stripes, and they are like slightly less sweet. It's more like a shortbread with just a little bit of chocolate. That I can do as many of those as you need me to put down on if you give me some milk. But Oreos, it's a little too.
They're very rich too.
It is.
Oreos are very rich, and then the cream. Rich.
I'm a big fan of the put the fork and the cream on the Oreo to dip it in milk. You ever?
I've never seen that, but I see the utility in that.
That's meta. Yeah, if you ever fork, just put the fork straight into the cream. You can dip that thing as long as you want, fully submerged. Hands don't get dirty. It's like the chopstick thing when you're eating Cheetos.
There's something that I do. Oh, fun. Not that this. I don't even know why I'm saying this. Not that this even matters. But whenever I eat, I only eat with my left hand, and I only use these two fingers. Ever since I got my first touchscreen phone, the first time I got my first iPhone, I was in the middle. I'm so serious. When I got my first iPhone, I didn't want the screen to be dirty or greasy on it. And one of my best friends, Marley, he had like one of the cleanest screens. He always wiped it. It's such a knack. It's so weird. Because why does it even matter? But anyways, I had such a thing of keeping my screen clean since then. And I don't eat with my left hand. Or I'm sorry. Yeah, I don't eat with my left hand. And if I do, I only use these two fingers. And I don't like to eat with my right hand. It's one of these two fingers that I don't use. So when it comes down to like cookies, burgers, all those type of things, I would be the exact one to try that Oreo thing. Well, I don't like getting my fingers dirty from my phone and my computer and all that.
My Gen Z angle on that is that I just go left hand is phone hand and right hand is eating hand.
Are you left-handed?
No.
Huh.
No, I'm a righty. Are you a lefty?
I'm a righty.
Oh, yeah, okay.
Yeah,
That's what I thought.
Yeah.
So I'll go, just like food. Like just now, what I was doing at lunch. I got a sandwich in the right, and you can go full palm on the right hand, don't matter. But then the left one stays clean so that I can scroll my phone.
Exactly.
Because I have a dopamine problem. Emmett, Keebler fudge stripes are the bomb. Hell yeah, they are, Emmett. Preach. Thank you. I'd like to eat a handful of Oreos and then smile for the camera. Oh, man. Mike, I'll be sure to. Yes, he is over there doing well. We're in the same building up here. Actually, it's fantastic.
Actually, just walked into the bathroom, caught him curling that mustache.
Yeah. No, it's that mustache. It's a lot to maintain. Yeah, he keeps that wax on him, and it's hard to keep that thing up.
No, that was funny. With that being said, I'm gonna we can just jump back into the platform, do a quick rundown before we start to wrap up here for the day. Want to take a quick look to see what the volatility index has been doing since we've.
Yeah, big deal. My dad's like that. Like he's a righty, but I know he eats with the left always. He's big on right hand for the knife, but then keep the fork in the left. Optimization.
Oh, I would get in a lot of trouble growing up if I had my fork in my right hand growing up.
Really?
My dad would just look at me and just put that fear in you. And he used to tell me, he goes, when I was a kid growing up, if I didn't have my knife in my left hand and my fork in my right hand, my dad would get the back of the knife and like your knuckle with it, like, come on, use your utensils. So whenever I'm sitting by myself, I'm like, knife in the left hand, fork in the right hand.
I go knife in the left, fork in the right, but then I guess maybe I'm just not high class like you. But I switch the fork back over. I set the knife down, fork in the right.
Well, keep in mind, my mom wasn't doing this.
Sure.
Right? So the wife of my dad, side of the fork, but I guess my dad was like,
Huh. Yeah. How about that?
Yeah.
I do. Depends on the situation, but most of the time I do pizza with fork and knife. People hate that.
You know the habit I did get into when I had braces? Fork and knife for the burger. Because biting into it was such a pain getting all the food in there. So it was like knife and fork.
Sure. Yeah.
Perfect. With that being said, NASDAQ still ripping towards all-time highs. It's looking like we're not having any type of weakness hit this market until the FOMC this week. So I know on my end, it's going to be a lot more boring. I don't know if anybody else trades futures a little bit more directional, but with the indecisive price action, sometimes it makes it more difficult to make a decision and to trade these type of markets in this price action.
Yeah, I almost never trade neutral, but this does kind of seem like a good opportunity to try to get like some kind of midweek expiration on something going for neutrality and just post up some ridiculous BP for to get 10% of it back and have it expire at the end of the day tomorrow. Like maybe I'll try to find an angle like that.
Yeah, if you sell it, I'll buy it back from you by the end of tomorrow. But no, I was looking a lot at this trade tab.
Yeah, should I put in like a ridiculously low bid for Apple right now, and then you take the other side, and we can mess up the whole options
Put
chain?
it like
live on here.
Go sell it for. Give me a good deal.
Just do a live auction right here.
Just give me a good deal.
I got one share of Apple, guys. Let's do a little market in the in the chat.
Exactly. All right, zooming on over. Bear with me now. If we can get all the way over here. All right.
I hope they can hear you clicking. I hope you guys can hear the clicking. I don't think you can, but that sounded really funny.
All right, there we go.
Never watched Seinfeld. I could quote a lot of Seinfeld because of my father, but I could not. I have never watched an episode of Seinfeld myself. I did Friends. I know that Seinfeld handed off right into Friends there. That was the whole thing. Friends was on after Seinfeld for the first. That was how they got it going at the beginning. I know, guys. You don't gotta tell me.
All right, we're gonna get short till EOD, end of day, and we'll manage and see if we can go from there. Really, I just wanted to see a couple functions on here, but now that we're in there, we'll keep it for now. But what is really nice about this is you can kind of see the dollar fluctuation right there. So right now we're down a couple bucks. Right now we're down $2, $2.50, $3.50. It moves in those like half point increments.
Anyone like any Forex right now? Shout it out. If so, Bob, that yen trade you gave me worked out. That was great. Good work. If anybody has any Forex sauce they would like to put in Gus's portfolio.
We're trading shekel over here, bro.
Yes, for those that are unaware, I know nothing about Forex, and I still have yet to lose a Forex trade. I just keep winning them, and I never, ever, ever know what I'm doing. So what do we got? You want Midas to touch your Forex position? Let me know right now, and I'll do it.
All right, now we're gonna put in a stop. We will risk about $30. So if we risk $30, that's about 60 points. We just entered, where did we enter at? 1247, 264. So we'll put our stop at 294, which will be, or I'm sorry, let's do 294. That's $60. So let's go, yeah, we'll go 30 points, 294. We'll risk $60 on this. 294. Right now we're trading at 275. What's the high? The high is almost 294, so we could put a stop at the highs. There is. There is. Oh, whoops. Go stop. See if we can move this.
Today's 15. Yeah.
Is today the 5th? Today's the 15th. Yeah, it is. Just put this here. Brother, let me just get that in. What is that? 295. Whoops.
My watch thinks I'm standing up.
Say that again.
My watch thinks I'm standing up right now. I'm deceiving Apple.
What is it telling you to slow down?
No, it said I could do an hour of my stand goal if I keep moving around.
It's letting me. Oh, there's a stand goal?
Yeah.
I've not been hitting that.
Yeah, you got to stand for 1 minute out of the hour for 12 hours out of the day.
1 minute out of the hour?
Yeah, like once per hour you have to stand up for a minute is the deal. It's like a rolling 1 hour thing. Yeah.
Load this.
Yeah, I'm eyeing a Iron Condor on SPY. Expiring EOD tomorrow. There's actually a solid amount of meat on the bone here.
On what is that?
Just SPY. Yeah, I'm looking at Iron Condor squeezing at 658, 663.
Trying to get this stop order in there. Let's see if we can work our way up in there.
Yeah, screw it. I'm gonna put this on.
What's that? What are you doing?
I'm doing a short Iron Condor. Need SPY. What?
What is that in?
SPY. Oh. Yeah. The TLDR is need SPY between 658, 663 end of the day tomorrow. I would be surprised. I'm not threatened at all to the downside. I actually thought about doing this disproportionate to the upside just slightly. If anything, I'm concerned about the upside there, but I think tomorrow especially will just be nothing because everybody will just be sitting around waiting for this Fed decision. So we'll see. Let's see. Can I get this buying power down?
Let's go. we'll put in the stop at 290, and then we'll just adjust it from there. There we go. So we'll leave it here. I don't know why it was giving me an issue for a second. There we go. Okay, there we go. There we go. We got the stop in. So we have the stop at 24,290. We got filled at 24,264, 290. That's what, 26 points. And we're trading micro NASDAQ. So if we do 26 times 2, that's going to be 52. And that's going to be our risk on the trade. So we got that stop in. Now we don't got to worry about it. We could even drag this down a little bit. Now we have the stop in at 288, so we just saved a couple more dollars. Said Gus, so can you do 2 consecutive minutes over 118 minutes?
Can you do 2 consecutive minutes ever 118? What, Emmett? I need clarification. 118 minimum, perhaps, could be the interpretation. 2 consecutive minutes. Yeah, I can't figure that one out. I feel like
consecutive minutes over, maybe over.
Over. I feel like I'm having a stroke.
Maybe over.
Something about Forex? I don't know. Emmett, I need clarification. I love you. I wish I could understand this.
Martin was one big deal that, I'm not gonna lie, I wasn't the biggest fan of. Martin was one of those shows that came on right after I was just watching an episode that I was really enjoying watching, and then when I saw Martin popped up, I was like, dang it, my show's over. But I know Martin was a fan favorite. My older brother loved it. So nothing against it.
I'm trying to get a feel here.
Minutes, he said minutes. So can you do consecutive minutes over 18 minutes?
2 consecutive minutes ever 118, over 118 minutes? 2 consecutive minutes over 118 minutes. What could this be? This is like a fun, this is like a fun brain teaser here.
The code.
The numbers, Mason. What do they mean? Would that be 120 minutes? That's as good a question as any of them, Grumpy Mike. I do not. He's talking about your standing rule. Oh.
Yeah, I would actually like to know a little bit more about this standing.
2 minutes, 100. I see, Emmett. I understand.
I don't.
No.
Help me.
Is the answer. It's really weird. It's a rolling 1 hour period. So as soon as you, like the first time I stand up out of bed in the morning and move around for 1 minute, that completes my first hour of the day. And then, but it's not clock time. So then that starts a 60-minute timer until it will trigger me to do my next hour. And then I have to stand for a minute and can sit back down. And then that initiates another 60-minute timer. And when you look at it in your fitness app, it's broken up by clock hours, but it's really not like that. So no, to answer your question, no, you couldn't do like, say, stand for a minute, 8:58 to 8:59, sit down, wait for the clock to roll over to 9:01, and then stand up and sit back down. And you also couldn't do 2 minutes and then have that count for 2 of your hours. Yeah, the whole point is to like keep you from being sedentary and make you get up once an hour and walk around. Yes. Okay. Yes. I appreciate the clarification, Big Deal and Emmett. That was really funny. That makes total sense now that I understand. I just had forgotten that we even had that conversation at all about the watch thing. I just got filled on the short iron condor on SPY. Long the 657, 664, short the 658, 663, expiring EOD tomorrow. Each contract was 28. Yeah, $28 in credits for roughly $70 in buying power, which is not a ratio I would usually like to trade at, but considering this is something that is expiring in 27 hours from this moment, I am willing to get a little down and dirty with that. So, yeah, grab that neutral on SPY into tomorrow, and then we'll just hope that tomorrow is a just nice flat waiting day. I never trade neutral, ever. So if I get burnt here, this will just be my one neutral trade for the year, I guess.
For the year. All right, Big Deal. Putting in these levels that we'll come back to later this week. I know we only got a couple minutes left, so we'll touch back on this tomorrow. We'll be back. But I want to put these in from now, as we got a couple minutes.
I meant over the course of. That's so funny. I couldn't figure that out. It's so clear what that means now.
We got a couple minutes left. We'll see. We're pretty close to this stop getting filled over here, so maybe we can watch it get filled live here in a moment.
Yeah, man. This would be so exciting. Should I stand up and flip this table?
We I will stand up and flip this table.
Could we flip this table?
I don't think so.
Oh, yeah. No, that ain't.
Oh.
That's not.
That put me back in my seat.
Yeah, that's not coming off the.
That put me back in my seat immediately.
This thing's bolted down or something. that's serious. Some serious tasty construction there.
No, but we'll be using this active trader ladder a little bit more throughout this week, and then again, we'll be back here tomorrow. So anything else to touch on, Gus, before we start to wrap?
I don't have anything else. Is it Dr. Jim next?
Is it Dr. Jim next? He might be next, so be sure to stay tuned for more segments coming on next. No, anything to add though?
No, nothing else. Table flip competition, big deal. The table flip competition will be us both sitting here going for a little while. But if you guys want to see it, we'll do the table flip competition. That's my closing
I want to hear some
remarks.
squealing. You want to see some veins popping out of foreheads. That's going to do it for today's segment. Thanks for taking the time to hang out with us. We will be back tomorrow at 4:30 Central Time. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
And this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Monday edition of what it is that we are trying to do. Man, I'm glad that you guys are here and you are part of what it is that we are trying to do, whatever that might be. I have a very, very low confidence interval that we will figure it out here today. But you're here and we get to do whatever it is we're trying to do together. So thank you guys so much. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the program. For the 77th consecutive day, you can celebrate if you are a bull and you can commiserate if you are a bear. So go ahead, John, bring us into the market. Man, it's just like, it's the Bill Murray Groundhog Day. Every day is exactly the same. I mean, it could be a Nine Inch Nails song. Like, there's a couple different ways that you could play this guy. S&P's up 30. Risk-free instrument, also known as the NASDAQ futures, extremely high risk product, up 172. You got the Boomers up 45. You've got the Russell 2000 futures index up 11. And man, look at all this green on the screen. You've got bonds up, you've got notes up, you've got oil up 60 cents, you've got UB40 up. Of course, gold is up another 34 points because why wouldn't it be? You've even got silver. Where's silver at? Silver up 22 cents. So the shifties are celebrating. The Hunt brothers are celebrating. British pound is up. Euro is up. Market is so strong that even the VIX is up. And it's not up like 5 cents. Like, it's not up like 7 cents. I mean, the VIX is up 5.5%, right? So it's not that often that you actually see market prices and market volatility moving together. Now, volatility futures, I believe, are not up. They're actually down a little bit, I believe. Yeah, down a nickel. But even still, it's like, man, that's pretty incredible given the strength of the market. And so volatility up, market up, I don't know what that means, but maybe the volatility bros and brosets can help us out and let us know, kind of what's going on in volatility world. I mean, it would make sense intuitively that it's, a lot of option buying, a lot of options activity, especially on the buy side, of course, lifting the prices of the out of the money options for the SPX that is then causing the VIX to rise, because that is literally what the VIX calculation is. It's measuring essentially the option chain of the SPX options. So as those option prices move higher, the VIX itself is going to move higher. Well, everyone is getting ready for, what are they getting ready for? They're getting ready for the Canadian durable goods print on Thursday, of course. Like, this is the thing. This is the market move. Like, I know we've got FOMC and we've got Powell and we've got, purple ties on purple ties, but that's old news, man. Like, that just does not matter. Everybody's waiting for that Spanish durable goods estimate revision forecast that comes on down the chute Thursday. That's going to be the real market mover. So it makes sense. The volatility is up 5.5%, even with the market printing all-time high after all-time high. Now, you know what's funny about this? So we'll get into the portfolio and talk about some different things happening. I mean, it's not too much that's happening, on the good side, on the green side, but we'll pay homage to a couple of positions in the portfolio here. But if you look at, so now we're trading Z. So now we are formally trading Z. And this is always like a little bit of a wake-up call, right? Like, this is always kind of like, ooh, like, wait a minute, did we just rally 60 handles in the E-mini S&Ps and I missed it? I mean, I've been watching every tick for the last 9.5 months, and I missed a 60-point move in the S&P 500, and it always catches me off guard. I'm sure maybe it catches some of you off guard too. But this is just the roll from the September to the December contract, because this Friday is obviously September options expiration. It's triple witching, which means you have option expiration, you have index expiration, and then you have, let me think. What's the third one? I always forget the third one. It's kind of like The Perfect Storm, that movie with Mark Wahlberg, George Clooney, and the other guy. Triple witching, exact same thing, right? It's options expiration, it's index expiration, and then there's a third one there for the old triple aspect of the triple witching. Just like that other guy in The Perfect Storm. But did he really matter? Like, did he really carry the movie? No, it was Mark Wahlberg, George Clooney, and the storm itself. Like, the third guy's kind of like, it doesn't really matter. So it's the same type of deal. But Friday, so with September expiration, you do have, the quarterly futures are indeed expiring. That might actually be the third thing that I'm missing here. But that means we're going to be trading December. Now, typically, the roll begins like at the end of the preceding week. So kind of the penultimate week before whenever the quarterly expiration is. So the roll kind of started to happen on Friday. Today and tomorrow are kind of the main roll days, and generally speaking, anyone who still has a position on that they'd like to carry forward, beyond September expiration, they will have cleaned up and rolled their positions come time Wednesday. Wednesday, Thursday, it's going to be a lot of the underachievers. It's going to be the people that are late to the party, but it still obviously is available to you to roll on Wednesday and Thursday. But it is funny though. Like, if I bring up a chart, like here, let's bring up ESU. Where is ESU? ESU 5. Yeah, there we go. Yeah, look at that, man. That's a clean 60-point differential. I mean, you've got 66.17 on U. You've got 66.75 on Z. I'm like, man, we really chewed through the 6600s. Like, we were just at 6600. Now we're at 6700. Like, that's just so crazy to me. So when you look at a chart of ESU, you can see that, it kind of tops out right where it is now, of course, because this is basically your all-time high price. But then you go to Z and you're like, well, 66.75. And so the chart looks the same. Like, you can see it looks the same, but all the prices have obviously been adjusted to the Z contract. But then if you go to the continuous contract, which you guys can see, I was kind of poking around with that before the show. And you see, it's tracking to the U, but this is going to be more valuable, when the U expires and all we're left with is the Z. And you want to go back beyond just 3 months. You bring up a continuous contract with the $sign / and then whatever the ticker is, ES, NQ, GC, whatever it might be. And that's going to give you a continuous stream, continuous contract. So you can look at historical prices a bit more seamlessly. But nevertheless, it always catches me by surprise. You got the NASDAQ, up, it's up 200 points today, up 177 on top of the roll. So the NQU is, NQU5, of course. Oh, hold on. NQU5. Yeah, so it's 287. And then you've got Z at 528. So you've got, what is that, about a 250 point differential? And so again, it's like, man, we had just scratched the surface of 24,000, and now we're more than halfway to 25,000. Like, that is some really, really wild stuff. But again, it's just the index rule that's kind of throwing us all for a loop. But the market loves it. Market absolutely loves it. I've never seen a market that loves 25 bips more than this market. Like, I've never seen a market that is just so excited about a 25 basis point cut. You won't even know it happened. Like, you will not even feel it in your everyday life. And yet here we are as the market marches on to all-time high after all-time high. But let's talk about a few of the positions in the portfolio. And then, of course, tomorrow, let me think. Well, I mean, if Powell's on Wednesday, you guys know we're going to trade that tomorrow, because on Wednesdays we have today's assignment with Errol, so we won't be able to do any trading in the From Theory to Practice portfolio. But I will probably put a couple things on tomorrow for SPX on Wednesday. Now, we've been in a pretty significant cold streak when it comes to expecting the butterflies and different things we've done for binary events. And so I don't know that we're going to necessarily go for it tomorrow, but we'll probably do a little something just to kind of grease the wheels and keep the engines revved up and moving forward. But if you take a look at and I see you guys in the chat, by the way, man, look at you guys, man. Wolf's in the house, Sam L's in the house. Man, Scramble, everything even showed up. Or Danu's even here. Man, Brian Dowdy, Rancher's in the house. Andrew Cortado in the house. Sergio, Grumpy Mike. Man, Ahmad's in the house. Joe's in the house. Joel James in the house. And I'm sure there's a bunch of people I missed too, but I appreciate you guys, man. Appreciate you guys so much. So I'm going to try to get to as many of you guys as I can here in just a few minutes. And don't forget, we are going to do some more educational content this week. I'm probably thinking, so I think maybe we're going to do a little Thursday, Friday deal. Kind of like a little, like a little quads on Thursday, hams on Friday type of deal. I think we're going to do theta. So I want to talk about theta on Thursday and Friday. And I think the way that I'm going to split it up, I don't want to let the cat out of the bag, but let's build a little bit of drama. I think we're going to do positive theta and negative theta. Now, I don't know if I want to lead with the negative theta and then kind of go with the positive theta. So you kind of lead with the bad news, you come in with the good news. Like, you lead with the gotcha and you follow it up with a gimme. I'm not sure if we'll go that way. We may go ahead and shoot from strength and lead with the gimme and then have to address the gotcha on the backside. But I think when you think about theta, I don't want to get into this too far because we're going to do this on Thursday and Friday. But I think it's very important to have a really, really complete understanding of positive theta, negative theta. Like, what you are indeed signing up for. There it is again. Like, what are you signing up for when you buy an option? What are you signing up for when you sell an option? Like, there's a lot that obviously kind of, goes into the answering that question when it comes to P&L and it comes to, directional bias and, it comes to the different ways that you can make money, in terms of trading options with, direction, volatility, and time. But if we just focus on the time element, I think there's a lot of things that we can learn together and a lot of things that we can uncover. So be on the lookout for that. That's going to be Thursday and Friday of this week. At the very beginning of each From Theory to Practice, we'll spend, it'll be quick, man. 2, 3, maybe 16 minutes each day. We'll have you out the door, and we'll all learn a little something about theta. So, all right, that's coming on down the chutes on Thursday and Friday, though. But let's go ahead and so let's take a look at a couple positions in here. So number one, obviously Best Buy's getting hit because that's what Best Buy does. And Chipotle. Wow, look at Chipotle. Wait a minute. Hold everything. Chipotle up 4 cents. So wow, I can't believe it. It's been red every single day for the last 3.5 months. And we finally have a little bit of breathing room here. We finally have a little bit of a breath of fresh air with Chipotle now up 4 cents on the day. It's awesome. It all begins here. The longest journey begins with a single step, right? And so you may laugh, you may scoff at 4 cents, but it's like, man, next thing you know, 4 cents turns into 6 cents. 6 cents turns into 9 cents. 9 cents turns into 11 cents. And the next thing you know, like, we've made 30 cents back on this position. Like, sure, we're still down $12, but again, you got to go ahead and you got to zoom in on the here and now and just take what you can get. And so Chipotle now only up 3 cents, but we're hanging on. We're hanging on to a little bit of green on the screen, and so that's kind of nice. But then GDX, you know, we've got our 2 gold positions here. I've got GDX. I have a short strangle on. It's just now being tested to the upside with 32 days to go. I'm going to sit tight. I'm just going to see if we can't leg this out just a wee little bit longer and remain a little bit more bearish in gold. Now, we are a lot more bearish, or I guess maybe a little bit more bearish in gold with this GLD short call spread. So you've got GLD at 338. Oh, you know what's funny? Because it's September now, right? Like, it's going to be fall in like a week, that's really, really crazy stuff. You know what's funny? So we're getting close to the end of the year. We're trading the Z contract now. So obviously everybody's kind of moving into like, if you're a trader now, like 2025 is over. Like if you're a trader now, like once you roll into Z, it's like it's over. Like you're already making plans for 2026. And then you're like, when are we trading the March contract and things like that? But what's funny is something that I usually think about when we start trading Z is I'm like, at least the last couple of years, I always think about what were my predictions at the beginning of the year. I can't even remember, to be honest with you guys. You could go back. If you want to know, then you can go back and check. It's all there. It's all in the archives. And I've been working on it, but my deep fake skills are just not up to snuff. I cannot go back and edit videos sufficiently. I just don't have the skills. I don't have the abilities. It'll be so obvious. So once I get better, or maybe I train AI to be better, and we can go back and clean all that stuff up, then we'll take care of that at that time. But for now, it's all still there. You guys can go watch it. It would either be the last show from last year or the first show from this year. You will see me make my predictions for SPY, QQQ, TLT, and GLD at least. I'm sure I've made predictions in other things too. I don't usually do individual stocks. I typically just keep it to the indexes. But I'm very curious to know what my prediction was for gold. I'm pretty sure it was bullish, but it wasn't this bullish. There's no way. Maybe it was. Maybe I was Nostradamus at the beginning of the year. I'm not sure, but go back and watch that if you guys want to, because your boy needs that watch time. You know, if for no other reason, your boy, I need the clicks, I need the likes. I need you guys to smash the like button right now if you haven't done so already. And of course, subscribe if you haven't done so already. And do all that during my show so I can get credit for those metrics. Though I'm not sure that we're tracking things that granularly, but maybe we should be. Anyway, GLD, 338. We have a 338, 343 call spread. We don't do anything. You know, this is the beauty of defined risk. I mean, this is the beauty of knowing your worst case scenario on trade entry. It's like, hey, I can just let this trade kind of work itself out. I don't really have to zig and zag. I don't really have to get in there and mix it up and try to do X, Y, Z, when usually doing nothing is going to be the move that I'm going to make with a defined risk strategy. I mean, that's usually the move that we make with an undefined risk strategy. So you can bet your bottom biscuit it's going to be the move that we make with a defined risk strategy, where the adjustments are all a lot clunkier. They're a lot more cumbersome than they would be with undefined risk, where things are just a lot cleaner and a lot kind of smoother from start to finish. So for GLD, we do nothing. And then that's going to be that. And then I don't even know if I'm going to get through all of my positions today, because we have quite a few. And I want to make sure I get to you guys, man. I see you guys asking me about trades. I'm like, man, let's do some trades. You know, I'm probably going to lay some stacks of cash on fire for Powell on Wednesday. But let's see if we can't do a little preemptive lighting right here. So let's see here. If I go to, yeah, you take a look at Google. Yeah, I mean, let's do Google and Meta together, because they're both basically the same story. I mean, different characters, same plot line, right? I mean, different specific circumstances, but same general start to finish. Like, it started the same, it's going to end the same. You've got Google with 4 days to go. You've got Meta with 4 days to go. Google, we are short a call spread, 205, 210. You've got the stock at 250. Right? Meta, we're short a call spread, 720, 730. You've got the stock at positive infinity. And so we didn't think it was possible after having gone through Hilbert's Hotel this morning with Tom and Tony. But there it is, man. Meta printed positive infinity. Oh, it just upticked to positive infinity +1. So we just found a new room for the uptick in Meta, just like we did this morning in Hilbert's Hotel with Tom and Tony. But yeah, these guys, I mean, Meta seriously at 765, it might as well be at infinity. And they're not coming back. It's over. It's done. It's over, Johnny. Like, it's done. Now, does that mean we're going to close the trades? No, of course not. Because why would we do that? There's no reason. All kidding aside, there's no reason to. We're already at or very close to maximum loss. We have a binary event on the horizon, right? Again, we've got Powell on Wednesday, but we've really got that Spanish durable goods print on Thursday. And so we really have two binary events. And so when you start thinking about binary events, a lot of times the way we think about these is if you think about these for opportunities on the front end, right? Volatility ticks up, we sell the volatility, we want to play the volatility crush. That is certainly one way to approach these binary events. Another way to approach the binary events is to say, hey, I need to be kind of careful here with my buying power, my capital allocation, because these things could get away from me pretty quickly because it's a binary event. So by its very definition, the probability of an explosive move is more heightened than it usually is. Both of those things are true. But there's actually a third thing that's also true. If you have a position on that's not working, a la Google, a la Meta, a la whatever you might have in your portfolio, you have a position on that's not working, especially a defined risk position, there isn't too much more to lose. You've already absorbed maximum pain. You now essentially have a little bit of a free roll. You have a little bit of a free shot at kind of a binary bailout, if you will. If I get the move, if something happens on Wednesday, Thursday with the Spanish number, maybe we get a big down move in the market. I mean, I understand that practically speaking, it's not supposed to happen. Practically speaking, it doesn't happen if the last 78 days consecutively are any indication of what this market does. But theoretically, we have to entertain the idea that it could go down, at least in theory. Now, is it going to do it in practice? That's a whole different story. But at least theoretically, we can hang our hats on the fact that, okay, it's supposed to be symmetric. Yeah, maybe not perfectly symmetric. It's 53-47, positive drift and those kinds of things. But day to day, it's like, man, I don't know, maybe we do see a red day. Now, of course, usually it's just kind of a misprint or some kind of bad quote that if you just restart your machine, you're right back to all-time highs. But I don't know. Like, it's not that crazy. It's not that crazy at all that maybe we get a little down move. And then all of a sudden, Meta's back in business. Google's back in business. Now, Google's probably gone because Google's at 250, right? And we have a 205, 210 short call spread. That's a 20% move. That's not going to happen because that was, from the antitrust case that, was ruled or not ruled in Google's favor, whatever it was. I mean, that guy's probably going to be gone. That's fine. But Meta, we're less than 10% away. We're like 7% away. Like a 7% down move in Meta in a given week or even in a given day from some big announcement or some big catalyst. It's not that crazy. It's not that crazy at all. So for Google and for Meta, I am going to sit tight. And those are the reasons why. The binary events coming on down the chute this week, but also really just the simple fact that, there isn't much more to lose in either of these trades. So in my opinion, it doesn't really make that much sense to take them off early. And then the last one I want to make sure that we cover today is Palo Alto, because this guy, well, now it just snuck back inside of our short call strike. Okay, so this guy was up to, if I bring up Palo Alto, this was a SAML trade, I know. And I think, Sam, I think you already took this off, right? Have you booked this like a few weeks ago, if I'm not mistaken. And we are still in the trade. And so I thank you for this trade. I mean, it's been a good trade so far. I mean, we've just now taken some heat on it just recently, but it's been pretty cooperative for most of its duration here. But the high on Palo Alto today was 202. And when I was getting ready for the show and thinking through the different things I wanted to do today, I was like, all right, it's probably time to adjust Palo Alto. Like, it's probably time to go ahead and roll up the puts in PANW just to be, cognizant of and be very mindful of the risk in the position. Again, especially going into a binary event, let's just kind of see what the market might give us, from a rolling the untested side standpoint. Now it's a little bit of a different story because Palo Alto has come down a little bit. So the stock has come in a little bit, which is really, really nice. You've got the stock at 199 now. You could get away with not doing anything. And if you have followed me before and you even followed me 10 minutes ago, it's like, man, when you are up at the short strike, I don't even necessarily roll out the short strike, right? To the chagrin of a Mr. Tom Sosnoff and Mr. Tony Batista, I don't even necessarily roll the short strike. Sometimes I'm a little bit more patient. Sometimes I exercise my right to use the do-nothing strategy even more so than some of my own brethren on the network. But other times, with a binary event on the horizon or because of the risk metrics in the portfolio, maybe my overall unit risk, how many positions I have on, whatever, I will be a bit more proactive when it comes to rolling the untested side. So right now, I think this is actually one of those times. And the main reason why I'm doing this today is because of the binary events coming on later on this week. I mean, again, most people think it's Powell, but I'm pretty sure it's that Spanish print on Thursday. So if we go to Palo Alto, you go to the trade page, you can see we're in October with 32 days to go. And so I don't really think we need to roll out right now. You could, You could make the case that we push this guy out to November, but I don't want to do that just yet. 32 days is still a lot of time left, and I would really like to clean this trade up in this cycle if possible, because I think Palo Alto might even have earnings coming up in the November cycle. And so if I can, I will keep the trade in this cycle. We'll be done with it. We'll move on, and then that will be that. If this was at like 22 days, of course I would roll it out in time. If this was at even 25 or 27 days, I would probably also roll it out in time. But because we're still showing that 3 handle on the DTE, I'm going to stay in this cycle and just play it in the October expiration. If you wanted to roll this out to November, I don't think that's a mistake or anything. I think that's totally fine. It will allow you to, slow down the overall exposure of that position, just generally speaking. So if that's something that appeals to you and you're like, hey, I kind of like the idea of everything slowing down, I kind of like the idea of everything just kind of softening in terms of the exposure to the Greeks, then rolling out in time can make a lot of sense. It can make a whole lot of sense. And so, so for Palo Alto, I'm going to stay in October, but I don't hate it if you want to roll this guy out. Like, I ain't mad at you, man. So let's go to this 150 put. If I buy the 150 put, a very simple way to do this, by the way, and we talked about this recently with, I can't remember what trade it was, actually. It may have been IWM. But, a very easy way to figure out, hey, where should I roll to? Man, if you don't really feel like doing any calculation, you just want to kind of take the lazy man's way out here. Just say, hey, it's kind of like this morning. Like, I saw you guys in the chat, man. I saw you guys after the show. You guys taking the lazy man's way out. You're like, it's an infinite hotel. Just toss them in an infinite number of additional rooms. It's like, we can't do that. Can't do that, right? We've got to be precise. We've got to be surgical with the way we do this. And so we're not going to create a number of infinitely additional rooms on the back end. We're going to do it on the front end. We're going to do it mathematically and elegantly, like in just the manner that we did this morning, which in the end is exactly the same as just stuffing them all in at the end, but it's more fun. It's a lot more fun. And so if you don't want to do that and you want to take the lazy man's way out here, you can certainly do that. Just roll to the new expected move that's in that cycle, or the same cycle that you've been in, which would be the case for me here in October. So if I buy back my 150 put and I go to, let me go to like a 185 put. So I'm actually a little bit outside of the expected move now, but look at this. I'm going to be able to collect another $1.84. And so this goes on top of, let me bring up my chains here really quick. If I bring up my chains, 546. So now I'm going to have over $7 collected on Palo Alto, and I'm still in the same cycle. That's a huge gimme. So where's the gotcha? Well, the biggest gotcha, of course, is now my distance between my short strikes has shrunk. Like my distance between my short strikes, that extremely valuable real estate. So we're talking like St. Petersburg, Florida land. Like this is some valuable stuff. Like, like a 1,500 square foot ranch. Like in a very, very normal neighborhood. It's quiet. There's old people everywhere. It's amazing, right? We're talking about premium stuff. That's exactly what we're talking about here. You're giving up some of that. You're giving up some of that really precious real estate between the short strikes in exchange for higher credit, wider break evens, and things like that. So it makes sense to me because the binary event is on the horizon. If this were just a normal week without any binary events, I probably wouldn't make this move, honestly. I'd probably just sit tight and just say, all right, we're right there, right at the short strike, but let's just kind of sit tight and see if we can't, get a little bit of market accommodation. But now I think it makes sense to be a bit more proactive because there is the potential for an explosive move on Wednesday. Now, of course, I think I just talked about this on Friday actually, but with the Fed funds futures and the foreshadowing of the interest rate cut being essentially a done deal at this point, you could make the case that it's not going to be an explosive event. It's going to be a nothing burger. It's going to be this. It's going to be that. But again, you would be wrong. You would be wrong because it doesn't matter what he cuts. Doesn't even matter what he says. All that matters is it purple or is it not purple? It's not even the other colors. It's either purple or the field now. Like it's not, is it purple or red or is it pink or blue? No, it's purple and the field. If the field comes in, all bets are off, man. I think Google is going to be back if the field comes in. I could see a 20% drop in Google. Oh yeah, definitely. So, all right, so let's go into Palo Alto though. Let's roll this guy up. And then I want to see where you guys are at, man. I see you guys in the chat and I appreciate you guys so much. All right, so let's see here. Let's do looks like $1.70, I don't know, $1.76 maybe. We might get improved. All right, so we got filled at $1.76. We did not get improved, so I'm a little bit surprised by that, but that's okay. All right, so we went ahead and made the adjustment in Palo Alto, and so let's see here. Let me find. I want to surprise and delight somebody here in the middle. Let's see here. Where are we at? Where are we at? If I do, let's see. CMG's up. We're continuing. Oh, I see some people commenting on CMG being up. That's what I'm saying. That's 100% what I'm saying. Let's see. Oh, well, Andrew Cortado, this is pretty funny. He says, remember the wolf trade? Sure put, you could have held on to it, Dr. J. Is it up? Is it really up? There's no way. I mean, are they still in business? Are they still solvent? Wow, it's right back to where we, wow, so I guess we would be up. That's right. Because I remember when we put the, hold on a second. Hold on. If I go to the follow page, you know, and we click on me over there. Let's click on me. And now I want to search for Wolf. I think it'll tell me what the stock price was when I put the trade on. Will it? Hold on. Maybe not. No, it just tells me. Oh, wait, yeah. Okay. Here it is. Okay, so not quite. Yeah, it's right here. So the price when I did the original Wolf trade, which was on May 12th. Wow, that was 4 months ago. That's crazy. That really feels like it was like a week ago. That's really crazy that it's been 4 months already. So we did the Wolf. We sold this put in Wolf when the stock was 332, right? And look at how bad of it. I mean, this is Johnny stuff. This is like Johnny public stuff, right? We got nervous. Like we panicked when the stock was 62 cents. It was less than 62 cents, right? And so you kind of had to do like a mixture of like, you know, like US currency and like some Mexican pesos and things like that to even like pay the bill because you couldn't even get a full cent. And so it's less than 62 cents, right? And we panicked. We said, I'm done with this trade, right? The emotions took over. I'm like, I'm done. When I quite literally only had another 62 cents to lose, less than 62 cents to lose on the trade. Had we just done nothing, there it is again, man. There it is again. Had we done nothing and stuck with the original trade, maybe roll it a couple times, whatever, we'd be almost even right now. And with the premium we would have collected and the extrinsic value, we might be very close to even at this point. That's really crazy, man. It's up 55 cents today. And so that's so funny. It just makes me laugh. Wolf. Yeah, I'm done with Wolf. Forget about Wolf. But thank you, Andrew Cortado, for bringing that up. I appreciate you. I see another one. Here we go. Gasman. What's up there, Gasman? Gasman says, hey, Dr. Jim, do you have any thoughts on a Pepsi strangle? No. Do they have, are they earnings tonight? Or is this just in general? Oh, Pepsi 87 IV rank. Is it tonight? No, they have earnings coming up on October 9th. Wow, so the day before my anniversary. October 10th, 16 years. Is it 16? Yeah, 16 years. It's felt like 60, but technically it's only 16. And so 10-9, that's okay. All right, we got Pepsi earnings. I don't know why Pepsi's 87 IV rank. I mean, did Coke take them over? I mean, obviously, we don't even need to have this discussion. This is not open for debate. These are not my subjective opinions. This is not conjecture. This is just objective fact. Pepsi is far, far, far superior to Coke. So from like a taste standpoint and like a quality standpoint, it's not even close. So I'm very curious as to why Pepsi is, you know, so high on the IV rank meter today. Can somebody please let me know in the chat? Because I have no idea. Like, I know that, I mean, Pepsi's got, let me think. Pepsi owns, I know they own Quaker Oats. I'm pretty sure they also own Powerade. Or they own Gatorade and Powerade is Coke, or vice versa. It's one of the two. I'm not sure. But let me know in the chat, like, what's going on with Pepsi. But I like it there, Gasman. Thank you so much. It's a little bit dicey with the October 9th earnings. Yeah, that's a little bit of a stick in the mud. But I really like the IV rank being so high right now that it doesn't really make sense to me. Unless there's something happening that I'm not aware of. You know what? I don't normally do this. But let's give it a shot just because the IV rank is so high right now. And this is obviously not associated with earnings because earnings are still a month away. And so any implied volatility expansion going into earnings, that's typically not going to take hold until maybe 1 to 2 weeks before the earnings day. That's not going to happen like in September. That's not going to happen, September 15th on an October 9th, earnings release. And so I kind of like the idea of doing a little something right now. And then we'll have to contend with earnings when it comes. This is something I don't do very often, but I think right now could be an exception to the rule. So let's go in here. What if I did a strangle? let's see here. You've got a $140 stock. I think buying power wise, I'll probably be able to fit this in. I may have to do a little bit of, mustering around the edges. But what if I sell a 130 put and then I sell a 155 call? It's a pretty symmetric strangle. Wow. And look at this thing, man. It is very, very cheap. Very buying power wise. Because if you remember this, I think this question came in, it was just Thursday or Friday of last week. It may have been Friday, where somebody was asking me, was it scramble everything? Maybe, I'm not sure. But somebody was asking me, hey, is there a quick and easy way to, kind of estimate the buying power on a position before you actually click the mouse and get into the trade bar and whatever? And yes, the easy way to do it is just take 20% of the notional value of 100 shares. That's going to get you fairly close. Sometimes it's off by a little, sometimes it's off by a lot. Right now, you see it's actually off by quite a bit because, you have a $140 stock. So 20% of that would be $2,800 on 100 shares. The buying power on this is only $1,700. And so it's like half of the 20% approximation rule that we went over last week. And so I'm very surprised by that. But I really like everything else about this trade. It's very neutral, which is good. I mean, I'm personally bullish on Pepsi, of course, but the market may disagree. I mean, it has disagreed with me before, and so it could happen again. You've got a pop of 70. You've got a P50 of 91. You've got a max profit of 325. You have max loss of negative infinity. There it is again, a very abstract concept that just tends to keep going, actually. So I don't know that we'll get there, but we may come close if Pepsi keeps going higher. And so buying power effect, $1,700. And then my credit collected, of course, is going to be the premium on both sides of the market. So $3.30 per share. It's a 100 share contract. So $330 total. And so, all right, let's go ahead and I like this trade a lot. Thank you, Gas Man. This is some good stuff. Let me delete all that. Let's push out a little Pepsi action. And again, we'll contend with earnings when they come our way. But I couldn't pass up the IV rank being so high right now. It just looked like a really solid trade if I can get filled. I've got no takers at 326. Let's try 324. All right, so we got filled at 324. All right, beautiful. Okay. All right, so that's Pepsi. Thank you, Gas Man. I appreciate that. Let's go to the beginning. Man, I'm done with the show. It's so crazy. I may need to get back to surprising and delighting one person. Two might be, we may be stretching above our means here. But let's see. I see Emmett Morris is in the house. What's going on? Ordenu's in the house. Greetings from Italy, Dr. Jim. Hope you have a wonderful week. Thank you, my friend. You too, my friend. I hope that you're ready to go for Wednesday and, of course, Thursday. Don't let Thursday kind of sneak up on you. And so thank you so much for being here. I appreciate you. Let's see. Big Deal Donut says they add such a brighter energy. I'd watch a pre-market show. Who are you talking about, Big Deal Donuts? I'm assuming that you're talking about Gus and E because I know they were right before me. And if you are talking about them, I agree. Even if you're not talking about them, I also agree. And so thank you there, Big Deal Donuts. Brian Dowdy's in the house. Hey, Dr. J. How's our realized P&L? Oh, man. You don't want to know, bro. Trust me, you don't want to know. Doing after the damage I caused. Yes, that's true. You did take us down a couple times. I know you did on Lululemon, and I can't think of who else you took us down on. I think was it Adobe? I think it was Adobe. And then also you got denied a car and only approved of an e-bike. Was that a joke? Well, first of all, the P&L, yeah, we've taken some hits. You can see right there, we've certainly taken some hits. I mean, today's an okay day, but we're still doing okay for the year. I mean, that's obviously not too bad. But again, guys, I've said this many times before. If you ask me, I will always tell you what's going on. But do not necessarily use this because I'm only trading on the show, right? So this is for purely educational purposes only. Now, could this be a representation of what you might be able to build on yourself? I hope so. I mean, that's why we're doing what we do, right? But again, we're not trading all day. I'm not trading around Fed numbers because there is no show. And so it's like there's lots, and like in the morning with like zero DTEs or even the market open itself, there's obviously lots of opportunities that we're letting pass by so that when you guys do watch the show, you're not left confused. You're not wondering what happened. You know what happened because we went through everything on the show. And so that was a concession that I made and a decision that I made many, many years ago when From Theory to Practice essentially got started. And I have not wavered from that. I haven't deviated from that. Now, maybe things will change and we'll do some new things in the future. It's very, very possible. But for right now, this is kind of the way that we're doing it. But as far as the car, yeah, so, I mean, I spent like a month like looking for a new car. I mean, I was looking for new Civics. I was looking for Mazdas. You know, I was seriously considering a BMW at one point. And then when the dust settled, here's basically, and the BMW was the leader at the end. But then at the end of the day, I had to think about this strategically, and I got to play the long game here, right? I got to play the long game. We can't be focused on the next quarter. We got to be focused on the next year. We got to be focused on the next decade. And so here's the plan. Plan is, so for right now, we're down to just one car. I'm not getting an e-bike. That was a joke. But we're down to just one car. We got the Pathfinder, which is my wife's car. I don't have a car anymore. But I mean, I work from home, and I've got my training is in the garage in the morning, or it's usually so early in the morning I can zip over to my gym and get back before Autumn might even need the car. And so, I mean, I'm here for most of the time anyway. And then in the evenings, it's not that hard. Anyway, so my wife really, really, really wants a van. Like really, 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 really wants a van. And so for obvious reasons, I mean, we got 3 small kids. It's like, it's crazy. It's a circus. We got so much junk that we have to just cart around the world that I'm like, man, we need more space for this. Pathfinder does an okay job, but a van would do a much better job. So the strategy is, I told my wife the other day, I'm like, hey, listen, I'm gonna give up looking for a car right now, because what I want to do is like, let's save up, let's start saving some money, let's get some things, you know, ready to go, and let's use the insurance payout from Geico, because I got paid so much on the Civic, I couldn't believe it. It was like $6,000. I'm like, let's use that to buy a van like in December or January. And she got so excited. She got so pumped. And so guys, this is just, I mean, again, I've been doing this for almost 16 years. I know how the game is played. We do a van in the next few months, and then we lay low for maybe like 4 to 6 months. Come time summer next year, come time my 45th birthday in like May, the BMW talks resurface. The BMW talks make their way back to the kitchen table. And now all of a sudden, I've got a lot more leverage. And now all of a sudden, I've got a lot more credit that I can work with. And so that's the thinking, right? Kind of playing the long game. And it's like, so I got to walk a few places. It's not that big of a deal. I can use the extra steps anyway. And so that's kind of where I'm thinking there, Brian Dowdy. But Big Deal Donut says, I'm guessing a green shirt today. You were wrong, my friend. But I do obviously have some Publix shifts later tonight to pay for this huge up move. And so I'll be putting it on here pretty shortly. But I had to stick with the Song War shirt, because this is my favorite t-shirt. It's you know how you have that t-shirt that you love it. It fits so well. Like you just love the way it feels. That would be this t-shirt for me, in case you were wondering. Scramble Everything says, hey there, Dr. Jim. This week you're on the Colts bandwagon. No, I mean, my Rams. Have you not seen my Rams? I mean, they look strong, bro. They are a juggernaut, bro. Like you've got Stafford and then that other guy and that other guy. I mean, they look good. They haven't looked this good. It's been years. It's been many, many, many years since they've looked this good. But you say those Finns got it rough. Yeah, forget about the Finns, man. Forget about the Finns. I mean, I'll just say this. If I was a Dolphins fan, hypothetically, they've got a clean house. You got to get rid of everybody, right? Like call some guys up from the minors, man. Get the AAA guys up there. Get your Peyton Tolleys, right? Get your Connolly Earlys up there, right? He's pitching tomorrow against the A's. And so, yeah, man, you got a totally clean house. They look bad. Ash Finn, Dr. Jim Time, let's go. What's up there, Ash? I appreciate you, my friend. Thank you for being here. Big Deal Donuts, Emmett Morrison. Greetings, Dr. Jim. Are there any rooms available at the Giggle Snorts Hotel? I don't know. But at Hilbert's Hotel, I do know this. There is no vacancy left, but guests are welcome. And so I'm going to let you figure out how those two things coexist. There's a bit of a tension there that can't necessarily be reconciled. And I think that's what David Hilbert was trying to get at from the 1920s. I mean, this was 100 years ago, right? So you got to keep in mind, it's 100 years ago. You've got Hilbert, right, building these really fun mathematical experiments. Tom was in like his 3rd decade trading in the pits. And so you've got to put yourself back in that time frame to really better understand and grasp, what the original author was intending. And so, but yeah, it's a really fascinating thing. That's quite a mind bender. Let's see. Oh, Brian Dowdy says Dr. J might be wearing Fire Engine red since we are green today. No, I'm saving that for Wednesday, man. Well, the Spanish print on Thursday. I'm really saving it for Thursday when you guys will see me. Sam L's in the house. Happy Monday, Doc. Time to trade the weekend carbs for some market gains. Man, I wish it were that easy. Let's see if today's P&L is hitting PRs or just warming up for the FOMC. I think it might be just a warm-up set. Sam L says, Doc, the VIX is up and the market is up. I know. We led the show with that. What are we even doing here? No idea. Feels like pre-workout kicked in, but nobody told the muscles which way to pump. Yeah, that's true. Or it's like this, actually. Have you ever had this session? And this happens to me probably 25% of the time still today. Have you ever had the session where you actually miss time when you take your pre-workout? I know this has probably happened to you, Samuel, because I know you train on a regular basis, but for everybody else, even in Sam, you take the pre-workout, but you mistime it. And so the pre-workout doesn't kick in until you're like walking out of the gym. And you're like walking out of the gym is a good session, bad session, whatever. But then all of a sudden you're like, man, why am I tingling? You're like, man, like, why am I like ready to go? And like, it's always a weird feeling, but then like the rest of your life, you just dominate. Like the rest of it, like emails, like you're banging away at emails. Like, man, I just cranked out 17 emails in like 3 minutes. Right? It's like, maybe I should be taking some C4 just for like general work purposes. And so that's always a fun time when you mistime the pre-workout. And so maybe that's what the market's doing here today. We're just kind of mistimed its pre-workout. And it's a little bit early, actually. And so let's see. Wolf's in the house. Dr. J, I took out a cash advance for last week's Adobe trade. That's not good, man. That's not good. And you need to talk to Brian Dowdy about that. Don't even talk to me. I'm the middleman. I'm just the mailman. I'm just delivering the mail, just sending the messages. Kids are really going to get sick of tuna and applesauce. I'll tell you what. If you're feeding your children tuna and applesauce, they may come and get you, man. Like if word gets out that you're like, if you're doing it to yourself, it's like, hey, you know, live and let live, like do whatever you want, right? But if you're feeding your children tuna fish and applesauce, yeah, you're gonna get some knocks on the door, some phone calls coming your way, 100%. Let's see. Scramble everything. Dr. Jim is gonna have a serious beer by Xmas. No, I'm gonna trim it up today. Today's actually the trim day. I just didn't get to it earlier before the morning show. Let's see. Joel James, Dr. Jim, to infinity and beyond. I know that's kind of what we did this morning. I feel like we went beyond infinity. Like I feel like we pushed the boundaries of infinity, and it was fun. We had a good time doing it. I don't have it next to me. Do I have it? No, it's somewhere in there. But I legitimately have a black book. That I started creating before I joined Tasty in the fall of 2015. And I came to Tasty with like 600 ideas for segments because I'm like, hey, this is going to be so different. My own show, like it's going to be a whirlwind of whatever. Let me make my life a little bit easier by having some direction. I had like the first, like, you know how like NFL teams like script their first like 10 plays or whatever? You know, I mean, for the Dolphins, it's like run, punt, incomplete, punt. Like those are the first 9 plays of pretty much any game. But I did a similar type of thing with my segments. I had the first like 3 weeks like scripted out. I didn't know like how the segments would go per se, but I knew what they were going to be, and that was incredibly helpful for me. Well, I've had that black book. I still have it, actually. It's around here somewhere. And I think Hilbert Hotel, I'd have to check. There may be a couple stragglers in there that haven't been crossed off. It was one of the final ones to be crossed off, and it got crossed off today. And the reason why it was still in there is because it's so mentally challenging. And so I'm very thankful for things like YouTube and things like subreddits to help me kind of figure out, you know, how to describe and explain Hilbert's Hotel to the common man like myself. And so let's see. But Rancher's in the house. Daniel Perkins in the house. Man, look at this. Look at Ahmad's in the house and check out ticker LI. LI? I'm almost out of time there, Ahmad. LI. What is LI? LI Auto? ADR? Is this like a foreign, like a Chinese or Brazilian car company or something? Oh man, I gotta pass on this, Ahmad, but maybe bring it back tomorrow. Maybe if I get to it a little bit earlier, we can look at it tomorrow. But guys, I gotta run. I gotta go. I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned because we've got Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show. So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently over and over? And with tastylive, I was able to do that.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Everybody, risk is in the air. That's right. There's been 3 things that have been moving together for some time, and now you can add a 4th to it today. We'll talk about what's going on there. Tesla. Woo, what a move, huh? A lot of you have reached out to me. I know we did a couple of trades on Thursday, and a lot of you reached out. Appreciate you. We'll talk about why maybe this is not the end. We'll see. And finally, there's been some framework around the idea of a deal for TikTok, and there's one stock that might be benefiting right now. So we'll talk about those 3 things and more. There's not much earnings going on, but who needs earnings when you got a week like this lined up? We'll talk about all the different ways to manage risk and where you can put a little bit of risk on potentially. Welcome to the most dangerous show on the Tasty Live Network, folks. It's Engineering the Trade, and I am your host, Jamal Chandler. Had a great weekend. My kids' football team is 3-0. They might have a chance to do something special, man. I'm not going to lie to you. They look pretty good. And look, I've always been transparent with you guys about my life and what's going on and stuff that's going on with the kids. And, you know, when we have rough games, when we have good games, I'm not going to lie to you, man. Look, my kid is pretty big. He's 13. He's got some size on him. He's like 5'9", like 150. He's throwing kids around in this league, okay? I'm going to be honest with you. I'm watching him. He's playing defensive end, and he's playing offensive guard. So last year he was playing offensive tackle. This year he's playing offensive guard. We've upgraded our team a little bit so he can move around some. And let me tell you something. He's clearing out holes. I just looked at tape last night. This is why I'm kind of jacked up on it. And it's not just because of my kid. I'm proud of any kid who would do something like that. But it's kind of fun to watch him do it, you know? And he's sacking quarterbacks. Teams are game planning against them from game to game. So, like, the first game we played, he had, 2 sacks, 4 batted balls. He was all over the place. Second game, visibly noticed how the other team game planned for him. They had one of their bigger kids, who was bigger than him, by the way. If my kid's 5'9", this kid was easily 5'11", and probably had 10 pounds on my kid. And he was still pushing him back. But then they had a chip blocker. For those who know about football, you had another little running back coming to help. That was the second game, and he was actually kind of frustrated about that. I was like, look, man, take it as a sign of respect. Don't worry. The next game you play, they only game plan from one week to another. It's not like these guys watch film on a whole team. I mean, it's kids, right? So the cool thing is, this past week, since they had the film from the week before and he didn't do a whole lot, he did his thing again. He had 2 sacks. He was a game wrecker, man. It was great. It's great. But then not only that, so it's funny because we went to our game this week. One of my brother-in-laws got married on Saturday, and I actually did work 2 weeks prior, and I kind of thought we have a special team here. Because I've seen this before. You know, I have an older kid. We've done sports. I can tell when the team's going to be good. And they use my kid a lot on both sides of the ball. So I said to the wife, look, we're going to have to miss this wedding. We'll show up, but we're going to show up late. And, let's be honest, folks. The best thing about a wedding is the reception. I mean, come on. It's the best part is we showed up for the reception after winning our game. It was an all-in-all great weekend. I can't tell you. You can't get much better than that. So let's get to the slides and see what's going on here today. Let Let me speak to my people in the chat. Donna, how you doing? With 7, Texas, how you doing? Rancher, what's going on? Emmett Morrison, how you doing? Ash Finn, the U is looking good, Ash. Ash is the star of the day. He's talking about my team, the U, the Miami Hurricanes. That's right, another win, baby. Hey, look, it's all wins right now. It's all wins. I mean, my kids' games are winning. Miami Hurricanes are winning. There is, the Badgers are not winning. God damn, that was a blowout this week by Alabama. Yikes. My fantasy teams, they're doing all right. I don't know. I got a game. There's a couple more people to go. We'll see how the fantasy teams end up. But I tell you what, every week, and this is the real take home for people who play fantasy football, win or lose, every week that you go by and you don't have injuries, it's a good week. I'm telling you, there's a lot of injuries coming out right now. I mean, Joe Burrow gone for 3 months. JJ McCarthy apparently hurt his ankle last night. I mean, jeez. Look. Risk is in the air. Look, guys, I cobbled a little something together on a otherwise very quiet day. When you look at futures, have only traded. Well, they've traded 1.3 million actually. That's okay. I guess that's a fair amount for a day like today. But risk is in the air because we've been talking about this for like the last couple of trading sessions. How equities, gold, and bonds have been bid. Well, add another one to that today. It's volatility. VIX is up a little bit, just a tiny bit. Now we have plenty of iterations where we see a Friday where VIX is low and then like negative, I should say, and then a Monday where VIX is positive. Old traders will call that taking the weekend out, and that definitely is something that happens. It's a very old adage for traders selling volatility into the weekend over a long, like just a regular 3-day weekend, right? Options used to really didn't price in weekends for the most part once upon a time, and so traders used to always get short a strangle, get short a straddle, whatever, short volatility over the weekend and then buy it back on Monday. And that's where the whole idea of VIX basically getting short, getting short or sold, or VIX being red into a weekend and then green on Monday because people are buying back the options. But I also think there's a little bit of added volatility here just because people are anticipating what's coming on Wednesday. We all know what's coming. It's going to be a big week, and it's not just Wednesday. There's a lot of things that are happening throughout the week, and we'll talk about it. But still just very fascinating to see all 4 of these, equities, gold, bonds, and volatility, are positive. And I guess my real question would be, I probably should have put this in the poll instead of the other. I did put a poll in the YouTube chat. Which recent IPOs are we trading options in currently? I was just curious. I got CoreWeave, you got FIG, you got Oracle. I'm not Oracle, sorry. Circle, CRCL. But I've been looking at an Oracle trade. That's why it's on the brain. CoreWeave, FIG, Circle. There's also Figure, which came out not that long ago. There's others. StubHub is supposed to have IPO this week. So there's been a lot of IPOs recently. IPO market, usually when market's on all-time highs, it's usually when you'll see a lot of IPOs. It's a good time for them, right? So I was just curious. And, if there's another, please list it. I'm curious which ones you guys are trading. I've traded CoreWeave at time. I actually closed position today, and I'll get into that a little bit. But, yeah, a lot happening. And it's really not surprising to see volatility a little bit bid. I might look at a volatility trade for the next coming days, and we'll talk about that when we get to the platform. Tesla stock turns positive year to date. It's been the big news, of course. Musk apparently bought shares. Yeah, it's par for the course. But I think the bigger thing is that he's reinvesting time. And for what I saw, he's really going back to being that innovator for Tesla, which, of course, they still need and want. And that bodes well for the stock. Anytime you have the person who is the visionary behind a company leave the company, people get a little bit nervous, right? It happens. That doesn't mean that there's not people there to keep the mantle going. But if one comes back, well, that's even more interesting. And who doesn't love a story like that when the visionary comes back? Who doesn't love that story? So that's really what's going on here. Stock has absolutely taken off. It started a couple of days ago, right? And you can kind of see the shares kind of bubbling underneath the surface there. Big move on Thursday, of course, extended into Friday. A lot of times we will see these moves extend into Friday, and that's one of the reasons why I bought some calls. I did it on Thursday's show. I think a lot of you saw it. A lot of you reached out to me. Those who followed, that's awesome. I'm glad it worked out for you. The hard part about things like that is how to deal with wins and losses. And so that was a big win. And actually, I took it off fairly early. for a really great gain, honestly, and well over 100%. And I could have left it on for a whole lot more, but on a Friday when it's weeklies, that's really a hard thing to do. It's best to just make your money and move on. If you kept it on, you made more money. That's even more awesome for you. It was actually a great day to do that because the stock never really trailed off like it did today. It trailed off a little bit today, I think. Right? It was upwards of 420.21 at least. It was up to 425 today. Wow. Stock did pull back, and it does look to be, let's see. It's still a little bit expensive though here, guys, for me. Like, I'm not jumping in. I think I'm good. The tendency sometimes is when you miss out on a huge move. You made some, then you miss out. You want to jump back in. Maybe towards the end of the week. We'll see how the rest of the week goes. But I don't know. Finally, Oracle. Yeah, you're right, Andrew Cortado. That Oracle vol is bid, and honestly, it does make me want to trade it. I have taken off some risk in the last couple of trading sessions just because I want to have money available for any craziness that happens on Wednesday through the rest of the week. But man, it is kind of interesting looking at this Oracle vol. 58 IVR currently. And there is news today about the U.S. and China putting together the framework around the deal of a potential chance of a TikTok deal. Remember, Oracle was one of the ones who bid on it. So I think one of the reasons why it's bouncing today is not only because, remember, it had a retreat after the huge move on earnings. Had a 2-day retreat. I think part of that is the bounce back. People are buying it up, but then also maybe they're the ones who benefit from this situation. I'm not exactly sure. That would be one of the hesitations on, I might have just talked myself out of a trade. That would be one of my hesitations. If they do get this deal, I think that's obviously going to be beneficial for them, but no signs as of yet. Leftovers. Americans are about that action, boss. Let's move to the next slide. This is a chart of the share of respondents who like to watch the following types of movies or TV shows. Full disclosure, I'm watching a documentary right now. I'm watching that Charlie Sheen documentary on Netflix. I keep watching it late at night, so I never finish anything. Started back in recently. What other shows am I currently watching? I'm not really super into anything right now. I'm watching that. I am. Do you guys watch things like when you're in the shower? It didn't used to be a thing of mine, and then the last year it's kind of become a thing. I watch House of Lies in the shower a lot. It's my guilty pleasure. I like that show. It used to be a great show. I like Don Cheadle as an actor. Kristen Bell is pretty funny too. One of my things I liked her the most on is God, what's the name of the movie with Jason Segel that she's in? Pretty funny movie. I forgot the name of it. It's one of the Judd Apatow movies, but yeah, it's pretty. That's kind of what I'm watching right now. I'm not really watching a whole lot. Action adventure is always high on the list for me, though. I'm not going to lie. Comedies are definitely high on the list as me as well. I'm guessing people were able to choose multiple things from this, but action adventure is 59% of the people say that that's their number one. Comedies, 58%. If there's a movie that I'm going to go to, it's probably involving one of the two. Dramas, third on the list. This makes sense to me. Matter of fact, the Emmys were last night. I casually watched it. I was casually watching the football game too. Emmys, it wasn't interesting to me, but the wife watches it. She watches all award shows. She loves award shows. It's one of those things that makes her feel good, That, the VMAs, I always end up seeing them casually. As a matter of fact, I'm used to it now. Once upon a time, I used to be like, why are you watching that? Now, let me just watch it. Thriller mystery, 45% of the people say that. Documentaries, 42%. Documentaries are probably my favorite, particularly sports documentaries for sure, I would say. You just learn so much, but there's a lot of other documentaries I'll watch. PBS here in Chicago has some really good documentaries. There's this one guy called Jeffrey Baird. Not sure if you ever heard of him, but pretty cool. I've learned a lot about the history of Chicago from him. And I can tell you right now, most of the history of Chicago emanates from the World's Fair. There's a lot of things that go on in Chicago now to this day that really kind of started at the World's Fair. For instance, Ferris wheels. It's one of those things. There's a lot of things that come from those. Horror, 41% apparently. Sports, 33%. Golly, shows you. I feel like some of this is my crowd who are watching. I feel like 33% of you get what I'm talking about sometimes when I talk about sports. Science fiction, 31%. Science fiction's low on the list. So what are we doing here, guys? Are we buying science fiction and selling action adventure? We're traders. We trade, right? Let's move to the next slide. I see you, Andrew Cortado. Yeah, you have the 300 strat on Oracle. We'll talk about it. Unprecedented low volatility environment. Maybe unprecedented is strong, but it is in a way. We haven't been in backwardation since May 2nd. I went back and looked. Yeah, that was the last time we were backwardated in futures. It's mostly been this. Currently, this is the last 4 weeks of volatility, the last 4 Fridays of volatility futures curve. And it's been contango. It's been contango like a mug, I'm telling you. And this is probably one of the few times where we have a chance. I'm not saying I want it. Look, I'm long stuff, but I've rearranged the portfolio a little bit, but I'm not looking for carnage. I'm really not. You just come to expect it in the stock market at some point or another. There's going to be a pullback. People are going to be scared. They're going to say it's all over. AI is done. Whatever, that may be. The angst kicks up. And then people are like, oh, this has gone too far. Let's buy it. And then, yeah, we're going to buy it. Yeah, we're going to buy it. And then it happens, right? And so that's the ebb and flow in the stock market. I think we all expect some volatility at some point. This would be the week. There's a lot going on. But in the meantime, backwardated. It's been, I don't know, geez, how long is that? August, July, 8 weeks. It's been a solid 12 weeks, I think. Maybe even 14. Let's move to the next slide. OKLO. I hadn't looked at the stock in a while. Big move today. There's been a lot of talk of nuclear, and the nuclear's always been tied to the AI crowd. As much as this move is big, obviously it's not as big as some of the moves in the past, and that's because it's a $90 stock now. Like, who knew? I remember when this thing was like $25, $30. Wow, happens fast. You can see the up moves have been a lot more stronger than the down moves. I suppose that's a good thing. I was trying to find an interesting trade in this stock. I don't necessarily know at this point what's interesting. I don't necessarily know if I feel the need to get longer, or I should say long in here. I don't have anything. And there's no real vol to sell. I mean, it's 19 IVR. I'm sure the implied vol itself is a little bit higher than you would expect. Yeah, it's in the 90s. But yeah, I don't think I'm touching it right now. It is a fascinating trade, though. And again, there's been a lot going on in this space. You can't sell a strangle in here. It is not cheap. Let's move to the next slide. Gold to silver ratio has fallen quite a bit from a couple of months ago. Late April, early May, that's when it jumped above 100. Jumping above 100 in this ratio always kind of signifies something, some real angst in the market. It's almost like a VIX above 30. It lets you know things are a little nerve-wracking, I think, and scared. And I think that's what we saw earlier this year, right? Silver, however, has trumped gold a little bit on the move more recently, percentage-wise for sure, and silver's been the best play. I just closed my silver call spread today. I was up over 50%. It's time to go, man. It's time to go in those situations. And not a bad time to do it, too, ahead of this meeting. Although, this meeting could be a situation where they cut rates. Theoretically, there's no theoretically. More than likely, they're cutting rates according to the FedWatch tool. And that's supposed to be good for metals. But, you know this market, and I don't trust it sometimes, and they can throw you a curveball. So, it's best to go by mechanics, and when I'm up 50%, that means it's time to go. So, closed out that trade. But, I wonder what's going to make this thing go up again. Well, it could be some more strife. Who knows? Let's move to the last slide here. Earnings, Dave & Buster's, that is definitely not an interesting one to me. Retail sales are coming up tomorrow. That's a measure of the consumer, folks. And 2/3 of GDP is consumer spending. So retail sales should have an impact, especially in this environment where you don't know what the heck's going on with inflation. I mean, last week I feel like we didn't get real clarity. PPI came in lower than expected. Market took off, which you would think not so much because, again, the high inflation and the jobs market being down is what's creating the situation for us to cut rates. But then CPI came in and it came in higher. PPI lower, CPI higher, I don't know. So I think a bad retail sales number, it's going to get worked out either way. If it's a bad retail sales number, it's going to be like, well, we're seeing impact from the tariffs, and that means we need to cut rates. If retail sales comes in good, it's like the consumer is still spending and we're in a good environment. Probably good for us to cut rates so they can spend more. I'm telling you, either way, I told you. FOMC rate decision, of course, is on Wednesday. We also have September VIX futures expiration on Wednesday. That's why if you're going to trade VIX, make sure you're trading next month, not this month. Trade October. I think I'm going to do it today. Bank of Canada rate decision is also on Wednesday. The Bank of England also has a rate decision, and that's on Thursday. Number of S&P 500 stocks above 50 when we average 312. Let's move to the platform. It's a little risk management time. So like I said earlier today, I did close off some risk. I closed off my silver trade. It was the call spread. It was the 44.46. I was waiting until 45, but look, I was either waiting until 45 in silver or a 50% gain in this trade. Having the 50% gain ahead of what's expected to come here for the rest of the week, I think is a good idea. CoreWeave, I closed that out. It originally was a zebra. I did roll one of the long call legs to further upside to the 115. On this move today, I decided to close it all out. We're done. What else we got here? Trades. RH. So I have some leftover puts from the from earnings. What I'm thinking about doing here, I like these 200s. I'm going to keep that in case we have a crazy week. You just never know. God, these are not cheap. Maybe I'll go to this 205 strike. I'm going to roll these down. And I'm going to have 2 of those on. I'm just going to close this one. I think. I mean, unless there's another one I want to buy. I don't want to pay up for the 210s. How much premium is this right now? RH, $167. Do you think I can get 175 and to 170 for this thing? I think I can get one. If I can get 170, I'll roll this. Oh, good. We did that. So now I have $300 worth of premium. If the market falls, these are some just random puts I got laying around. If it doesn't work, it's just $300. It doesn't kill me. Somebody's asking, why do you roll a zebra? We consider that with CRM. Yes. So I do currently have a CRM. I got some stragglers and calls too from these calendars in here as well. This is also a roll up, I think, in case the market takes off. You never know, right? I'm going to roll to the 245 strike because things happen in a weird way. I'm going to roll to the 250 strike. Nice. And that's it. And then I got one more. Let's close these out because nothing's happening there. That's it, right? So, yeah, I'm just rolling some random calls. I have a little risk management here, moving a few things in case the market moves wild in one way or the other. I have some extra units on a couple of things. Adobe's another. So let's see the chart here. Could this thing get back to 2? I see guys' questions, so I'm just thinking a little bit. 364, 365, maybe. We'll roll to the 360 strike on this, shall we? Yeah, we'll do that. 150, we can do it. Yeah, nice. 23, we'll roll to the 362.5, because why not? And then we'll roll to the 365, because, you know, markets have a way of doing weird things. Who knows if the market causes this stock to bounce. And then we'll just close these out. These were left over from earnings. I had some calendar call spreads. A lot of times you have leftover units. So, you know, got to do a few things here. Just risk managing here. Okay. Somebody asked, House of Cards, House of Lies. I know people kind of confuse it. CRM, he asking, would I consider rolling it? So why do you roll a zebra? Sometimes you do it if it's really far in the money. It just really depends. My zebra has not gone in the money in this CRM. I probably should roll this. So there's reasons to roll. There's 2 reasons to roll a zebra. One is if you were, say I was long the 170, 175 zebra and it's really far in the money. At that point, to risk manage, I can either roll one call, and I would do that on a day where the market is moving big in your favor. I would roll one of the calls upside, right? You can do that in a situation if it's moving on that day. Or you can just close it out. And I actually just did some of the risk analysis on this. You can just close the whole thing out and roll the whole position further upside. That's one way when you're making money on it. When you're losing money on it, which I'm currently losing on this one, it's probably better for me to just close this out. And I think I want to close, I'm going to close this out and roll it down. So let's close this position. 1870, we'll go down to 1865, should close me out. Close that out. I'm going to do it on the 230, 240. I'm going to give this thing a little bit longer. It's in November. I like that. Let's see how much more January costs. 230, 245. The other one was 2,600. And it's like $3,000 more. We'll stay in January. I don't mind January for now. There's still a lot of premium to it. There's still a lot of extrinsic to it. Or not that much extrinsic is what I mean to say. And there's still time to it is what I'm trying to get at. So we'll do that. Nope. Try it again. Replace. Let's go. It's going to be difficult, of course. There we go. All right. Got a lot of trades to post. I post after the show. Jamal, what about a short call spread in Oklo? Yeah. I personally, I was just looking at the short call spread, the vol is not really that high in here. And I mean, what do you go with? Do you go with, a $10 wide, 180? I mean, that's not a bad idea. It certainly is not. I just don't love it. I don't know. I worry about big moves like this sometimes. This doesn't seem out of the ordinary. The Oracle move on earnings seemed crazy. This does not. I'm going to pass on it for now. One thing I do want to do is get long VIX just a little bit, right? And I'm going to do it in October with volatility being so low. Even if markets don't get crazy and volatility goes lower, I don't expect this to go much lower than 17 for the time being. So I'm going to buy a zebra in here, and I'm going to do it. I'm going to, maybe I should do the 14.17. I could do this one. $5. Currently, October VIX, well, hold on. I just remember, October VIX is 18. So we could actually go here. We could be short the 18, and we could be long. I like this one. I'm long the 16 out of the money, and I'm short the at the money 18. So I'm going to do this one, try to get this off at 350, and we're in, folks. And just to give you a little bit of idea, if for some reason we get a VIX pop to 20, that's 200. If we get a VIX pop to 25, it's a nice $700 gain. So we'll see how that goes. I'll post all these to the Follow Trader page, and you guys can see them. So if you roll up, it's to take profits, and CRM is to capture more extrinsic. Yes, if I roll up, it's going to be to take profits more than likely. And I just rolled down to get less extrinsic in this situation and I want that short call to be more at the money on a zebra. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. See ya.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hey everybody, happy new week to you. It's Fed week. This will be, I would guess, well, this is probably one of the last, there's 8 of these Fed things a year. This is probably number 6 or so, and certainly very anticipated because for a long time it's been like, oh, they're not going to do anything. And this time it's virtually assured they're going to do something, whether it be 25 basis point cut or 50 basis point cut. And the general contention, and it's reflected every day in the market, is that, oh boy, when they start cutting, this market's really going to go on fire. In fact, speaking of fire, I mean, that's the most common metaphor used, that the market's already raging and the Fed's just going to pour gas all over it. Oh boy, oh boy. And I contend that dropping interest rates are definitely coming, but in sharp contrast to everybody else, believe that it's going to have just the opposite effect. And not really so much an effect, but it's coincidental with the environment we're in. And the last chart I'll show you speaks to that. But in the meanwhile, let's jump in and look at this world of record highs we find ourselves in. It's the same. I wake up every morning the same thing. Everything's basically up 0.4% and adds to that slowly through the course of the day. Here we have the spider, and it just, let's change this to candlestick, just kind of just drapes us higher day after day after day. It's done so kind of in a stair-step method, you know, up, then a sharp jolt lower. It's done that a few times. We're kind of overdue for a little bit of sell-off at some point here. It wouldn't surprise me in the least to see it happen Wednesday or Thursday. The reaction in the market after the Fed announces on Wednesday and in the throes of his press conference won't really matter in the longer term. Probably not until the end of Wednesday will there be any clarity about what it means to the market. So if they say, we're cutting 25, we're cutting 50, and the market explodes higher, okay, fine. Wait it out a bit. That's one of the reasons I'm staying quite light right now. I'm only about 60% or so committed to the market. I'm really more interested once we get past this Fed thing. The diamonds are pretty tepid right now. At this moment, like the NQ is up 161 points to another record high. The YM is up 0.09%. So it blasted higher here on Thursday and eased back some on Friday. Today it's just kind of hanging out. Still above that breakout zone, but just trapped in this sort of spinning top pattern. The cubes are, as I alluded to a moment ago, by way of the NQ, having another good day. They've been blasting higher all month long, as you can see. And one reason for that, besides the never-ending AI mania, is Alphabet is very strong, whose own strength is based on AI. In this instance, we've gone from around 140 back over $100 more than that since the early April bottom, like so. Just a blast higher. Big gap here, another gap today, and I believe I read that it has entered the very, very small club of $3 trillion companies now. So that is Alphabet, GOOGL. It's no different overseas. Emerging markets having another green day and getting in the zip code, at least, of lifetime highs. And just as one example, FXI China is also up about 0.75%. I mean, I thumbed through them all, you know, EWC, EWJ, EWW. I think I said EWZ, all the other country ETFs, they're all hugely higher since early April. In fact, if you lay them on top of one another, you know, everything's up. The spider's up the least. Things like Mexico, Japan, Brazil, all have bested the year-to-date performance of compared to the S&P 500 ETF. One other stock, which is having a very, very good day, is Tesla. And the purported reason for this is that Elon took $1 billion in cash and bought more shares. And so that's a, you know, the true putting your money where your mouth is exercise. And it's interesting too, because, you know, you'll recall that his political experience had its own waves. So here we have this general idea that, wow, now that he's aligned with the president, the world is really his oyster. He's going to make all kinds of things happen because he's in this amazing position of power. And then there's this fall from grace. And it took Tesla, in this case, down tremendously because, like, well, Trump hates him now, and they're threatening to cut off his contracts. And boy, what a mistake he made. In good contrarian form, that's actually just the time to buy when he seems really on the outs and his stock's been hammered, because it has doubled since those depths. We're not at lifetime highs, but it's certainly done very well. The news that he had bought $1 billion, it's been kind of fading away all day. We opened near the high and it's been easing back, although it's still a plus day for Tesla. But I imagine that it's going to get, you know, our old Fibonacci friends here continue to do their job. This duo here is probably going to assert their magnetic force and pull this back down to more along these lines. Because, you know, he's not going to buy $1 billion every day. It's kind of old news now. And one other item, speaking of tech moguls, Sam Altman's nuclear company here, he's the chair, but I believe Oklo, a lifetime high here as well. You can see it's had, unlike a lot of green companies, it's done extremely well. It's come from around $5 to approaching 100 at this point. So about a 20x change in a very short amount of time, almost exactly 1 year. 1900% in a year, not too bad. So Oklo having a huge run. At the moment, we are, as I said, very, very green. The incur in particular, up about 0.2%. Most of my shorts are still down today. And, you know, it'd be a lot easier if the market itself would go down, because they would all be down. But they're definitely kind of fighting the tide. God bless them. I plucked out a few. No guarantee these are all in the red right now, but here's a few favorites I wanted to share. These are all just simple short positions. Here's Accenture again, which continues to do well following this very well-formed pattern. So this has been just hammering down nicely. And I must emphasize, this is in the context of a raging bull market that does nothing but make new highs every single day. So the fact that it's able to be this weak is, well, pin a medal on that fella. Abercrombie & Fitch also down again. Not as clean a pattern, but ConocoPhillips. This one is, as Tom says sometimes, massively unchanged, but it's still, I think, breaking down from that good-looking top. Schlumberger, another energy firm, is down. This one about 1.7%, cracking underneath that well-formed pattern that I've tinted here in blue. Another energy one, Hilbert, down a little bit more percentage-wise, about 1.8%. There's this right triangle pattern, which is completed. And here's another one. This one had a little strength earlier today, but it's given up that Lumen, L-U-M-N. On the one hand, a fantastic pattern here, absolutely enormous, going back to the last millennium. It's not often that you have patterns that, you know, you can measure in decades, but this is one of those very rare instances. It's not a very highly priced stock. It's only a few dollars for whatever reason. But it's a very interesting pattern. And as I say, a eye-poppingly gargantuan top. United Health. This one I got into late last week. I actually tightened up the stop on this. It used to be, my stop was quite wide up here at this gap. I've decided to be a little more conservative, so I've tightened it up to Friday's high. Maybe it's too tight. Maybe I'll get stopped out unnecessarily. Who knows? But I prefer it. Just keeping the risk low on that one. Couple more. Here's what I mentioned a couple of times last week. D.R. Horton. This is a gap play. And in this case, the gap itself was just a little bit lower, like so. So the idea, we had a major gap here as we pushed higher and higher and higher. The idea was to use the gap as a short signal We've got a teeny bit above it here, as you can see, just a little above that, so we completely sealed it and a few pennies to spare, and then we're starting to break down. So I've adjusted this. I just want to show you the old anchor point. It should be just a little bit higher, like so. And one last one, something we haven't looked at in a while, but SJM, which is Smucker Company. And this is also a very, very large topping pattern going back about half a decade, a little more than half a decade. And it's down today about 4.5%. So that's constructive. Bitcoin is oddly red, even though equities across the board are green. Seems kind of stuck right now. The torrent of good political news is abated for the moment, and so it's still hanging out about $9,000 beneath its own highs. As far as precious metals go, the strength continues here. They just keep blasting higher. Here we have gold at a new high. And if you measure this kind of old school style, if you take the spread from here to here, we've still got a little room to go, but not much. I haven't computed the exact value, but it's if you had another day similar to today, that would probably be just about the length of the measured move. But gold obviously is, it's bested equities for the year, is doing sensationally well. Silver also not at a lifetime high, but a multi-decade high, exceeding that target shown with a blue dashed line. Palladium I'd gotten out of last week, and a good thing too, because even though I actually scurried out of this on Friday, and I sort of sheepishly mentioned that because I was worried it would blast higher today, but it didn't. So that's a bit of a relief, particularly since other precious metals are doing so well. It's not a good sign. This thing's dipping. As I keep saying, long term, I think it'll do fine. But for the immediate moment, I really wanted to take profits, so I did so on Friday. Miners blasted higher again. It took them a while. Gold was up this morning, and miners didn't seem to care. Then they got the memo and decided to push higher themselves. And our individual one that we look at quite frequently, DRD, also pushing higher. Not at a lifetime high, but as you can see, this is like almost a straight line. So it's been just doing tremendously well. We've only got a few moments left, but let me quickly just talk about the Fed funds rate. Here's the Fed funds going back for many, many, many decades. The point I wanted to make was, if we go here and create a layered chart, and we plop the S&P 500 right on top of this, like so, and we sync those fellas up like so, and zoom in, as you can see, the black simple line here, these are dropping interest rates. So here and here and here. Observe what's happening with the blue line, which is the S&P 500. Interest rates down, equities down. Interest rates down, equities down. Interest rates down, equities down. And so it goes. It's been a little odd lately because the Fed massively increased rates to beat back inflation. But this notion that if rates go down, then stocks go up. Look at this chart. I don't think that's true. So we'll see soon. It'll take months, but we will see. Okay, well, the countdown to the Fed continues, and I'll see you tomorrow. Good night.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Oh my God, I forgot to tell you something. Hold on one second. My last day, early in the morning, I'm washing my hands in this place, you know, like this communal shower, bathroom area. I'm washing, and the guy in the stall is listening to the show.
You're in the shower in a campsite in Missouri.
Well, there's showers and there's stalls to do number 2 in.
I got it. And you're telling me that somebody.
And a guy starts laughing. He's laughing. So I stop washing my hands and I'm grabbing like towels to clean. I'm listening to what he's listening to, and I hear your voice.
Why didn't you go knock on the door and say?
He's taking a shit. All right.
I know. Well, why didn't you knock on the door and say, "Hey, Tony Batista here"?
I mean, what am I doing? Hey.
Right, autograph session happening right now.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with the last call. So is this the greatest 6 months in bull history for the market?
No.
You don't think so?
We're up 13%. Who cares?
Is there another period in time where we've been up 13% or more in 6 months?
Sure, there's been times when we've been up 30% in 6 months.
I call fake news. Even the S&P is up 25.75. Sound like they've had a tight range all afternoon. You can see them as high as 81, which is 10 handles higher, all the way down to 41 last night. NASDAQ up 160 and change. Russell up 740 and the Dow up 47. Volatility, up by 10 cents to 1811. FOMC meeting? I don't know, maybe. Bonds up 12 ticks, been there all day long, haven't really moved. Bitcoin catching a small bid off of its lows by about 1,000 points, $1,000, although it is at the lower end of its range, 115.6. 117 and changes the high. Ethereum still down 3%, large move in Ethereum, although it is about $25, almost $30 off of its lows. Oil up 57 cents, saying there all day long. Gold up $33 after being lower this morning, caught a bid all day long and has stayed there. Silver's done the same, up 29. But Sadnoff, this is all about the equity markets to the upside. Netflix finally catching a bid. Thank you, my son, Nick Batista, for getting me long Netflix on Friday. Nice little winner chicken dinner there. Tesla up $11 and change, sad enough, even though we got you omnidirectional, slightly short in Tesla, you're still fine. Don't panic. No need to, call the guards. You'll be fine. Reddit.
Hey, listen, you two geniuses. I lost money on it. That's all I can tell you.
It's a strategic, defined risk, time-sensitive trade. Just relax. Act like you've been there before. You're going to be okay. Reddit up $10. Google up almost $10. CRCL up 9 and change. AppLovin up 9. Oracle up 7. The list goes on, but let me go to the ones who have been the bucker. Lilly down 6 and change. MSTR down 4 and change after being about $6 lower. MSTR still down 4 and change. UNH down $1.70 or so. Really, that's about it after that, Sadnov. Kind of a small moves to the downside, larger moves to the upside. What do you think for the day?
What do I think for the day? I think it was a really boring day, to tell you the truth. It feels like we've been trading in basically a $5 range for the last gazillion hours. It's really heavy volume today, but that's all because of the roll. People that didn't roll on Friday rolled today, like myself.
Yes. 1.45. Even the S&Ps have traded. If we get 1.1 at this time, it seems.
I know it's mostly rolls today, though. I think the roll volume was like 600,000 contracts. So
that would put us more in the 8 handle for even the S&Ps, which seems a lot more like what's been going on today. Yes.
Yeah, totally. I mean, it's just another day for the stock pickers of America. Stocks that were down, like, Reddit was down on Friday, like $6 or $7. It's up 10 today. Stocks that just were down on Friday. Like,
at new highs for Reddit, if they can close up here, by the way.
I know, but I'm just saying it was down $6 or $7 on Friday. At one point down $8 or $9, and now it's up. It just reversed.
Yeah.
This was I don't want to say it was a pretty mixed day, because it's definitely, NASDAQ's up 170, so you can't say it's mixed. But some stocks like Tesla opened up almost $25 or $30 this morning, and now it's only up whatever, less than that, $12, $11, $12 right now. But I mean, stocks don't go up forever, Tom. I mean, you gotta give them a little bit of a breather every once in a while. I mean, breather. I didn't.
I mean, the stock's gone from 350 to 430, and now it's 410. I mean,
I'm just saying, I didn't do anything today. I just sat back, relaxed, and enjoyed the ride. My worst performer today, I'm short a little Reddit, and I'm short a little Google. Those are the two worst performers.
Yeah.
Nothing else really. Short a little S&Ps. And I think that's the challenge. The S&Ps are clearly the tough guy today. Being short S&Ps, being short NASDAQ. I thought it would be early. I thought early in the week would be tough, and early in the week was tough.
Yes.
Let's see how they hold up. Bonds, I watched them all day today. They were down, about 8 overnight, 7 or 8. They're up 12 right now. They've had about a half a point range. Pretty good range for the bonds, I guess. Listen, if you're looking for something that moved around today, other than gold, which I don't even have a position on, and nothing moved. Gold and Tesla were the two biggest movers of the day.
Yeah.
I mean, nothing else reversed. If you watch stocks like Meta.
Yeah, when you say, I was going to clarify that. When you say move, I mean, we
moved intraday.
Yeah,
stocks like Meta opened up 7, they're up 9 now. Reddit opened up, 5, it's up 10. But Apple opened up 3, it's up 2. It's just, there hasn't been much. Amazon opened up 2.5, it's up 3. So nothing really moved around much today, except gold, which is the only commodity that had a big turnaround and moved almost 40 points off its low, $40. And Tesla, which dropped about, $12, $13 off its high, $15 off its high.
Yeah.
And other than that, bonds were down last night a little bit and they rallied up. But other than that, not much. Man, not much. The Dow was weak all day. And the Russell was
you got Microsoft. I mean, last time I looked, it was up $4 and change. I mean, it still is. Palantir's been all over the place.
Microsoft was one of those stocks that had actually a big intraday move. It opened down this morning, and then rallied $4.
You were right. Microsoft opened closer to its low, 507 or so. It opened like 508 or 509. It traded up.
It opened down about $2 this morning, then rallied $4.
Yeah. Apple was Apple was another one. Traded all the way up to 238. It's 236 now.
Apple opened up almost $3.5, $4, and then it sold off. It's the exact opposite of Microsoft. But the VIX one day was down 150 today, which is a pretty big down move. So they took a lot of one day juice out today, and everything else, it kind of hung around. It did nothing.
Yeah.
I mean, this was I don't know what the volumes are going to look like, but this is my quietest day in a long time, a long time.
I'll give you that. I agree with you.
I mean, I only made about 25 trades today, which is about a third of what we usually make. So, and it wasn't like I wasn't around. I was around all day. I just couldn't find stuff to do. I tried to sell the futures every time they rallied up, and it didn't. It worked. It didn't not work. But it was like pulling teeth to make 5 handles.
Sure.
And when you're at 6,600, almost 6,700, and you're scalping for 5 handles, that is not a good way to live. You
are scrounging for scraps. There's no doubt about it.
You're going down in that market. That is not a market that you can, that's not a survivable market. That's not a survivable business. You're going to take a $50 hit for a $5 win. Me no like that at all.
Yes,
and there was no real, I mean, I would have jumped on something if I thought something was trending today. The only thing that confused me this morning was pre-market. The NASDAQ was kind of heavy. It was only up about 45 or 50 pre-market this morning. And with the S&Ps looking okay, the NASDAQ just looked heavy to me. And once we opened, it was up 100, then it was up 120. It hasn't had a downtick the whole day.
It has not had a downtick all day. You're right.
Yep. I think this is a new high in the NASDAQ. I'm not really sure.
High in the NASDAQ, we're trading 522, got up to 34. Close enough.
Oh, yeah. I'm saying
Yeah, new high if we close here, obviously.
New closing high in the NASDAQ, new closing high in the S&Ps. And that's good. I like a closing high early in the week because I like when we have weeks where they go, oh, we made the high on Monday.
You haven't been able to say that in quite some time. We've been going actually up, down, sideways. Yeah.
I've not been able. Now we did try the, this morning, we tried the obligatory sell them at 666. And once this afternoon at about 2 o'clock, they traded back down to 666. Actually traded down to 664, which is only 5 handles lower. But all day that trade didn't work. Just so you know.
No, it did not. It
didn't work. I mean, it was a $15 loser at one point. It was a $1 winner.
Yeah.
But we tried. I tried a couple different times.
And my peeps want to tell you that we're up 37% in 5 months. So my peeps said
Your peeps it's really great. Tell your peeps it's really genius when you pick the absolute low tick and then say we're up 30%. If you can't do that. Just so you know, you can't cherry pick.
We can do what we want.
You can't cherry pick the lows and cherry pick the highs and do everything you want.
5 month period is all I'm saying. 5 month period.
6 months. In 6 month period, you're up 13%. So
5 months. Why are you cherry picking 6 months? Say 5 months.
Well, you don't cherry pick anything. You just say the whole year. You're up 13%. So that's how this business works. In case you didn't know, you can't cherry pick your dates. That's what used to drive me crazy about 2009. People would start they'd say this fund is up 30% since April of 2009. I'm like, how do you pick April of 2009? Like, you're picking the low tick.
Do what we want.
Well, of course you can do what you want, but that doesn't make any sense. But I don't like the risk reward here. Haven't liked the risk reward here. Don't think there was enough out there today to put any kind of positions on. I didn't put a single, short delta position on or anything like that today. I don't think there was ever a time.
Yeah, you've been quite the Johnny. You've been hanging in there, holding your money tight to your vest. We're trying to grab some of it for you. We thought after 37% in 5 months that we'd be able to get a lot more of your money. You've been very, very tight with it. Very tight.
I'm staying tight. I'm staying tight until I think that there's something there, and I don't think there's anything there yet. I don't think you're going to be able to catch the reversal when it happens, but I think you'll be about plenty of time to get in.
Oh, come on. Of course there's going to be. You don't have to catch day 1, 2, or 3, but you can catch.
Oh, it feels better.
Yeah,
It feels better
sure.
to catch day 1. Day 1's where you make all the money. Day
Mhm.
2 and 3 is when day 1's when you take no pain. Day 2 and 3 and 5, those are when you have all the worries and pain, and you think you just again you sold the bottom and all that kind of stuff. It's way easier
Pain
to
and
sell. It's
despair.
way easier to sell the top and miss it than sell into the hole and miss. Sell into the hole and miss it is the worst.
Your kids don't like you anymore. It's horrible.
No. Well, I think they're gonna. I mean, based on today's activity, there's no sellers hanging around for today's close. I'd be shocked. Let's see.
Nope. Close all watertight doors. If you have any long delta, try to get out of it now. You can be able to buy it cheaper in the next 4 minutes. Usually, Saznov's speech gets out there about 4 to 8 minutes after he says it.
Well, yes, on Friday, they actually sold them off into the last 5 minutes, not by a lot, but by 5 or 7 handles. So I would think that this afternoon, you will not see the same thing, but we'll see. We'll see. I don't think there was great. I don't think there was, this is triple witching week, so you're going to see decent volumes, but I don't feel like, when when your biggest volume player today is open, I don't think there's much else,
Open is trading up 37 cents, but yes, you are correct.
Like
315 million shares.
Yeah, right. And it traded a lot of options too. And that's your biggest player, but you got 250% volatility. I didn't trade it.
Traded up to 10.5, down to 930, close to its lows for the day right now. CRWV was another big mover today. I don't think you have a position in it, but up almost 8.5, 9%, up $8.50, up 7.5%.
Yeah, I don't have a position, but it's CRWV. No, I got no position. But that stock doesn't have great markets.
No, it does not. You're right.
Yeah, let's see what Tom got.
Nvidia was a stock that never really cooperated today. It's down 50 cents right now.
Yeah, but it's been stronger than it opened down $3.
Yes, it did. Its low was around 174.5. Nothing gets past you, Sad. Nothing.
Well, I was watching a pre-market this morning, and I thought that Nvidia was one of those stocks that I thought you could jump onto the downside if the market got weaker today, because I thought there was natural sellers in there, but the market never got weaker today. So Nvidia just, it worked its way back up. That's when you've got, there in the absence of any sellers, Nvidia gets basically, tossed out of China, gets in huge trouble, and the stock's down 50 cents. In a bear market, the stock is down $18 today.
Right.
Yeah. So I'm protecting capital right here. I'm just keeping my powder dry and not going to get myself into any trouble. I'm going to wait and wait and wait. And I think I'm going to have to wait till Thursday.
I think you're going to have to wait until 2027 or something like that.
No, it's not going to be that long. I think you're going to have to wait a very short period of time here. We're getting a little bit too much. I don't think we've seen a meaningful uptick in volatility except for.
No. I mean, you had one down day in early September, and that was it.
Yeah, and on that one down
in the market, and volatility crept up a little bit, but after that, it's been sell after sell after sell. But that's been the move. This whole the last 5 months that we're up 37%. I mean, you have one down day, you sell all your putties, and then you just sit back and relax.
Yeah, go ahead, you try it. Let's see what else do we got going on here.
Put your hands on your head. Simon says, put your hands on your head and just relax.
You should do that. You should just go to the beach. Why are you even here? Just go to the beach, put your hands on your head, sell some puts, put your hands on your head. I've heard that, man, for 40 years. Just sell a few puts, put your hands on your head, go to the beach.
Yeah, a couple of putties, that's it. You're done.
There you go.
Easy breezy, Sadnov. I don't know what your problem is.
There you go. Every single day you wake up, just sell the 0 DT puts, and at the end of the day, just collect your money. You're done. Why do you try to overthink this stuff? Like,
it's a simple game, Sadnov. Simple game.
Yeah.
Don't
I can do that in bonds. For some reason, I can do it in bonds, and I can't.
You can do it in bonds. I don't know why you can't do it anywhere else. I agree with you. You can do it in bonds.
I can do it in some of the commodities too when they get a little cheaper. I don't like them right here. Like this level, I mean, I have no interest in buying gold at 30. Is it 3,700?
Gold, yeah. Gold, 37.21 over 3,700.
Yeah. I have no interest in buying gold at 3,700. And there's way too many gold bugs out there. Way too many gold bugs. And
What's more crowded, the bull market of the equities or the bull market of gold? Which I never thought you would see both together, by the way, in my lifetime.
I think the certain equities are way more crowded than gold.
Because it's a bigger product to begin with?
Because it's a way bigger universe. The equity universe.
Yeah, that's what I mean. That's what I meant. A bigger universe. I said product. I meant universe. Yes.
A lot of the gold bugs, they're like crypto traders. They don't really sell. They just hold on to gold forever. They never ever sell.
Mm-hmm.
And they don't sell until it gets to under 1,000. They really don't. They're gold bugs until they get stopped out margin wise. But on the tech stocks, I think it's a little different. I think the tech stocks you can nudge them to sell at some point, but hasn't happened yet. Anyway, nothing changes from Friday to today, in my opinion. Nothing changes.
Awesome.
So as we kind of watch the paint dry here into the close, I wouldn't say there's much else to it other than, we've stayed. Everybody who's been watching the market today knows we've stayed in a tight range all day long. We opened up here. We've pretty much been here. I mean, I sold the opening at 6666, right on the opening, and 6667. And then before we were 5 minutes into the day, we were selling 6671 right here. And then, 6671 was my second sale of the day, and they're here, 7.5 hours later.
71, you mean?
6671 was my first sale after the bell rang this morning.
Right.
And so 7 hours later, we're right back to 6671. I haven't moved the entire day. Now today's the day you should use your line. Good day to sell 0 DT premium.
I like when your voice changes when you say it too. It's so freaking condescending. I absolutely love it. Just because you missed out, Nick and I on Friday did not miss out. We took advantage of it. But just because you missed out on it doesn't mean that makes you less of a person than Nick and I when we do the show.
Yeah.
Just makes you, and then we love you for it.
Anyway.
Anywho.
All right, let's see what else we got here. What time is it? All right, let's go to the boys. Let's bring them in.
The overtime crew.
I feel like there's a discussion here about who's a man, who's not a man, what makes. I mean, I feel like this is really. I thought we were just doing math over here. I don't understand how.
No, Tony likes to make it very personal.
I see that. It makes it very personal. Speaking of personal, did you catch what happened down at the Vatican yesterday, Tony?
I don't believe I did, Dylan.
Well, I'll tell you. The Pope had when it was the Pope's birthday. I would think you would have sent him a letter or a card or something. He is from Chicago.
Okay. Yes, he is.
And for the Pope's birthday, they had the first ever global music festival, a concert in the Vatican.
Wow.
Pharrell, Carol G, a little Latina groove.
More importantly, Clips, the first hip hop performance in the Vatican.
See, Ilya, a Jew from Russia who lives in hedonistic Portola, California, he knows what's going on at the Vatican, and you, a good Catholic from Chicago, an Italian, no less.
Yeah.
No idea.
In fairness, Clips is the album of the year. You've heard it here
I was
first.
baptized in a basketball court, so there is that.
So you're saying that you're kind
I'm a kind of a poser. I'm not gonna lie.
It's a little bit of a questionable status that you hold.
A little bit. Father was married.
Well, I mean, the Batista covers a lot of mileage. I'll tell you.
Yeah. Father was married once before. Marriage was never annulled. I might not even exist, Dylan Radigan.
But if your name is Tony Batista, it forgives all sins. You're in. And especially with that handsome face and your silver hair.
Yeah.
You know.
I try.
But anyway, hopefully next time you come for the Pope's birthday, I think he's going to be doing this every year, big concert. at the Vatican.
I'm going to bring my friend Saznov with me. I'm going to do
Guy
that.
Adami was just here. I'll tell you, Guy Adami just came. He said he came here. You know,
he's a good one. He's one of those
pilgrimage. It's a pilgrimage, but
Tom
this is my favorite pope because he's a White Sox fan. So
plus he's like a motorcycle guy.
Yeah, I don't know about that, but I'll take the White Sox fan and I'll just leave it there. I'm happy with that. All right. So
Sorry.
as we Tony and I talked about, this is one of the worst trading ranges we've ever seen intraday. This is just boring. I mean, trying to find something to do today was not at all easy. And I'm not sure that we have made any kind of statements with respect to the rest of the week. I don't think anybody learned anything from today's tape action. That's for sure.
Ilya?
I mean, the only thing that I think we learned today is not thinking continues to work. I mean, obviously, NASDAQ's having a good day. S&P's having a good day. I puked up all of my equity exposure on the short side last week. So I feel much more calm about these moves. I'm also long the metals, so and they're doing against all odds some heavy lifting today, so that's nice. It's interesting that they're up because the Fed move this week is a foregone conclusion. So it's interesting how the markets are kind of starting this week. I don't think anything really has any kind of impetus to do anything until Wednesday. So I'm not sure that these moves have followed through, if only because there's this big event risk. And maybe tomorrow things go to even out a little before that. But other than that, there's not much to make of this. I'm a little bit long dollars because it feels like the dollar is attempting to bottom here against all odds.
Dylan, the market didn't, by the way, the market's not pricing in any, I know there's news coming out this week, but the market's not pricing in any event risk. It's pricing in like zero. It doesn't.
Implied vol is not high.
Implied vol is not high. The expected move is not high. The 1 day is not high. If they were pricing in an event risk, there would be a lot more like, 1 and 2 day vol. There's nothing. If you look at the SPX options right now, I mean, this is the, like we can't sit here and say there's event risk when you look at like just the 2 days. It just doesn't, it's not priced accordingly.
Well,
you got.
In fairness, I think that's the risk, is that the market is too complacent, and then that they're going to find a way for this to be some kind of a rug pull. But to your point, yeah, the market is not looking any kind of perturbed.
Yeah, you were right, Sadnov. We got a little bit of a rally here on the close, up 32 and change. Sadnov, I have to get this in before we run out of time. You couldn't make anybody any money today with your trades, but hey, there's always tonight, Sadnov. Tampa Bay plus 2.5 against Houston. Who do you like so we can fade you?
Do we have to watch that game? Tampa Bay.
Why do you have to behave this way?
I'm an only child. I'm an only child. I'm not used to sharing my toys with the rest of you. All right, Sadnov. How about Raiders plus 3.5 versus the Chargers?
I like. Who's the home team tonight?
I don't know. Yeah, unbelievable. Monday night, you want to go to? All right, hold on. I'll get you.
I'll go Tampa.
So it's the Chargers at the Raiders. Who do you like?
Raiders.
I like the Raiders, and I like both home teams.
Okay, both home teams. All right, Monday night home team win. And Dylan Raddick, I'll give you a chance to change since Sadnov did pick the Raiders.
No, yeah, I always take the Raiders under any circumstances just because of my love of Marcus Allen.
He got cut.
You're the first guy ever to say because of my love for Marcus Allen. At least you didn't say like, I'm not sure who else.
Didn't Bo Jackson play there for a while too? That was fun for a minute.
Yes, he did. Yes,
Is Tampa home or away?
I'll get you right now. Hold on.
See the last time I watched football, by the way.
Let's see.
I like Tampa tonight.
It is Houston's at home, so I don't know if you want to change.
Yeah, I want Tampa and the Raiders.
So you got Tampa and the Raiders. You got Tampa plus 2.5, and you've got the Raiders plus 3.5. You good with that?
Yeah.
All right, my friend. We're going to take a quick 90-second break. We're going to come back. We got some overtime after this. Sound good to you?
I can't believe you missed the Pope's birthday.
I can't believe I missed the Pope's birthday either.
So I'm saddened by the news. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's going to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like, I live in Italy.
Yeah.
Like, we drive like...
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
Oh. It's not even close. Like, you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today. Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Gentlemen, hello. We're back. Mr. Nick Batista sitting in for Chris, who is going to be out and about for a few weeks, but rest assured he will return. This is Overtime. I'm Ilya Spivak in San Francisco. Mr. Batista there is in Chicago. Dylan Radigan ostensibly in Milan. Gentlemen, how goes it?
I'm great. Thank you for having me on the show today. It's been a wild run in the market, so just trying to hang on for dear life. I mean, Dylan's been screaming it for months and months. It's up only. It's just buy them every day. They're cheaper every single day.
Thinking is where money goes to die.
It's very true. It's very true.
Thinking is where money goes to die.
Mm-hmm.
And I'm happy you're here, Nick, because I'm going to have to deal with Ilya's naysaying for the next hour.
I have no naysaying. I got shaken out of my stock shorts last week, and so I have no horse in this race on the indexes here. In fact, against all odds, I'm a little bit long because there's a couple ETFs that I'm long outside of the indexes that are longer term holdings, and so sort of end of year type things. And so I've ended up actually net long stocks here.
I mean, it's been an incredible run, and I feel like I can do the Vecchio side of the equation of being the Super Bowl, but at some point, don't you lighten up, Dylan? Isn't that like at some point don't you take profits? Isn't that the move?
No, hell no.
Never. It's every day they're cheaper today than they will be tomorrow.
Yeah, what part of the word supernova do you not understand?
That's a T-shirt that we need to get made.
It really has been.
So anyway, I'm as optimistic as I've ever been. I mean, if Ilya has been flipped into a long position, I mean, I guess the thing I'm most interested in is a rising dollar. That's the final frontier from this misery of the first half of the year in the currency market, but at least misery for me as a dollar earning euro spender. It has been unpleasant, but I'm happy to hear Ilya feels like we're making the turn. I'd like to get back. You think we can get back to 95 cents there, bud?
I think that's probably a little bit of a stretch, but it does feel like the dollar hasn't made a new low since July. It's a little bit heavy here, but it hasn't made a new low since July. And all we've been talking about is how these Fed rate cuts, or certainly this one coming up, is more and more and more and more certain. It's 96% now in Fed funds futures. So it's basically a given. So that the dollar can't keep selling off on this, that this is not a dollar negative story going all the way back to the beginning of July, that's curious. And that tells me the price action just doesn't care, and therefore this thing is just waiting for an excuse. We might get it this week.
Is the Fed rate cut and the absence of many future Fed rate cuts basis for dollar strength?
Well, I think the disconnect between markets and the Fed on future rate cuts is really where things get interesting.
That's what I'm thinking.
In June, the Fed said, we're going to do 75 basis points between then and the end of next year. And that factored out to 50 basis points in 2025 and one cut, a single 25 basis points for next year. The markets obviously have very different ideas. Yes, they've baked in this cut. Everybody agrees that we're going to go in September. But the markets are erring on the side of 3 cuts this year at this point. That third one is about a 50-50 shot, but they're certainly seeing that as a significant chance. But for next year, the markets are at 3, and the Fed's at 1. So I think what the market's going to want to see is for the summary of economic projections this week to at least start to kind of acknowledge the fact that the Fed is going the market's way. They'll at least have to, I think, add a cut for next year in the forecast for the markets to look and say, okay, fine, it's not everything that we think, but they're going our way. They're moving in our direction. And if they don't do that, I think the market's going to get left disappointed, and it'll be one of those buy the rumor, sell the fact kind of things, where the dollar essentially goes, well, we knew the cut was coming, but if they don't want to embrace a more dovish outlook than they did in June, then they're not going our way. That's relatively hawkish, sort of in comparable terms. I also think stocks aren't going to like that kind of outcome either. But I certainly don't think there's anything to sell. Nick, so you see anything in the spirit of lightening up, as you were saying? You see anything to be opportunistically betting against risk here?
No, I mean, I've been lightening up, but I feel like I'm stupid for lightening up because every day I could get more if I just held. And so that's my biggest question. And we went through it, you know, the last time Jay Powell took the stand and, you know, confirmed everything we already kind of knew, was that, you know, September was rate cut season and it was coming. And that seemed to be consensus news. And then the market was up 100 points. And now I'm thinking to myself, you know, Wednesday, we know exactly what's going to happen. There's going to be rate cuts. Yeah. Right now, the CME FedWatch tool has us 95% for, you know, 25 basis points, 4% for 50 basis points. I guess some people think there's, you know, a higher chance that there's 50 basis point, yada, yada, yada. I get it. Rate cuts are here. On Wednesday, does the market, like, the volatility is basically at lows. It's telling you that nothing's going to happen, but is that, I'm worried that I'm going to miss the next big move.
It's interesting because the last time Powell spoke, right, there was no policy announcement in August. There was the Jackson Hole thing. And so he gave the Jackson Hole speech, and it was good for a day. And then the market kind of stalled. And that was really the story of August. It's kind of interesting. The markets did basically nothing in between the CPI numbers we got last week and the CPI numbers we got a month earlier in mid-August.
From like an ETF level, they did nothing, but stocks are moving. I mean, you got
individual ones, of course. Yeah.
Individual stocks. The dispersion trade is very much there. I mean, you had Tesla catching up today. I mean, Google looks like a meme stock. It's up at $250 here. It's gone up, you know, $60, $70 in the span of 2 months. You got the pigs flying, you know, your quantum stocks and uranium stocks and you name it.
Is this the TikTok thing, you think? And obviously it doesn't have anything to do, I don't think, with TikTok itself, but we got a headline today that apparently the U.S. and China have reached a deal on how TikTok is going to stay in the U.S. And apparently there's a call, because there's always a call, because there's always a cliffhanger with these guys. Mm-hmm. There's a call on Friday between Trump and Xi where they're going to thrash out the last of it or give it the go-ahead or whatever it is. I mean, Bessent was speaking about it as though it's a done deal. Obviously, TikTok itself is what is, you know, of dubious economic impact by itself, but, or at least of debatable economic impact. But if the U.S. and China are agreeing on stuff like this, and there's maybe a little bit of a thaw, is that why we're getting all this tech optimism, do you think? Because, I mean, you look at this sector-wise today, and it's communication services in the lead. Mm-hmm. I mean, tech itself is obviously up a ton. it's a pretty skewed kind of day.
Yeah, I think it's more of what we've been witnessing over the last couple months. It's FOMO. I mean, it's the every day they get, they go up. It's exactly what Dylan has been talking about. It's the supernova. I mean, like, that's what it feels like in markets. Who would ever trade to the downside when you see markets like this?
Not even me.
Yeah, it's hard. And if you did, the macro sounds right, but the market goes the other way. It's a tough pill to swallow. It's tough to be on the other side.
The only way
of
you
that.
lose money is by thinking, because any rational thinking individual can very quickly come to a list of reasons why the market should not be at its present level and couldn't possibly sustain itself. You yourself, Nick, recently started thinking when you thought about lightening up your position because of your gains, which clearly had evidence of thought. But again, I don't advise it.
There's all the old adages, buy low, sell high, all those sort of things. You got to just throw them out the window.
Well, so, and this is where it gets interesting now. If you don't think and you just buy them, do you buy more here?
Where do you get the money to do it?
That's a fine question.
You've been buying them every day for the last 6 months. When does or is this the next rate cut? Is that where we get our next round of funding where we can buy them up again? Is that what it is?
Perfect. That is the perfect way to describe it, because I was looking at this on Macro Money, the show I do right after this last week, and there is a lovely kind of symmetry here. Take a look at the continuous ES contract for a second, because there's a funny thing that happens. So you get the sell-off, right? Mid-February to early April, everybody's freaking out about tariffs. During that time, Fed policy expectations go significantly more dovish. And of course they do, because the market's freaked out about the tariffs. They're like, this is a growth scare. Consumer confidence is falling off. Business confidence is falling off. This is going to be terrible for the economy, right? So stocks go down on growth reasons. Then the president gets religion about market discipline when the bond market freaks out with stocks and the dollar all at the same time in April and goes, whoa, 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 90-day pause. Everybody be cool. This is not that. Okay, stocks rebound. What's interesting is when you look at that continuous contract, Fed policy expectations obviously unclench because they go, oh, okay. We don't need emergency rate cuts, fine. And they unclench from that bottom in April all the way until about mid-May, which is exactly the point where the markets recover all of what they lost and basically come back into the bottom of the range they had in February. At that spot, the outlook for Fed policy for this year just gets locked in around the 50 basis points the Fed said in December and coasts from there. But the outlook for 2026 starts to blow out. And so the cumulative outlook starts getting more and more dovish. And stocks all of a sudden go, oh, well, we're just going to keep going higher then. And so everything we've seen basically since mid-May has been a near perfect inverse of the 2026 Fed policy outlook in the December 06 month. So if you look at SR3Z6, you can see it. Right around mid-May, you start to see this relentless march into a more dovish direction. Mm-hmm. So you can see it here. There's the April spike. That's where stocks bottom. Mm-hmm. There's a little bit of a recovery into the middle of May, right? The contract pulls down, so rates come up. Market goes, oh, okay, no emergency. And then since then, it just keeps building and building into April's lows again. So how much of this stocks rally is about anything other than just cheap future money? Maybe that's how they think they're going to keep buying.
I mean, if I was to think.
Don't do it, Dylan. Don't do it. Don't do it.
Uh-oh.
No.
I would not advise. But if I was to do so, the thought that I would think would be this. The Fed's going to cut rates. The Fed's going to say something about something. They're going to, and something that they're going to say, somewhere in some of those somethings is going to be some comments that speak to the Fed's expectations, perhaps even concerns of more muddled or slowing or mixed economic activity.
They're going to have
to. Reason to cut rates.
They're going to have to, because they're going to have to sell it.
So they're going to have to say, we're reducing rates and we are now more vigilant about the status of the situation, and which has more mixed influences, and we're concerned about evidence of headwinds and tailwinds that could result in different, more unreliable economic outcomes, or some gibberish.
Mm-hmm.
And if I was to think, I would think this, that the market, which is at these absurd levels, detached from all reality, oblivious to the headwinds of the tariffs, the complete dislocation between the normal economy and the financial economy and the tech economy is completely detached one from the other. And the Fed's cutting for a reason. My thought is that when the market sees that the Fed is cutting for bad reasons because they are concerned about the health of the economy, that actually could serve. You could be setting up, I mean, again, this is just horrible on my part because it's just riddled with thinking. But you could be setting up, I think, a really miserable few weeks, actually, not just a miserable few days, based on the market in levels being where they are going into this, combined with the Fed's coming out and saying that they're cutting for the wrong reason. Wrong reason in the market sense. It's, in other words, we're not cutting because inflation is going away. We're cutting because we're concerned about growth.
That certainly seems to have been kind of the song and dance out of the Fed to justify these moves. And it's not like the market didn't know these moves were coming, but the Fed has obviously had to have some rhetorical cover for all of it. So they've started to kind of talk about risks to the labor market and yada, yada, yada. It's interesting because the markets have thought that the threat has been to growth and not a threat of higher inflation for a while. Break-even rates in the bond market have tellingly not gone up since bottoming in April in any kind of crazy way. And that's sort of how you get the SR3 contract looking the way it does. The market doesn't think there's an inflation scare, which is what the Fed is concerned about. The tariffs are going to be inflation and et cetera, et cetera. Market's not concerned about that. They're concerned about what the tariffs are going to mean after the inflation for growth. And we already got a terrible first 6 months of consumption at the first half of this year. Obviously, we haven't seen third quarter GDP numbers yet. We'll get retail sales this week. Consumer confidence fell last week. That's a thing. But we already have consumers under strain. The first 6 months of this year were the weakest 6 months of consumption since the first 6 months of 2020, which was the COVID lockdown. So not great, but clearly the market is concerned about that and not about some inflation something. So that could set up a sort of buy the rumor, sell the fact kind of thing, Dylan, to your point, where the market goes, right, well, speculation has become reality. We've been yelling this same thing for a while. The Fed is finally there and doing it. There's nothing to speculate on anymore. Let's just take some profits on this view that's worked for 4 months, 5 months.
And if I was going to get short, which I haven't been for months, I would do it right now.
But only for a short term. Because doesn't all that bad stuff, doesn't that just go straight to the NASDAQ and the AI story and all that good stuff? Like,
so that's why thinking causes problems.
I know. Well, unemployment, I mean, that just means that, you know, that's more dollars in Google Gemini or Meta or whatever, or Microsoft. I mean, that's kind of what the market's been saying. It's like, who cares about that stuff?
Agree.
Like, you don't need any, you know, house building. You don't need any of that stuff when you could just, you know, build a server rack. Right?
That is definitely a very interesting part of this story, and we can maybe wax a little philosophical on this. I have been kind of beating the table going, yes, there is a ton of investment in AI in the sense that we're building the infrastructure for when it'll eventually get used and generate all of these economic benefits. But we're not getting the economic benefits themselves yet. If you believe the recent sort of data out of MIT and
no, it's like a wealth consolidation. I mean, I think that this is the end game of capitalism, which is all the cookies go to the same, you know, 4 places, and everybody else can eat dirt.
Well, I mean, it's not like we haven't had periods of wealth concentration and then distribution. I mean, we've all read the Great Gatsby, I'm sure, but capitalism survived. Mm-hmm. It's just we're probably on the cusp of some sort of reinterpretation or evolution. Not unlike, let's say, the FDR thing that sort of changed the character of what we were talking about. It seems like and then, of course, in the 80s, Reagan. And so now we're looking like we're going to renegotiate again.
Excuse me.
Dylan, what happens when the Supreme Court does away with the tariffs? How much higher are we?
Or lower.
I mean, if we go lower on the Supreme Court tariff extinguishment, I figure you got 10% to the upside.
10%. We got people in the YouTube chat. We're calling 10,000 on the SPX in 3 years. So we got, you know, another 60-ish, 50, 60% to the upside. I mean,
how many people think that if the Supreme Court were to rule against these tariffs, that would be the end of it?
I think it would be bullish. Why wouldn't it be bullish? Everybody's
because the markets have just spent. The markets have just spent from April until now benchmarking what this tariff thing means.
Yeah, and we're only 10% higher from the open.
Figured out what's going on, and now you would tell them, yeah, no. What you think is going on is not what's going on. I mean, is this the administration that's going to take that kind of a thing lying down? Or are they going to fight it absolutely and totally and tooth and nail? I mean, I think if you get these tariffs overturned, not that I think they shouldn't be, I am no legal scholar, although on the surface of it, it does seem like they have reason to be overturned, but far be it from me to know legally. But it seems like the markets would get the thing they don't want, which is more tariff uncertainty, and they would have to re-benchmark everything again. And maybe that's a good thing for a little bit, but I'm not convinced that it's necessarily good news in a lasting way, because it sets up a lot more chaos.
Dylan, did you catch the move in Tesla today? This is another story I would like.
And I saw the Elon tweet, which made me chuckle.
The 10 to 420 prophecy secured.
That's right.
Are we
like
back?
That.
Are we funding secured?
Funding fully secured. You know, I mean, Tesla's one of those ones that It's sort of like Apple, Google. I mean, it's sort of. I would say this thing with Tesla, what happened with Google a few weeks ago. All this is evidence of where thought gets you into trouble. You know, it's like just if you see the AI names going cuckoo bananas, and you're not in there buying the laggards on a relative basis, which have been Tesla and Google.
Amazon a little bit too. It played catch up a little bit the other day.
I would just look for the loser of the bunch and buy it, because it's just a matter of time until they leapfrog each other. That Oracle move was absurd.
In fairness, data came out today saying EV sales January through August were up 25% worldwide year on year. This was data that came out of Row Motion. Row Motion is essentially a research consultancy, but it was reported in the news earlier today. Their benchmark came out today, and they were looking at year-on-year EV sales January through August this year versus last year. This year up 25%, which is a lot of percent, of which 6% was North America. So
wasn't that after like some horrible numbers?
Yes,
yes.
And then the self-driving, and then never ends with these people.
It's always just another, like, news headline. It's always a new FOMO. I mean, we had a month or two ago, weren't they talking about the BYD? How BYD was doing, 50% more than Tesla was delivering, or some crazy number. And then now we flip the cards this month. It's a never-ending circle, it seems like.
No, so the question of the day is who's next up in the game of leapfrog? It sounds like you're hinting at Amazon.
I think that's one of them. I mean, Amazon, Apple can't do anything right. I mean, the iPhone Air is interesting though. Smaller.
Whatever. That thing's a bust. It doesn't. The camera's worse. The battery's worse. Nobody cares. And nobody wants a thinner phone is interesting if you can maintain the camera and the battery. But to trade off the camera and the battery for a thinner phone, it's a joke.
So what's your pick for the next mover, Dylan?
I think Amazon is a leapfrog. I think Apple and Amazon are both great for the leapfrog. I think they're both great for the leapfrog, but I don't know what will cause the frog to leap. But I mean, I think there's got to be some AI related thing somewhere in the cooker at both of these companies.
Well, aren't we getting the TikTok news soon? Aren't we taking that one?
I mean, apparently on Friday.
So who's taking TikTok? Is it going to be Larry? Is Larry getting TikTok? Warner Brothers? He's just going to control all the media now.
It's interesting because what Besson said today, to your point, he was like, I don't have any details for you. I believe, he says, ostensibly because things can change between now and Friday. He goes, I believe U.S. ownership or a transition to U.S. ownership is how the TikTok thing is going to get figured out. So, yeah, it's a big question. Who?
That's the next leapfrog.
I would say not Elon Musk.
What? Okay. Yes. Okay.
Let's do that. I would say not Elon Musk. I would say probably not Tim Cook. Let's assume the president will make the decision based.
If it was Tim Cook, that would be hilarious.
People he likes.
Yeah.
It has nothing to do with the companies.
So Meta then.
Does he like Mark?
He loves Mark.
Is Mark his favorite guy of the whole bunch? More than Jeff?
Mark's been around him a lot recently.
More than Satya?
Oh, yeah. I think certainly more than Satya.
He hasn't bent the knee.
So Satya's not on the list?
No.
So you think Mark is
Might be Mark.
Is his buddy?
Elon has,
The only
I
question
feel
is who's
like,
his
gotten back into the good graces. Like over the last couple weeks, Elon has gotten more. No, you think that one's just that's severed
I think
forever?
the president holds a grudge much longer than all that.
That was a tough one. There were some things that were said in public there that were pretty.
I mean, this Epstein thing is still going, and Elon basically did that.
True.
But I feel like Bezos has kind of been,
he's getting closer.
Getting in there.
Did Trump get an invite to the wedding though? That's the ultimate.
Well, who was next to him at that dinner the other day? Was that Zuckerberg?
I think that was Mark.
Ooh.
Ooh, what about Bill Gates? Wasn't Bill Gates sitting next to him?
That would be hilarious.
Yeah, no way that's happening.
If he gives TikTok to Bill Gates,
that would be
amazing. That would be amazing.
I mean, talk about an incredible mid-season surprise.
What about Peter Thiel? He's a good old school Republican or new school Republican.
Our chat's saying whoever owns the most Trump coin gets it.
I agree with the chat.
That could be a good one. That could be a good way. It's fair. It's, everybody has access.
The system, the methodology.
So I mean, it would be a ratings bonanza.
Oh, I know what he should do. He should give it to his son, Don. Don can use Trump coin to buy TikTok.
No, Don's doing
merge it with Truth Social. Oh my God.
Yeah.
Oh my God.
That's how you do it.
TikTok and Truth Social together as one.
Collateralized by a loan from Deutsche Bank that are collateralized with Trump coin.
If there was ever a move, it would be for Truth Social to get TikTok. It would be amazing.
That's the obvious move.
There it is. We've solved it right here.
Unbelievable.
You heard it here first.
With a loan from Zuckerberg and Bezos to pay for it. Under threat of some sort of horrible government intervention to their detriment. They're forced to issue a line of credit to Truth Social to buy TikTok.
And then special edition sneakers with the TikTok logo.
And then put Don and Eric in charge of the whole operation.
Tremendous.
Oy.
Unbelievable. Does DJT, does that Trump stock still trade? Can we buy that?
I believe so. DJT 1746 right now.
Was it a truth? There's another one.
Yeah, DJT Trump Media is. I mean, if anything, if you were looking for something that's cheap, this is cheap.
Yeah.
I mean, it's been higher.
Dylan, what do you make of the gold and silver move / Bitcoin not participating? Why? Give me something. You got to be a Bitcoin guy.
I'm a Bitcoin hater.
Hater?
Hater. I was offered Bitcoin in 2009, turned it down, never liked it since.
Wow.
I have some resentment.
Yeah, that sounds like a grudge if I've ever heard.
It's a little bit of a personal issue, but as far as gold is concerned, all I can say is stunning move. Absolutely stunning. And I wouldn't short it. I wouldn't buy it that or up, but I also would I would use the gold move as further evidence of my long-standing assertion to not think.
I mean, I'm still sticking with it. And in the spirit of not thinking, when silver broke its congestion range on Friday, I bought some silver against every perhaps natural inclination that I might have, and today it's up.
See, this is what I'm talking about.
Is it stupid? Yes. Am I long? Yes.
I was having this conversation with my dad. Is it just the fact that you just have to buy anything, whatever the asset is, whether it be a gold, silver, stocks, houses? Is that what the world we're in right now? Is it just like you got to get it?
If the driver is cheap money, as I'm increasingly convinced that it is, if the driver is the Fed is going to cut a bunch next year, everybody's going to get the cheap money that makes everything feel okay, right? Like there's all these risks, right? The moment you start thinking, you go, there's a risk over here, there's a risk over there, there's a risk over here. Meanwhile, the market's going, but don't worry, because the Fed's supply of Ambien will be greater than even they know. And as long as that's the case, then line go up. If that's what it is. And on Wednesday, we find out if it is what it is. Because if on Wednesday the Fed comes out and does this aw shucks thing again and goes, with the tariffs and the risks and we're not going to let inflation get baked in and 25 basis points next year, the market's going to go, wait, we were promised Ambien by the truckload. Where is it?
So you're saying that, but the big risk, obviously, I guess it's not apparent, it's not some brand thing, but if the Fed makes an indication that more rate cuts next year are in question at a high level.
Yes.
That'll be a test of the no thought rally.
Yes.
Then you might want to do some thinking.
Yes. I think every sort of, like, I always catch myself reminding myself over and over again. Like, it feels like I do this once a year. The market wants to believe that the Fed put is real and that the cheap money is invariably going to bail everybody out every time. Mm-hmm. Because that's what we've been conditioned to know basically since 2008. Maybe a little earlier. And we have a whole generation of people where that's all they know. Anytime there's a bump in the night, the cheap money comes. But what if it doesn't? I would argue that since 2022, this is a different Fed. This was the most aggressive rate hike cycle since the 80s, since Volcker.
The question is, even in that situation,
that their willingness to cut rapidly is not such a foregone conclusion because it's a different Fed?
Because they're a lot more worried about inflation than they've been in 40 years.
Sorry, go ahead, Nick.
Well, I was going to say, even if it is, if there is some sort of pullback, is there any size of a pullback that's even going to scare any of the people that have ridden the wave for 10 plus years? I mean, like, what kind of move lower gets people away from buying the dip?
That doesn't exist.
I don't think it exists. That's the question. It's like, even if Fed policy changes or inflation comes back or whatever the
fewer rate cuts next year.
Those are a thinking man's. That's a thinking man's bearish signal. But
yes,
if there's a 10% move, I'm sure my mother is going to get on her Robinhood app and buy the dip. And she, 100%. It's like everybody's gonna be doing it. It's crazy.
It's full.
I mean, this is the interesting, like, easily the biggest question. So the pullback from the peaks in February down to the lows in April was 22%. Do we think we have another one of those in us? Maybe.
I mean, it would be crazy to think that you can't have a 20% down move.
Yeah.
I mean, you got it. You're like, this isn't unique. We had these, COVID. Yeah. That was our last one. I mean, they come every couple of years. It's just that, we've never had a sideways market. It's always been a drift higher.
Well, and I think that, I mean, equities have been biased in the direction of a drift higher, since the beginning of time.
Yeah.
If you want to go back far enough. I mean, obviously.
Yeah, but we're not talking about 1 or 2% higher for the year. We're talking about 10 or 12% higher for the year. Like that's meaningfully higher. There's never been, we haven't in the last 10 to 15, 20 years seen a prolonged period of time where, it went sideways. It's always been 10, 15% up every single year. And any dip, a 20% dip You look back 6 months, you know, and you're back to highs. It looks like this V bottom. It's always.
Well, and in fairness, right? So the entirety of 2022 was a down year, but it was only down 27%.
Yeah.
That's not that far off the 22% that we've already fallen this year and have obviously already rallied back and erased it.
Mm-hmm.
The entirety of the COVID sell-off was 36%, so a little bit more. Obviously in 08, a little bit of a bigger scare from the top in mid 07, which is where stocks initially topped out, down to the bottom in March 09. That was the last big kind of holy moly. That was 58%. I mean, could we do that again? Are we stretched like that again? Maybe. The run up into that top. So if you look at the S&P from, let's call it the lows in mid 2002, 03, sort of early part of 03, latter part of 02, into the top in 07, it's almost a straight line. It's a very, very, very quiet 6 years. And so could we have another, I don't know, 50-ish %? Does that get people out of bed? Maybe. The thing I'm probably most worried about is that, okay, yeah, you get a trigger from the Fed, but things don't spiral because of a trigger from the Fed. Things spiral because people start thinking. If all of a sudden the Fed gives people a reason to think, that's why you spiral. It's not the Fed end all, be all, full stop. It's just the Fed goes, listen, you can afford not to think if the money is cheap. And so, okay, let's say you make a mistake, you lose some money, you get something wrong. If the money is cheap, you borrow it back, you go again, everything's fine. If the money is not cheap, you actually have to think about, like, where is your risk? How have you allocated your portfolio? Are you overexposed to this or that? And if there's a ton of reasons, as we're saying here, to be worried, but for thinking, the Fed gets people thinking over the course of some months. You could come down a lot.
As a massive wealth concentration in the tech sector, a massive threat to employment from the newest technology, at least in the short and intermediate term, a massive price pressure from the tariffs, and basically, even if the rate of inflation has gone down, it's not like prices have returned to pre-COVID levels.
Or close to it, yeah.
A block of cheddar cheese is still $15 or whatever it is.
Yeah.
You know, I mean, I can make a million reasons why the market is detached from reality. I just don't see any logical reason where I could advise myself or a friend to do anything that's based in reality right now.
I mean, agreed. And this is why I think the sort of thinking versus not thinking might actually be what everything hinges on this week. If suddenly the market gets from the Fed the message that, hey, you all need to think because we're not going to give you all the Ambien that you thought, whereby you could just take it, lie down, and relax. No, you're going to have to think. Then there's all kinds of things to think about. I mean, 68% of the economy is household consumption, and in the first half of this year, it was the worst since the COVID recession. That's 68% of GDP. That's not a happy thought. So the problem is that it's a thought.
Exactly. But I mean, I think you bring up the really critical point, which is the Fed is going to make a statement that is going to be laden with 1 to 10 different things that are intended to produce thought. But I mean, part of the beauty of not thinking is that when somebody offers you a thought, you just ignore it and buy yourself some more Amazon or buy yourself some Tesla. I mean, look at the, I think the real thing to move right now is to load up on Apple and Amazon as the two sleepers in the supernova right now. And don't worry. So like all this talk about things we might think about obviously has no basis in reality.
Not until the market decides that it must think. And unless the Fed convinces them that they have to think, I don't think they want to think.
Who would?
What about this weekend, Dylan? We got your murder drone headlines. Russian drones flying over Poland and this place. Is that prophecy coming to play in, or does that that doesn't matter either, right? I'm thinking too much.
The world ends once. I mean, I'm not talking about some Russian, Polish, whatever. I'm talking about AI with a fleet of mosquito-sized bombs that are coming to every mobile phone in the world at the same time. Okay, there is no trade after that. So don't worry.
The Apple servers get hacked and you just get location pinned, and all of a sudden you got a swarm of murderous mosquitoes attacking every person.
That's right. Run by AI.
Run by AI. There you go. I like it.
Pretty much.
Don't worry. If the murder mosquitoes come, Wu-Tang Killer Bees will counter them.
There you go. There you go.
Listen, the murder mosquito is a real thing, boys. Just, it's no joke. The Chinese
There's
have
nothing funny about the Wu-Tang Clan.
The Americans have them. The Russians.
As we have been told many a time,
really
Wu-Tang Clan ain't nothing to F with.
Imagine being a paranoid, like, Tasty Trade watcher, and you all start internalizing the murder mosquito. I shouldn't even say it. I'm sorry. It's not real. It's not real. Don't worry about it.
Yet.
Better to buy yourself. The real question, I think, was the first question Nikki asked, which is, okay, do you buy Tesla now? After the pop? You buy Oracle now? After the pop? You buy gold now? Like, if you really have a pair of balls on you, you're late, so to speak.
Yeah.
But you might not be wrong.
But that's my question. Do you look at the markets like that? Do you look at Tesla and say, you know what, I'm gonna grab a couple more today. Why not? Like, is that the thinking? Because it's hard for me to do that. I look at Tesla and I'm like, okay, I took a couple deltas off, on Friday, and now I wake up on Monday and the stock's up another $30, and I'm like, well, shit, why did I do that? I should have just held today, and then maybe I get some more today, and the stock's up again. And it's like, when do you say, okay, I'm full, or I don't have enough, I can't buy anymore. I physically can't.
Well, that's why it's hard. I mean, that's why people have a hard time with this.
Yeah.
Well, and you get to a point, I mean, eventually, one would think, where everybody at the margin that wanted to be a buyer is a buyer and is already long. And then whoever is not a buyer and wants to be a buyer looks at the chart, goes, here's where we are. Here's how much lower we were like last week. Never mind last month, last year. This feels expensive now. I'll wait. And eventually the thing just runs out of buyers and gets skewed. And then who knows, by the way, when that is. But if all of a sudden in that sort of a precarious state, the Fed tells you that you've got to start thinking, or somebody convinces you that thought has become necessary, the whole thing caves in on itself. That's sort of where I thought we were in August, when we couldn't make hay of Mag 7 earnings. We couldn't make hay of this piece of data or that piece of data. NVIDIA gave us a day. The Powell gave us a day. CPI gave us a day. And nothing could get anywhere. But then, of course, with this CPI number, it broke out. And that obviously wasn't it. So at some point, everybody that's long is long. But where that is, who knows?
Too much thinking.
Right.
But I would say my favorite name to be long right now is Amazon.
What do you think's the next headline out of Amazon? TikTok?
I think there's going to be some mega AI release from them at some point that's no different than the Oracle move or the Google move or the years back NVIDIA moves. They've all got something in the cooker.
Mm-hmm.
It's just not everybody's taking it out of the garage yet, but it's coming.
I mean, if you liked the Tesla move and now you're looking at it and you're going, I should have been in the Tesla move. Rivian, if everything goes up and thinking is not required, Rivian, RIVN, it's got okay IV rank, is still in the middle of its range. Yourself all there.
You're like Tom. Tom's got Lucid. Tom's in bed with the Saudis over here in Lucid. Come on, we got a great American company here. Chart. Yeah, Lucid's a pig. They did a split here, but okay, I feel you on Rivian.
Yeah, I mean, at least this looks like the chart of a stock.
Yes, fairly normal.
But I mean, I'm not gonna buy it. But if you're saying, okay, you know what? Again, we're gonna get this on a T-shirt. But which part of the supernova don't you understand? If that's the story, then and Tesla's made its move, and DRIV, the self-driving ETF, has made its move. I mean, it's surging. Rivian hasn't, and it's got what 34 IV.
The leapfrog list, yeah, I like it. At least yeah.
I mean, I guess.
Would you rather have Rivian or Amazon? I know they're not the same, but
what about Uber? Uber, Lyft, isn't that on the radar here?
I mean, at least Rivian has some IV rank in it. I guess you could, in tasty form, you could sell some premium in there.
Yeah.
I mean, Lyft, Jesus.
Yeah, it's moving with Uber. Uber's at all-time highs too. It's the same story, just different names. I mean, this has been these charts and these moves, these one-day moves are the story of the market. All of a sudden, you wake up one day, there's a headline, and the stock's up 5%. Market's gone basically, has drifted higher, but you're having these 5, 10, 15, 20% moves in stocks. It's like the FOMO's off the charts. That's why you just turn the brain off and just put it all in. I agree with Dylan.
I mean, that certainly worked. That certainly worked better than anything I'm doing. The only stock that I'm kind of persistently long is EWZ, which is the iShares Brazilian ETF.
Okay.
And I've been long it for a good long time. I bought basically year-end calls. So I've still got over 100 days in them.
Mm-hmm.
And I've been sitting in these. I have calls at 27 and 29. Just outright, just bought the calls at the money. Not even spreads. Because it was dirt cheap. We're up to 30 now. I guess that still is a thing.
Mm-hmm.
It's making highs. So if you wanted to do something and not think, that's a thing I'm doing and not thinking.
All right, weekend calls, Dylan. Where are we at? SPX or E-minis? What are we up?
You're saying to this Friday?
Yeah. Expiration, FOMC.
No, I think we're getting I think it's a face plastering. I'm feeling that the Fed meeting is the trigger for a big old sell-off.
Yeah.
The buy the rumor, sell the news. It's finally here.
That's what I'm saying. Well, for a few days, don't get too excited.
Okay, good. Thank you.
6,300 on the S&P.
I like that.
Why not?
I like that. I think I would like to see vol a little bit higher, so I'm going to go with your side, Ilya. 6,300. Yes. Buy that dip, though. Buy that dip.
let me get a little nibble on the short side before you go, markets. Just let me get a little give back for sitting around all of August and waiting.
Perfect.
With that, overtime is out of time. We'll be back in a mere 23 hours, but don't go anywhere because I'm going to be right back with Macro Money, where we'll talk about all of the event risk that's coming up this week and dissect the Fed in gruesomely granular detail. So don't go anywhere. We'll be right back.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table.
If you had to swap jobs with anybody in this office, who would it be and why?
I would like to swap roles with Vanetta for a day, just so I can, talk smack about Tony and Tom for like a full hour in the morning. That would feel kind of nice. Just like a roast to start my day off.
Oh, God. That's a good question, actually. For a day? Forever?
Ever.
Forever? Oh, no. I mean, Tom has a hard job. He's got to wake up really early. But he gets the privilege that he gets. He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table. He can pretty much yell at anybody. He gets first dibs at the lunch line. I think I would, maybe Tom, but I would probably wouldn't last very long, yeah.
Probably Dylan Radigan, because he lives in Italy. And I live here in Chicago, so yeah.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options. And so I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient. And tastylive does it again. They teach it in a way that is fun. It's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We start off an eventful week with strength. But is it going to continue, and what are the pitfalls that are facing us in the days ahead? And there are many. That's what we're going to discuss here on Macro Money. This is Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to do here is not surprisingly, surely, focus on the big elephant in the room event risk this week, the FOMC monetary policy announcement, but there is more on the calendar, and that is not the only game in town. So we'll go through everything else that is menacing the markets this week. We'll also go through what happened last week, of course, in terms of price action and economic data, and see how that sets us up for next steps. In fact, we'll start there. Here's what the markets did last week. We can see stocks higher, S&P up 1.5%, ultimately NASDAQ up 1.8%. We continue to see a little bit of weakness at the long end of the yield curve, the 10-year down just a bit, 0.2%. The front end, though, a little bit perkier, up 1.5%, as if to suggest that the markets are happy that we are going to get, or almost certainly going to get, a rate cut this week, but perhaps a little bit more circumspect about just how dovish all of the positioning now looks. And we'll get into all of that. Perhaps the markets see a little bit of disappointment risk as possible. We'll see how that goes. Crude oil still oscillating in familiar territory, up 1.3% this week after a 3.3% decline last week. So just treading water without really getting anywhere. Gold slowing down a little bit last week, but nevertheless making progress, up 0.9%. And the dollar finally starting to show a little wear and tear around all of this speculating about Fed easing. Euro up 0.7%, yen up 0.8%, Bitcoin up for a second consecutive week, 4.7%. So it would seem that it was a generally risk-on sort of tone for markets. Obviously, stocks up, Bitcoin up. It would seem that the impetus for that optimism still is some level of hopium around a dovish Fed and the cheap money that this entails, hence gold, hence the dollar, stronger gold, weaker dollar. The bond market is a little bit interesting in this context because obviously it's had some explosive gains recently, hence the decline, the aggressive decline in yields. But it also looks like maybe there's a little bit of exhaustion there. Maybe the bond market's already made its move and everybody else is kind of catching up. If we look at how we start this week, though, this is what happened today. You can see there's very much more of the same here. Stocks up again. This time, gold up 0.9%. And we don't have it on the chart here, but silver likewise powering higher. Dollar weaker again, 0.2% gain for the euro. Flattish against the yen, that's the most yield sensitive of the major currencies. So interesting thing there. Bitcoin isn't participating. It is down 1.3% almost, but not a big decline given last week's rally. So perhaps just digesting here. Stocks meaningfully higher with the NASDAQ leading 0.7% gain there. S&P up almost 0.5% last time I took this snapshot. So as we look at the start of the week here, clearly the markets are still seeming to revel in a dovish sort of mindset ahead of this week's monetary policy announcement. And perhaps the sort of chipper end to last week follows from what the last bit of data last week gave us. This was the University of Michigan Consumer Confidence Survey, and we can see here that sentiment weakened. Here's all the three kind of dimensions of sentiment in this report. The sentiment index overall fell. The index of current conditions was probably the least hampered, and the decline in expectations was significantly more pronounced. So we can see here that for the overall index that takes in both of these measures, we have a decline that's driven mainly by pessimism about what's to come, not an assessment of what's currently there, which is not what you want to see, needless to say. But perhaps the most important thing here is that the outlook for inflation, this one-year forward gauge, did not go up. Now, it held at a relatively elevated level at 4.8%, but it did not rise. And perhaps that is helping the markets to rationalize that the Fed isn't wrong, that they are not cutting into some sort of an inflationary uplift that's sticky, that we are going to get the version of the world that the Fed envisions, which is to say a transitory rise in inflation because of the tariffs that remains a one-off, because the Fed is not going to ease with reckless abandon, but instead is going to ease in a way that speaks to the emerging weakness in the labor market without kind of taking the lid off all of the progress that they've made on getting inflation back in the box. And so perhaps this helps to explain how the markets ended last week on such an optimistic note and how we're going into this week in such good spirits. For that matter, we can see that the likelihood of a Fed rate cut at this week's meeting is 100%, of which 96% is calling for one move, a 25 basis point move, and a slight 4% chance that we're going to get a jumbo 50 basis point move. But the essence of the disconnect that has existed in markets continues when it comes to what happens thereafter. As ever, we're looking at this outlook for this year and next, and what we find is that the markets and the Fed are very much at odds. So, looking at what we see for this year, we can see that 61 basis points are on the menu. That's 11 basis points in the direction of a third cut beyond an initial 50, and that gives us a loose probability of about 44%. Now, if we look at the CME FedWatch tool and we start to look at this a little bit more granularly, we can see that the likelihood of that third cut is closer to 68% once you take the date of the rate decision in mind. And so when we look at sort of the cumulative likelihood here, we can start to surmise that what the markets are actually betting on here is 3 cuts as more likely than not by year end. And then for next year, of course, we're looking at a very expansive easing cycle, 69 basis points. That's almost fully 3 rate cuts discounted. In fact, if we consider here that we have 19 out of the 25 basis points of that third cut baked in, that's a 76% chance that that third cut is coming. Now, compare that with the outlook that the Fed gave us in June, the last time that they updated it. And of course, they're going to update it again this week. This seems like where the source of speculation is. If the market is 100% certain that some amount of rate cut is coming, and it's not like they're 60-40 certain that it's going to be 25 to 50. They're 96-4 certain that it's going to be 25 to versus 50. There is an immense amount of conviction. If the Fed does anything other than cut by 25 basis points, a level of pandemonium is likely because almost everybody is going to end up looking wrong and have to reposition. But that is overwhelmingly unlikely because, of course, the Fed understands that that's what is likely to happen if they suddenly pull the rug out in either direction. And the Fed is ostensibly not in the business of pulling the rug out from under financial markets. So when we consider it in those terms, we're almost certainly getting a 25 basis point cut. The real question then isn't that, because there's no speculative juice that's left in that idea. The real question becomes, what does the Fed say about next year? Does the Fed endorse the idea that we're going to get more cuts than it's already owned up to? They wouldn't necessarily have to go all the way out to 75. They would ostensibly have to shift this up back to 3.4, where it was in March, where the markets would say, okay, well, the Fed isn't saying that they're going to do just 25 basis points. They're not saying they're going to do 75, but there's another update of this in December. At least they see what we're talking about. They're moving in our direction. That's a level of validation that the market will probably want to get. If that isn't the case, if the Fed sticks with we're only doing a quarter basis point or a quarter percentage point rather next year because we're concerned about the stickiness of inflation and et cetera, well, then there is a meaningful disconnect here. And it's a disconnect that matters if we look at the way that the risk sentiment story has lined up with the Fed story. As we've discussed here before, but we'll review in short order here, since early February out to the lows in April, stocks and the Fed outlook were moving in tandem. Stocks were falling. The outlook was getting more dovish. Why? Because there was a growth scare. Markets were saying, oh no, business and consumer confidence are falling off a cliff as these tariffs are getting rolled out. That's bad news. We are going to see more rate cuts, and they're all going to come to counteract whatever emergency these tariffs are going to create. Then in April, there is a bottom as the White House backs off and says, okay, 90-day pause, hold on, this is crazy, let's back up. And there is a kind of moderating. And so we see here that from these bottoms in early April, here for stocks, here for Fed policy, we start to recover. But for stocks, obviously this keeps going and is still going at this point. For Fed policy, the growth scare ends right here, right around mid-May. Notice where that is for stocks. Right there. the same spot where the markets initially started the sell-off with a break of the range from the beginning of the year. What then does the rest of this rally mean? Well, you can see that up to this point, since the beginning of the year, stocks and the Fed outlook moved together. At this point in mid-May, things diverge. And they diverge because the market is baking more and more easing into 2026. Notice the outlook for 2025 basically has a range. Here's the range bottom here. We're at the range bottom. Here's the range top right there. But it's basically a range. And the midline of the range here is right around this 50 basis point level. That's somewhere in here. And what we find is, of course, that is exactly what the Fed was forecasting. From 4.4 down to 3.9, that's 50 basis points. So, as of mid-May, the market anchored where the Fed told them to anchor. But then for 2026, we have all this dovishness. And ostensibly, it is this promise of cheap money next year that gets stocks into this relentless march higher, whereby apparently nothing matters. And if the money is going to get so cheap, well, then ostensibly that makes sense. You can make whatever mistake you like in the markets, lose some money, borrow it back cheaper, go again. And so, if there is something in this summary of economic projections that the markets smell isn't validating of this, if the Fed is going to remain somewhere here, and if they are not going to validate all of what this is now, well, then the basis for the stocks rally is perhaps getting taken away, in which case there's probably a sell-off. And that's the risk for this week's policy announcement. Now, the dollar may have sniffed this out already. Interestingly, even though the outlook has been getting more dovish, notice the dollar hasn't made a new low since early July here. Now, it's back into that low, give or take, but it does appear to be trying to bottom here, even as the outlook gets more dovish. And so perhaps we are, in fact, at a turning point, both for stocks and for the dollar. Outside of the Fed policy announcement, over the next 24 hours, we're going to get U.S. retail sales data. The expectations here that we're going to get a decline in the pace of receipts growth, 0.3% expected. That's down from 0.5% in the prior month. Of course, we just saw that consumer confidence has been inching lower. So maybe we have the recipe for the retail sales to weaken. And indeed, the first 6 months of the year already gave us the weakest consumption, looking at the GDP data, since the first 6 months of the COVID lockdown 5 years ago in 2020. So this is already soggy. We'll see what ultimately happens here and whether this data means anything with the Fed due the following day. We're also going to get a monetary policy announcement from the Bank of Canada. The expectations here is that after some period of pause, which we can clearly see right here, we're going to get a rate cut from 2.75 down to 2.5. That would be back at this stage here to the lowest that we'd seen going all the way back a few years here. The last time that Canadian rates were at 2.5 was in August of 2022, sort of midway through their rate hike cycle. So we've just about erased half of it at this point. The move is, of course, widely expected, and so it's unclear what it means necessarily as far as price action, especially since it is coming the same day as the Fed. So this seems unlikely to have a gravitational pull of its own. So we'll see what this does, but the Fed will probably subsume all of what's going on in the markets that day. We are also going to get a monetary policy announcement from the Bank of England. That one is coming on the day after the Fed, so maybe we'll get a little bit more action here. The expectation is we're going to hold rates at 4% unchanged. However, the markets are going to be very interested in the voting tally. The way the Bank of England works is one policymaker, one vote. There's 9 of them that vote. The expectation is a 7 to 9 vote to hold things unchanged and a 2 to 9 vote for a cut. That's much more conviction than we saw in the prior month, where unexpectedly the voting tally was down to a single vote margin. 5 out of 9 voted for a cut. 4 out of 9 voted to hold because inflation in the UK is heading higher. And indeed, if we look at the data on the calendar here ahead of this BOE policy announcement, we are going to, on Fed Day, so take this with a grain of salt, but we are going to get UK inflation data. It is expected to hold unchanged this go around at 3.8% year on year, which is the highest reading since January of 2024. So ostensibly there's a lively debate going on at the Bank of England. The British pound has been relatively strong here at the start of the week, ostensibly in anticipation of this. The dovish Fed and maybe a Bank of England that's a little bit more convinced that it's done cutting. We'll see how that goes. And then, of course, rounding out the week, a monetary policy announcement from the Bank of Japan. They also are going to have inflation data coming out ahead of their policy announcement. The expectation for this one is we're going to remain unchanged at 0.5%. Bank of Japan has been the only central bank in hawkish mode, but also the level of rates here is obviously a pittance relative to everywhere else. Inflation in Japan continues to decline, 3.1% in July, and the expectation is that we're going to continue to go down to 2.8% on this incoming decision year on year. That's the lowest reading, or would be the lowest reading since November of 2024. So perhaps not a case for the BOJ to continue to hike rates, and so perhaps this decision not a controversial one. So the Fed's still the name of the game here. Positioning wise, just a quick update. I'm sort of straddling the fence here. Obviously, stocks broke out last week, so no point to holding those put verticals, so those got taken off with small losses. I'm straddling the fence in the sense that I am both long the dollar and long metals, so I'm in a sense kind of hedged ahead of this Fed meeting to some extent. Long gold, long silver. In the case of gold, by selling puts. Obviously, this position has been on for quite a while, and just as of Friday, long silver, just a call vertical there, and long the dollar, looking for that bottoming to continue, and doing it through the euro, short 2 micro euro futures there, essentially looking for that bottoming that we just talked about to survive the Fed policy announcement. So we'll see how things go, and if these markets give us an opportunity to enter something else ahead of the announcement. But that is macro money for today. We are here as ever Monday through Thursday, right after Overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise writing for the news and insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
All right, we're back. Taste of Crypto Show. I'm Dan Cecilia, and with me today, we've got Cole Kennelly, founder of Volmex and creator of the first tradable Bitcoin volatility indices, BVIV. Cole's a regular on the show and always brings us really unique insights about crypto volatility. Cole, welcome to the show.
Hey, Dan. Thanks for having me. Excited to be here.
Yeah. Thanks for joining us. Love having you on. Love chatting BVIV and the volatility indices. So let's just hop right into it. What's the current state of the crypto implied vol market? I know the BVIV index was recently mentioned in a CoinDesk article about sort of Bitcoin's boring price action, as they phrased it. But what do you think, this volatility environment means for Bitcoin?
Yeah, so crypto, it's an exciting time in crypto. Today, BVIV, so Bitcoin is at about 1,115. ETH is about 4,500, and the BVIV and EVIV indices respectively are about 30, 37, and 65. And so, sort of subdued volatility, implied vol for Bitcoin and Ethereum. These are kind of like local lows. I think that there's some reasons for that. The market's been sort of range bound. Some of the digital asset treasury companies have desks that have been selling options and suppressing vol, and so it's an interesting backdrop. You've had a lot of these Bitmine inversions. Obviously MicroStrategy, MetaPlanet, continuing to buy Bitcoin and perhaps run different yield things in recent weeks. So interesting backdrop. It's September 15th now. Seasonality, summer seasonality is kind of ending in crypto. So we'll see what the rest of the year holds. Should be a big last 3 months of the year.
Yeah, for sure. It's definitely an interesting environment. It's definitely a really fun time if you're deep in the trenches and paying attention to the crypto markets, even, with the historically low volatility, price action on the majors. There's a ton going on outside of that, especially like on chain in the perps markets. But one thing you mentioned was the digital asset treasuries, the crypto treasury companies, how they're suppressing volatility. We've actually had a few other crypto options traders on the show and analysts on the show, and they specifically mentioned Saylor's MicroStrategy, that ATM sort of vehicle is actually dampening and suppressing volatility because there's no yield component to it, there's no staking component to Bitcoin. So the way they're creating these structures, they're basically buying Bitcoin and suppressing volatility. So just interesting to note that we're seeing that show up in the BVIV, the volatility index. So the CoinDesk article that I'm referring to, though, it mentioned that the index is close to reaching historic lows not seen since 2023. It's, right now we're looking at 36, 37 on the BVIV. That's indicating what, a 37% annualized vol, which is close to historic lows. Do you think we go lower, or do you think we're due for a spike?
So, really interesting times. I think that, so Volmex is, sort of agnostic. We, are an index creator and, we don't trade or take views, but my personal view is that, we're sort of at that point where vol can't really go too much lower. And, whether we see sort of a breakout in Bitcoin and Bitcoin goes to, say, 130, 150, we could see some positive spot vol correlation, or perhaps there's a move to the downside in Bitcoin and Ethereum. Although personally, I'm more bullish than that, but we'd also see probably a little bit of a move up in vol. So vol is definitely low right now. And, I think that, 36, 35, 30 handle for BVIV is largely, a pretty low vol. So it's a pretty exciting backdrop for everything.
Yeah, for sure. And I definitely think that, we have a couple events coming up on the calendar here. I know the 17th, I think, is it FOMC or the interest rate, the Fed meeting is September 17th. And then October stands out as a significant date for Bitcoin implied vol. Are you tracking those catalysts? Is that something you guys, you think that could be like an indication for movement?
Yeah, I think FOMC is definitely, there's a big options expiry coming up as well. FOMC, if rates remain unchanged, might not have a big impact, but if there's, a decrease in rates, and some sentiment and guidance regarding that, we could see sort of a move in vol, and perhaps the market rallies on that rate decrease, and BVIV perhaps sees a move as well. October, I mean, I think generally, summer's over now. It's September 15th, as mentioned. I think that we could see, some just positive price action going into the end of the year. 150 seems like a nice round number for Bitcoin, and who knows what the future holds for ETH and some of these other assets like Sol. But we definitely could see some large, moves up in Bitcoin. There's a lot of buyers between DATs, and, just the fundamentals are very strong. And so I think that it should be an exciting rest of the year. And if we see a rate cut or several rate cuts, I haven't checked the Fed now from CME in a little while, but it would be interesting to see, how the market evolves.
For sure, yeah, and I guess I want to shift over a little bit and talk about some of the research you guys published around crypto ETF options positioning, specifically on IBIT and ETH. You guys put this out on your Twitter account. It was sort of, I think, a summary of some of the research that you guys do over there. But you mentioned that ETF positioning on IBIT and ETH, there's massive open interest growth, which is signaling bullish, as you said. Is there any, what do you think traders are positioning for? That is it that run up into the end of the year, you think?
It's really interesting. So ETH and IBIT have seen massive growth in the options market in the last year or so, since they've been live for maybe 9 months. This just sort of signals a shift in market structure where, traders increasingly prefer to trade on, regulated venues that are, U.S. domiciled and backed by, a clearinghouse, and have, perhaps just a lot of growing liquidity. Things like IBIT and ETH are growing a lot. We're seeing that now IBIT is about 70% of Deribit's open interest. There's a couple of different, positioning notes, but I mean, that's one of the big takeaways, is just that things are moving more and more towards the IBIT ETF options, which are highly liquid and, strong counterparty regulated. Deribit obviously is a great firm and now part of Coinbase and has done awesome work over the years, but I think as more and more institutions and sophisticated investors and traders get involved in the, crypto asset space, these IBIT and ETH option structures will continue to grow. And so really interesting growth, 70% feels pretty unprecedented of Deribit's open interest is quite unprecedented. That's, I believe, the highest that open interest level has been, since 9 months ago when these options started trading. And so super interesting times, and interesting to see the growth in the, U.S. crypto capital markets.
Yeah, for sure. And I think, specifically over here at Tasty, we are seeing the IBIT and the ETH is a very popular option trading product. Obviously, it's one of the ways that retail traders can get exposure to derivatives in the asset class. So it's definitely a very popular product. It was a successful launch, to your point. The fact that it's reaching 70% of open interest compared to Deribit, which is the major spot, option market for sophisticated traders. I think it signals, just an amazing successful launch, and people are interested in this asset class, especially, you know, retail traders. You know, something else that I found interesting in that research note you put out was that you noted that onshore U.S. traders are buying more calls in Bitcoin versus offshore. There was a big difference or big gap between behavior between onshore U.S. traders and then offshore, in that the onshore traders, you know, with the positioning is much more bullish. Do you think, why do you think that is? Do you think it's due to different types of traders, or why do you think that is?
Yeah, great question. I think that, you know, Deribit's obviously a super strong counterparty. It's now owned by Coinbase, which is a, you know, public company and has very transparent financials. But I think that traditionally, you know, some of these more wingy options that are, you know, would pay out more if the market moves a lot in either direction. You've seen sort of a preference from, you know, traders to trade those on venues that are, you know, the strongest counterparties. Perhaps, you know, CME is a little bit less liquid than these IBIT options, are definitely much less liquid. But something like, you know, a futures, an options offering on CME, or, you know, IBIT, you know, options as well. And so I think that, you know, some of these more wingy options that have a higher, you know, payout if the market makes a substantial move, you know, it bodes well with the sort of highly regulated clearinghouse-backed markets like IBIT or some of the other regulated venues have. And so, yeah, I think that could be part of it. Perhaps, you know, the U.S. traders also just prefer those structures for various reasons, but I think that, you know, as mentioned, with the counterparty strength, has a big piece to do with it.
Yeah, it's an interesting note, because I think it's the options market, specifically in crypto, is a much newer, I guess, tradable product onshore here in the States. So it's kind of interesting to me that people onshore, traders onshore, you know, retailers, speculators, whoever they might be, they're scooping up calls, they're positioning themselves for that, you know, kind of like, you know, big bullish move to 150. And, you know, you look at offshore and you think, at least I thought, you know, maybe they're a little bit more institutional, or they're hedge funds that are a little bit more sophisticated, and they're, like you said, they're maybe structuring it as a hedge, or they're kind of, you know, doing different spreads that might signal a different, you know, market position. So I think in any case, it shows the demand for crypto options in the States. And to your point, Deribit, that was acquired by Coinbase, it seems like we'll get, you know, it'll be a pretty big popular product once they launch spot crypto options, you know, in the coming years, months, whatever it might be. So I just thought that was an interesting thing, point from your research note. Another thing that I want to touch base on was the put call ratio, because you noted that there's a wide divergence between Deribit positioning in that put call and IBIT positions, right? The ETF, Bitcoin ETF. So Deribit, you said, had about a 65% put call ratio, and IBIT only 49. Do you think it's kind of the same reasoning that we talked about before, or is it just that two total, you know, I wonder what you think about that. Is it different traders that are doing different things, or because that to me, that put call ratio difference is something to note.
So it's interesting. I was just thinking as well about the fact that perpetual futures are more ubiquitous in the offshore market, and perhaps, you know, a lot of crypto degens might be trading, you know, a 20x perp, which is effectively sort of a similar, you know, payout to an option. If you're wrong, you're going to get liquidated or lose your premium. If you're correct, you're going to, you know, increase, you know, sort of exponentially in terms of, you know, payout. And so I think that perhaps the availability of perpetual futures in the offshore market, as well as, you know, counterparty strength and wanting to trade sort of more wingy options on, you know, U.S. regulated venues that have transparent balance sheets and the backing of clearinghouses, could be the reason for this, you know, delta in the put call ratio. And so next time we publish one of those research updates, KG and I can come back on the show and can talk even more about it. So yeah, those are great. Got really good pickup last time.
Yeah,
So,
yeah, for sure. I think it's interesting you mentioned the perps market, because I wasn't even really thinking. I mean, I wasn't really thinking about that. But to your point, like that type of trader who might be participating in perps, they might be using the offshore trader that's trading perps. They might be using the options to hedge, right? Or that their positioning would be different than sort of a retail onshore trader that's just like, I think Bitcoin's going to 150K. Let me just buy a bunch of calls on IBIT, right? Like, I think it's a totally different mindset and trader behavior that, so I do think there's something there, and maybe there is a trade or something that we can have KG and some of the guys on your research team talk about, or just dig into a little bit more. But I do want to shift a little bit to ETH, because I think ETH has been particularly bullish since the last time we talked, where we've had that run up in July, August. We're still trading at about 40, 45. The EVIV's at about 65. So are you paying attention to anything in ETH, or even further out, like Solana? Is there anything that you guys are looking at over at VolMX that maybe these like altcoins or coins other than Bitcoin, just kind of paying attention to there?
Yeah. So ETH, over the last couple of months has seen, the inception of several treasury companies, including SharpLink Gaming and Bitmine Inversions. Bitmine Inversions has, I think, accumulated about $10 billion of ETH now, which moved the price from 1,700 or so to 4,500. I guess where it's down to, it's 4,500 or so today. And so I think the velocity of these digital asset treasury companies, DATs as they say, has had a big impact on the ETH market. Clearly, I saw a tweet a little while ago about how ETH DApps had acquired more faster and a larger percent of the market cap or the circulating, more than Sailor ever did. And this had a very visible impact on the price, right? Where ETH went from, 2,000 to 4,500. This is a massive move for what is today like a $500 billion market cap asset. You're sort of seeing a similar precedent around some of the Sol DATs, not precedent, but just like similar evolution of like large DATs coming into the market, specifically this DAT that was launched over the last couple of days by Kyle at Multicoin, Jump, and Galaxy, called Forward, or Ford is the ticker.
Ford Industries, yeah.
So they had bought, basically, raised $1.6 billion and, deployed it into Sol over the last couple of days. Actually, over the weekend, there was some, on-chain activity I saw on Twitter with Galaxy facilitating some of those sales or purchases. And so, I think, SVIV is something to track. The 14-day SVIV index is at 71 right now, which seems a little bit low compared to where it's been over the last couple of weeks. So it will be interesting to see how these Solana DATs and ETH DATs evolve. There's obviously a native staking rate with something like Sol, something like ETH, as opposed to Bitcoin, where the yield primarily comes from selling options. And so perhaps, these ETH DATs and Sol DATs employ more DeFi strategies. I believe that's what the Ford company has talked about, is, deploying, borrowing at like a 4 or 5% from like stratified banks and, different sort of lenders, and deploying in DeFi and, at like a, 12 to 20% rate, which is sort of like a carry trade or an arbitrage on TradFi to DeFi. And so it will be interesting to see what some of these emerging DATs do. I think Sailor has less options available for generating yield and creating yield for investors in MicroStrategy, whereas if you have the ability to use DeFi, you have a lot more options at your fingertips. And so definitely interesting what's happening with Sol. Sol's at 235 today. And then of course, Hyperliquid has been, the talk of the town for the last number of months. Hyperliquid is at a $53 billion, FDV right now, just defying gravity, and super interesting to see the growth of, the Hype token, the Hyper EVM, and some of the things happening with Hyperliquid. There's been some DATs in Hyperliquid land as well, I guess, to that point, like Hyperion DeFi, and but yeah, I mean, there's a lot of stuff happening across, just broadly development in that ecosystem, as well as, Sol and ETH as well. So yeah, I mean, on my watch list, I of course have BVIV, EVIV, SVIV, but looking at Bitcoin, Ethereum, Sol, Hype, obviously the VIX, and some of the other Volmex indices. So yeah, great question, Dan.
Yeah. So I think those are all great points, and obviously I've been following Hype. I think it's been a crazy trade. It really is one of the most successful protocols that has launched. Obviously the most successful on-chain perps protocol, and you mentioned that with this DAT trade or this DAT trend in tokens other than Bitcoin, most of these tokens have a staking and a yield component to it, right? So there's a lot more. There's a lot more that these companies can do, right? There's more, like they can generate yield easier. They can create different flavors or different payoffs by tapping into DeFi and holding spot on the balance sheet, but tapping into DeFi with the funds traded and creating some type of yield for users, or for holders rather. I think, the one thing that is interesting to me at least is how quickly this trend went from like Saylor, Bitcoin to Tom Lee, and now it's completely shifted out to like we're getting into Hype. I saw a Doge one, obviously Solana, and I think Solana is a good trade. I think the backers of that Ford Technologies seem pretty. I mean, they're pretty heavy hitters, so definitely paying attention to that and seeing where Solana price goes. But Hype is one where I think over the weekend or over the last couple of weeks we've been following this stablecoin thing, USDH. I don't know if you paid attention to that at all, but it's definitely a trade where I think we got more room to run, and the fact that somebody's launching a DAT or somebody's sponsoring a DAT for Hype, I don't know. To me, it's exciting, but it might signal, maybe altcoin season is here. So definitely paying attention to that.
Yeah, I mean, it goes out farther on the the tail than just Hype. You have things like Sui and BitTensor, and Athena had a pretty successful offering. Yeah, I mean, I think that there's definitely obviously like a DAT mania, but these structures allow for public market equity investors in the U.S. to access crypto assets, and also for the the firms and the managers that are running these to have more flexibility over the way they utilize these assets, right? I believe with like so none of the ETH or the Sol, there's like a Sol futures ETF as well. These obviously don't have the ability to stake, and when they do, it probably won't be at full capacity. And so having the ability to invest in a DAT that's able to stake, able to use DeFi, is a lot different than an ETF. And for something like Athena, which is a legitimate project with 10, 15 billion FTV, they're not going to get an ETF tomorrow realistically. Could make sense to tap into the capital markets in the US and globally via sort of a digital asset treasury company. And so in some cases it makes sense. In some cases, I'm sure a bunch of these will unwind and not work out. But I think it's net positive for the space, and it brings in awareness. And it's interesting, to see like, Saylor started buying Bitcoin in 2020. There was a couple other players, smaller players. There was like Semler Scientific, And then Metaplanet was the next one, but it didn't catch on. It's mid 2025 now, and Dat Mania is kind of rocking, which obviously looks like a bubble, but it's not. There's a lot of there's like positive facet to a bubble. But yeah, it took a while for the Dat thing to fully ramp up. I mean, Sailor was probably trying to convince people for a long time, but wasn't really going anywhere. So interesting times, and we'll probably see before our next chat. Not sure when that is, but we will maybe see a couple implosions, or we'll have to see what happens with this, Forward Industries or, Tom Lee. It seems like the velocity of, Bitmine, for example, has sort of cooled down a little bit, or SharpLink. I mean, I think Tom Lee was getting a little bit of blowback. I have a lot of respect for him, and he's wildly successful, but, his dad had bought like WorldCoin tokens or something, or participated in like a WorldCoin DAT, and people got kind of annoyed and said, hey, like, is this an ETH DAT or what is this? And so I think there's a lot of open questions about these, how they play out, but there will be a couple of winners. And MicroStrategy just has so much Bitcoin, right? They have like 3% of the entire supply, which is like really wild. So I think that we'll have to see what happens, but there should be a couple big winners across, or maybe at least one across Bitcoin with strategy, but ETH and Sol, and hard to say what happens outside of those. It's not clear that I don't think every asset, of course, needs a DAT. So time will tell.
Yeah, exactly. I think to your point, I generally view this DAT trend as a positive development, right, for access to these other assets, to give investors access to the other assets through traditional equities. But to your point, there's probably a downside, right, because the further out on the risk curve we get, and the more behind the scenes yield games they play, maybe there is an unwind there, or maybe at some point it's not sustainable. We'll be monitoring that, and I'm sure we'll see BVIV move, and we'll see some of the indices move on these once that happens. But generally, I think it's positive. I think it's a fun trend to watch. It's a fun trade to be in if you're a trader. So I actually built a watch list of all. I've been just compiling all of these DATs that get announced. I think it's interesting that like Sui and like WorldCoin and BitTensor, is coming out with some. So I think that's like an indication to me that, hey, maybe we need to take a pause and take a step back and just kind of see what happens. But yeah, I think it's all generally positive. I think it signals interesting times for the space, and we'll be monitoring it as we go forward. Cole, we got a couple minutes left. I just want to give you a chance to sort of talk about some of the some of the VolMX indices, what you guys have been doing lately, and just where people can find you if they want to follow more.
Yeah, so we have some big plans. We're going to be getting more involved in the Hyperliquid ecosystem. We are really excited about HIP3, which will allow for non-standard markets, meaning like not just another coin or token to be listed on Hypercore. And so we have some plans on that front. We have a number of other milestones coming up. We're excited to list on more exchanges. Recently, actually, we launched a collaboration with Bybit, where the BVIV is now the only is currently the only implied vol index available on Bybit, and you can use it to gauge some of their earned products, which involve options. And so we launched some cool collaborations recently. We have now BVIV and eVIV are available on TradingView, CoinMarketCap, Bybit's analytics section, and the Earn. And we have 4 futures across 2 markets. We have a Bitfinex future for BVIV and eVIV, and a G-Trade future for BVIV and eVIV. And so super excited to bring BVIV and eVIV to Hyperliquid via HIP3. That's one of the most important and exciting things on our roadmap. We'll be rolling out other partnerships as well. I mean, ultimately, BVIV is this sort of modular, index, which can be, brought into any sort of wrapper. And so, you should see futures, options, prediction markets, all the above, make BVIV tradable. So yeah, follow us on Twitter, VOLMEX Finance, VolMX Finance. Check out our website, volmex.finance. add BVIV to your watch list on TradingView, you know, search for Volmax or Bitcoin implied. You can track it in the CoinMarketCap mobile app or web app. And so, yeah, I mean, we have some really cool stuff coming up for the rest of the year. So stay tuned, and, you know, great to be here. And yeah, I guess in terms of the trades, I mean, you know, vol is quite low right now, so could be an interesting time to express a view on that. But maybe we talk more about that on the next show, or we'll be talking about that on Twitter as well.
Yeah, for sure. And I definitely want to chat more through that, because I think it is an interesting time for Bitcoin vol and vol in the space in general. But we only got a minute left here. I appreciate you coming on, Cole. Any of our viewers, if you guys want to trade volatility, if you can, check them out on Gains Network, Bitfinex. This is basically crypto's version of the VIX. It's tradable. It's it's liquid. It's getting listed on other venues. You can track volatility this way. It's a very useful. Volmix indices are very useful for tracking what's going on in the crypto markets. So if anyone wants to check them out, feel free to hit up Cole, or you can message me and I can get you some information. But Cole, thanks for coming on, man. We'll chat soon. And as always, appreciate you. And we'll see you next time. Peace.
Thanks, Dan. Talk soon.
Yep.
Cheers.